हेलो एवरीवन, गुड मॉर्निंग टू ऑल ऑफ यू। वेलकम वंस अगेन टू दिस लाइव एनालिसिस। स्टार्ट करते हैं आज का इस सेशन। फिलहाल अभी देखोगे क्रूड ऑयल और नेचुरल गैस में। तो क्रूड ऑयल नेचुरल गैस कल की लेवल है, कुछ खास चेंज अभी भी हुआ नहीं है।
Federal prosecutors have charged Miami Heat guard Terry Rozier and Portland Trailblazers head coach Chauncey Billups in two separate criminal cases that expose how insider betting and organized crime have penetrated professional basketball. Rozier is accused of telling a friend in 2023 that he planned to pull himself from a game early with a minor injury. That friend wagered more than $200,000 that Rozier
ओके, तो क्रूड ऑयल को देखोगे कल अच्छा खासा ट्रेड था। एक सेलिंग आई थी, उसके बाद उसी रेंज के अंदर घूमता रह गया, बाइंग सेलिंग में नीचे भी ब्रेक नहीं कर पाया। नेचुरल गैस में देखोगे छोटा सा बाइंग का ट्रेड था, फिर मैंने बताया था ऊपर से एक सेलिंग का ट्रेड है, वहाँ से सेलिंग आएगी। थोड़ा बहुत क्लोजिंग होते होते सेलिंग आई थी, हल्का सा गैप डाउन हुआ है, तो उसका भी टारगेट अब मिल गया है यहाँ पर हमें। एंड अच्छा लेवल है, लेट्स सी फिर से नीचे आता है तो यहाँ पर एक बाइंग का ट्रेड प्लान करेंगे नेचुरल गैस में इन 15 मिनट टाइम फ्रेम। तो जो बाइंग जोन ओवर हियर, एक छोटा सा बाइंग जोन है, तो वी कैन एक्सपेक्ट बाइंग इन नेचुरल गैस फ्रॉम दिस पर्टिकुलर एरिया। ठीक है, बाकी कोई और डेटा वगैरह आता है तो देखते हैं आज। बाकी मेजर डेटा है 12:30 अभी लंदन सेशन ओपन हो जाएगा, देन 5:30 न्यूयॉर्क सेशन, 7 पी.एम. यूएस मार्केट ओपन और 6 पी.एम. पर यूएस का इन्फ्लेशन का डेटा है, बहुत इंपॉर्टेंट डेटा है। 7:15 पर मैन्युफैक्चरिंग पीएमआई और सर्विस पीएमआई का डेटा भी है, तो उसका भी ध्यान रखना। दैट इज ऑल्सो इम्पॉर्टेंट, मोस्ट इम्पॉर्टेंट यूएस इन्फ्लेशन का डेटा। बाकी ज़्यादा रिस्क मत लेना ओवरऑल। लास्ट ट्रेडिंग सेशन है, फिर मंडे को ही मार्केट ओपन होगा सीधा। एक बार देख लेते हैं नेचुरल गैस में, यहाँ पर बाइंग का प्लान करेंगे। ठीक है, यहाँ पर बाकी निफ्टी बैंक तो साइडवेज ही हो गया फ्यूचर। मॉर्निंग पे ओपन हुआ था, फर्स्ट 15 मिनट की कैंडल के अंदर ही प्राइस मूव कर रहा है। निफ्टी 50 में फर्स्ट 15 मिनट की कैंडल के अंदर ही है प्राइस अभी भी। थोड़ा सा ऊपर आता तो एक सेलिंग वापस कर देते, बट अब वो ऊपर आएगा नहीं आएगा वी डोंट नो, 26,000 के आसपास। नीचे आता है तो फिर हमें आराम से 25,000 850 से 870 के बीच में प्राइस रुकता हुआ देखने के लिए मिल सकता है। वहां पर एक छोटा सा सपोर्ट है 15 मिनट टाइम फ्रेम पे। निफ्टी फ्यूचर में तो सेलिंग है, ऊपर आएगा तो वापस सेलिंग वापस कर सकते हैं। ठीक है, एक बार लेवल अपडेट कर देता हूँ फिर से। गुड मॉर्निंग। गोल्ड और सिल्वर पे देख लेते हैं, गोल्ड और सिल्वर पे भी देख लेते हैं। एक बार पहले नेचुरल गैस और क्रूड ऑयल देख लेते हैं, फिर गोल्ड और सिल्वर भी देख लेते हैं 1 आवर टाइम फ्रेम पे। एक भी करते रहो गाइस। ठीक है, एक बार जस्ट बाकी और कोई न्यूज़ तो नहीं है, कोई अगर सडनली न्यूज़ आती है तो वी विल सी दैट। ठीक है, यहाँ से एक बाइंग का ट्रेड प्लान है नेचुरल गैस में। यहाँ पर दो दो सपोर्ट एक साथ ही हैं, दोनों को मैं साथ ही लगा देता हूँ, फिर बात करना। एक काम करते हैं, दोनों को मिक्स ही कर देते हैं लेवल को। ठीक है, ये दो सपोर्ट है यहाँ पर, दोनों को मैंने कंबाइन कर दिया है। अलग अलग लगाऊंगा तो फिर वो थोड़ा सा अजीब सा लगेगा, तो दोनों को कंबाइन कर दे रहे हैं, दोनों ही सपोर्ट हैं। नीचे वाले लेवल से एक बार सपोर्ट ले लिया, ऊपर वाले से अभी तक आया नहीं है सपोर्ट लेने। ठीक है, बाकी ये पूरा ही सपोर्ट जोन है, ध्यान रखना। होल एरिया इज अ सपोर्ट एरिया। पूरे एरिया में से कहीं से भी बाइंग आ सकती है। मोस्ट प्रेफर लेवल रहेगा आपका 283 और 279। बाकी ऊपर रेजिस्टेंस की बात करें तो प्राइस में अगर देखोगे, कल का जो रेजिस्टेंस था वही अभी फिलहाल के लिए रेजिस्टेंस है, उसके अलावा तो और कुछ रेजिस्टेंस, नया रेजिस्टेंस है नहीं वहाँ पर। ठीक है, जहाँ कल सेलिंग आई थी नेचुरल गैस में हाई का एरिया, वही आपका रेजिस्टेंस है राइट नाउ। कोई और रेजिस्टेंस बनेगा तो वी विल सी दैट। क्रूड को देखोगे वो भी रेंज के अंदर ही है अभी भी। ठीक है, थोड़ा वॉल्यूम से मुझे लग रहा है कम है अभी नेचुरल गैस में, अदरवाइज मोमेंटम तो हो जाता है अदरवाइज इतने में। बाकी क्रूड में भी देखोगे वॉल्यूम यहाँ पर भी कमी है क्रूड में। ये कल वाला रेजिस्टेंस अभी भी रेजिस्टेंस ही है फिलहाल के लिए देखें तो, जब तक कोई नया रेजिस्टेंस नहीं बन जाता तब तक ये रेजिस्टेंस ही माना जाएगा। नया रेजिस्टेंस कोई बीच में बन जाएगा तो बात अलग है। क्रिएट करता है तो फिर थोड़ी प्रॉब्लम आ जाएगी, बिकॉज फिर प्राइस किस तरह से मूव कर रहा है दैट विल बी वेरी इंपॉर्टेंट। तो ये कुछ लेवल हैं फिलहाल के लिए नेचुरल गैस में। और गाइस लाइक भी करते रहो, डोंट फॉरगेट टू लाइक द स्ट्रीम। कोई क्वेश्चन हो तो कमेंट बॉक्स में पूछ लेना। गोल्ड और सिल्वर में पूछ रहे थे। गोल्ड और सिल्वर में देखो 1 आवर टाइम फ्रेम की अगर बात करें, एम सी एक्स में फॉरेक्स में देख रहा हूँ, ठीक है। आई एम सीइंग इन फॉरेक्स। फॉरेक्स में ही बता रहा हूँ मैं, गोल्ड और सिल्वर का 1 आवर टाइम फ्रेम पे देखोगे। बाय द वे आज सब बहुत ज़्यादा इंपॉर्टेंट डेटा है, उसका ध्यान रखना। यूएस का इन्फ्लेशन का डेटा है, सीपीआई का डेटा, तो विच इज़ वेरी इंपॉर्टेंट। So watch for this level as this data as well because it will heavily impact gold and silver। एक काफ़ी ज़्यादा इंपॉर्टेंट डेटा है आज के लिए, गोल्ड सिल्वर क्रूड ऑयल के लिए भी आप कह सकते हो। साथ ही सर्विस पीएमआई और मैन्युफैक्चरिंग पीएमआई का डेटा है, दैट विल आल्सो इम्पैक्ट द प्राइस। तो गोल्ड में अभी देखोगे 1 आवर टाइम फ्रेम पे, कल तो मार्केट रेंज के अंदर ही था। आज अगर फॉरेक्स में देखोगे, मॉर्निंग पे मार्केट जब ओपन हुआ, ओपन होने के बाद कंटिन्यूसली एक रेंज के अंदर ही बना हुआ है। एक बार लेवल देख लेते हैं। मुझे लग रहा है शायद सीपीआई के डेटा का ही वेट कर रहा है, क्योंकि पिछले 2-3 दिनों से तो एक सेल ऑफ के बाद साइडवेज जैसा चला गया है। डायरेक्शन ही नहीं मिल रही है लग रहा है। लेट्स सी, एक सेकेंड। कल मैंने आपको एक लेवल बताया था, याद होगा, वो 15 मिनट टाइम फ्रेम पे रीटेस्ट वाला। मार्केट ने वहां से फिर से रीटेस्ट किया। एक बार पहले कर चुका था, दूसरी बार फिर से किया, फिर से उसी लेवल से सेलिंग आ गई थी। अब आएगा तो तीसरी बार आएगा वहां पर। तो एक बार देख लेते हैं इसमें कोई नया रेजिस्टेंस बना है क्या। इफ देयर इज एनी न्यू रेजिस्टेंस, वी नीड टू रिलाई ऑन या देयर इज अ रेजिस्टेंस ओवर हियर। ये ऊपर एक रेजिस्टेंस है तो सही, अभी आना पेंडिंग है, यहाँ पर आया नहीं अभी तक। हाँ, व्हाट हैपन, ये क्या हो रहा है। लेट्स सी द सपोर्ट एज वेल। ठीक है, सिल्वर में देख रहे हैं, पहले एक बार गोल्ड का देख ले रहा हूँ मैं, एक बार सपोर्ट नया कोई बनाया है तो। नहीं ये भी नहीं है, नहीं नहीं ये भी नहीं है। यहाँ पर रेजिस्टेंस भी है ना। देखो अभी फिलहाल के लिए 1 आवर टाइम फ्रेम पे दीज आर द लेवल्स इन गोल्ड जो मुझे दिख रहे हैं। ऊपर एक सपोर्ट आप कंसिडर करना इस लेवल के आसपास। ऑल टाइम हाई तो बहुत दूर है। वो रिटेस्ट वाला जोन तो दो दो बार रिटेस्ट कर चुका है, उसको दोबारा कंसिडर मत करना, वो 15 मिनट में था। 1 आवर टाइम फ्रेम पे ऊपर आपके पास 4250 से 4270 अपर लेवल को थोड़ा ज़्यादा कंसिडर करना, ये मेजर रेजिस्टेंस है। अब ये मत सोचना कि बिल्कुल यहीं पर टिप करके नीचे आ जाएगा, हो सकता है हिट करके नीचे आए, हो सकता है थोड़ा ऊपर जाए और फिर नीचे आए। तो ये एक मेजर रेजिस्टेंस है 1 आवर टाइम फ्रेम पे नीचे। यहाँ पर दो चीज़ हैं, एक तो सपोर्ट है, सपोर्ट यहाँ पर 2 बार ले चुका है, 3 बार ले चुका है, बट अभी भी है सपोर्ट। तो लोअर एंड पे 3995 से 4010 के आसपास यहाँ से बाइंग का प्लान करना। यहाँ पर एक रेजिस्टेंस भी था, उसका ब्रेकआउट हुआ है तो वो भी रिटेस्ट की तरह काम कर सकता है। तो बोथ हैं, दोनों ही लेवल हैं। दिस अ सपोर्ट एरिया वी हैव राइट नाउ। अभी 1 आवर टाइम फ्रेम मुझे इतना ही दिख रहा है, इसमें और कुछ तो मुझे नज़र नहीं आ रहा। तो ये दो लेवल हैं 1 आवर टाइम फ्रेम पे फॉर वॉचिंग। सिल्वर को भी देखोगे फॉरेक्स में, पर्टिकुलर इस पर्टिकुलर लेवल पे, तो सिल्वर में भी आपका 2 दिन से साइडवेज ही है। 22 के बाद कुछ खास मूव किया नहीं सिल्वर भी। अ, एक बार देख लेते हैं इसको भी। ऑल टाइम हिट करके आया था नीचे, प्राइस टाइम हिट किया, अपने ऑल टाइम हाई से वापस नीचे की ओर ही आ रहा है। सी 1 आवर टाइम फ्रेम पे कुछ अगर रेजिस्टेंस यहाँ पर नया क्रिएट हुआ है तो
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Dan Schwartzman. President Trump and Chinese President Xi Jinping will meet next week on the sidelines of the Asia-Pacific Economic Cooperation Summit in South Korea. That's according to the White House. The meeting will be the first face-to-face for both leaders since Trump became president for his second term. Here's President Trump.
Actually, on November 1st, the tariff on China goes to 157%. Which is record-setting territory. And we don't want that because it's not sustainable for them. They can't sustain that. We don't want them to have to go through that. So I'm meeting with President Xi, and I would say we have some big issues, like with the farmers and various other things, but the first question I'm going to be asking him about is fentanyl.
The meeting comes as a trade truce between Washington and Beijing is set to expire on November 10th. President Trump escalating trade talk tensions with Canada. On a post on Truth Social, Trump said that all trade negotiations have now been terminated. Trump cited an announcement from the Ronald Reagan Foundation, which announced that, quote, Canada has fraudulently used an advertisement which is fake, featuring Ronald Reagan speaking negatively about tariffs. They continued on to say that, quote, they only did this to interfere with the decision of the U.S. Supreme Court and other courts. Ford Motor expects a profit hit of as much as $2 billion after a fire struck a key supplier of aluminum back in September for its F-150 pickup truck. The impact will reduce Ford's production by around 100,000 vehicles this year, although the company expects to largely recover that shortfall next year. Here's Jim Farley, CEO of Ford.
This is really a retiming of wholesale. What we lose this year, we'll gain most of it back next year. Maybe $1.5 billion to $2.5 billion of EBIT this year. A little bit heavier on the cash because of how auto works. But we'll be gaining at least $1 billion, if not more, of that back next year.
That's Jim Farley, CEO of Ford, speaking to Bloomberg. Intel gave an upbeat revenue forecast after personal computer demand grew, boosting optimism about a comeback attempt by the embattled chipmaker. In a statement, Chief Financial Officer Dave Zisner said, quote, current demand is outpacing supply, a trend they expect will persist into next year. We get reaction from Angelo Zeno, equity analyst at CFRA Research.
Overall, the results were a bit better than expected in terms of Q3. I think, more importantly was that Q4 guide. And, when you strip out the fact that they are getting rid of or have, sold Altera at this point in time, you back that out and essentially is in line to relatively where we were looking and the street was looking at. So I think overall, there was maybe some fear about, tariff uncertainties as well as, potential pull in demand for PCs and what have you. But overall, the Q3 numbers look good. The Q4 numbers also look solid.
That's Angelo Zeno of CFRA Research. The United States has launched a ninth strike against an alleged boat carrying drugs in the Pacific Ocean. President Trump says he doesn't believe that the administration needs a formal declaration of war in their campaign against drug trafficking in South America, but they will brief Congress on the strikes.
I think we're just going to kill people that are bringing drugs into our country. Okay, we're going to kill them. They're going to be like dead. Okay.
Meantime, the Senate is expected to vote next week on a bipartisan resolution that would bar the United States from engaging in hostilities inside Venezuela without explicit authorization by Congress. The U.S. government shutdown is now 23 days long and counting. Lawmakers are not getting any closer to getting legislation passed that would fund the government to reopen it. Democrats are insisting that they want to open up discussions on extending tax credits that are part of the Affordable Care Act, but Republicans aren't willing to talk until the government reopens. House Minority Leader Hakeem Jeffries says President Trump's priorities are misplaced.
Throughout this shutdown, he's found more time to golf than he has to engage with Democrats on Capitol Hill. Donald Trump and his administration have found $40 billion to bail out a right-wing wannabe dictator in Argentina and can't find a dime to extend the Affordable Care Act tax credits to keep health care affordable. And on top of all of that, they are demolishing the East Wing of the White House in ways that have appropriately horrified the American people.
That's House Minority Leader Hakeem Jeffries speaking with Bloomberg's David Gura in Washington. Catch the full conversation on an upcoming episode of the Big Take podcast. Meantime, the Senate rejected a measure that would have paid some federal workers during the shutdown, a day before more than 1 million workers are set to miss a paycheck. The U.S. Labor Department has called furloughed employees back to work, though, to put together the Consumer Price Index report. Bloomberg TV's Mike McKee explains what September's numbers out tomorrow could show.
Social Security uses a third quarter CPI average to determine next year's cost of living increase for beneficiaries, which by law must be published this month. The data had all been collected by the time the government shut down on October 1st, so it's simply a matter of collating it and making the usual seasonal adjustments. Analysts expect we'll see no appreciable slowdown from August, with headline CPI rising 0.4% during the month and core 0.3%. That would put the annual rate of inflation at 3.1% for both, another move in the wrong direction for the Fed. Michael McKee, Bloomberg News.
And that's news when you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
There are two kinds of people in the world. People who think about climate change.
ओके देखो सिल्वर की बात करोगे फॉरेक्स में ना मैंने काफ़ी देखा मेरे को तो रेजिस्टेंस कोई शो नहीं कर रहा है सपोर्ट जरूर है फॉरेक्स में सिल्वर में देखोगे नीचे 47.40 से 47.50 ये एक सपोर्ट जोन है इसके अलावा करंट एरिया पर भी सपोर्ट बना हुआ है बट ये टेस्ट कर दिया है इसने तो थोड़ा सा ध्यान रखना 48.53 से लेकर 48.20 के बीच में दैट इज ऑल्सो सपोर्ट एरिया बट दिस इज ऑलरेडी टेस्टेड तो नीचे वाला सपोर्ट थोड़ा ज़्यादा स्ट्रॉन्ग है मेरे अकॉर्डिंग ऊपर मुझे कोई रेजिस्टेंस शो नहीं हो रहे हैं 1 आवर टाइम फ्रेम पे कोई बना ही नहीं है एग्जैक्ट रेजिस्टेंस बहुत सारे सपोर्ट थे वो ब्रेक डाउन हुए हैं बट वो रिटेस्ट की तरह काम करेंगे नहीं करेंगे 50-50 ऐसा है वहाँ पर भी तो ऊपर 49.87 और 51.30 यहाँ पर देख लेना थोड़ा बहुत रिजेक्शन ले सकता है ऊपर ऐसा कोई रेजिस्टेंस है नहीं जो प्रॉपरली बना हो कोई बनेगा तो देख लेंगे उसको लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया डोंट फॉरगेट टू लाइक द स्ट्रीम ये क्रूड ऑयल भी रेंज के बाहर निकल ही नहीं रहा है. इफ यू लुक एट द क्रूड ऑयल स्टिल होल्डिंग दैट रेंज. थोड़ा सा अपडेट कर देते हैं लेवल्स को. नीचे वो जो कल दो रेजिस्टेंस थे यहाँ पर. ऊपर वाला रेजिस्टेंस से सेलिंग जरूर आ रही, बट वो नीचे वाला रेजिस्टेंस रिटेस्ट बन गया एक्चुअली में. सो दैट एक्ट लाइक एज अ सपोर्ट नाउ. एक बार मैं अपडेट कर देता हूँ इसके लेवल भी ना. कोई न्यूज़ वगैरह आती है तो हो सकता है थोड़ा सा मोमेंटम कर दे. अब ये रेंज के अंदर काफ़ी देर से फंसा हुआ है. इतना देर तो लगाना नहीं चाहिए नॉर्मली प्राइस को. अगर कल से रुका हुआ है इस लेवल पे तो अपना मेरे अकॉर्डिंग तो प्रॉफिट बुक कर लेना, अगर अभी भी होल्ड कर रहे हो इसको. क्रूड ऑयल की बात कर रहा हूँ क्योंकि रेंज के अंदर है. नीचे सपोर्ट ब्रेक नहीं हो रहा है तो ऊपर रेजिस्टेंस भी ब्रेक नहीं हो रहा है अभी भी. स्टिल अ गुड रेजिस्टेंस एरिया. देखो सेलिंग बड़ी आनी है तो फटाफट गिर जाना चाहिए यहाँ से. प्राइस अगर रुका रहा इसी लेवल पे तो बड़ी प्रॉब्लम हो जाएगी. ब्रेकआउट के लिए जा सकता है फिर उस केस में. ठीक है, ऊपर रेजिस्टेंस अभी भी इंटैक्ट ही है. नीचे का वो रिटेस्ट जोन था, मैं उसको मैंने रिमूव कर दिया है. जरूरत नहीं है उसके, बिकॉज वहां पर अब फायदा नहीं है लोग के. बाकी थोड़ा नीचे आ जाता है तो मेरे अकॉर्डिंग अब इसमें कुछ क्या बचा तो है नहीं, रीटेस्ट ही करेगा और तो क्या ही करेगा अब यहाँ पर ये, क्योंकि नीचे का लेवल भी रीटेस्ट वाला काफ़ी बड़ा है वो, नीचे कोई सपोर्ट तो बना नहीं है तो वही रीटेस्ट की तरह ही काम कर रहा है। कि रीटेस्ट जोन है अभी भी रुका ही हुआ है रीटेस्ट पे, थोड़ा अगर नीचे आता है तो इस रीटेस्ट से वापस ले लेंगे बाइंग का। ऊपर अभी भी रेजिस्टेंस है, वो ब्रेकआउट हुआ नहीं है, जब तक होगा नहीं तब तक क्रूड ऑयल में रेंज ही एक्सपेक्ट है, होल्ड होनी चाहिए। वॉल्यूम यहाँ पर भी नहीं है, 12:30 के बाद शायद थोड़ा वॉल्यूम इंक्रीज हो। नेचुरल गैस भी आधे से रिवर्स हो गया। कोई नहीं, आएगा तो देखेंगे। Okay, major news for federal India's federal bank ब्लैकस्टोन $706 million इन्वेस्ट करेगा फॉर 10% स्टेक इंडिया का जो फेडरल बैंक है उसमें। गुड न्यूज़ फॉर फेडरल बैंक। ओके, कि ट्रेड यहाँ पर प्लान करेंगे नेचुरल गैस में सेलिंग का। नीचे आया नहीं एग्जैक्टली, नहीं तो बाय ही कर लेते। सपोर्ट तो था ही नियर बाई में, जा रहा है ऊपर को, यहाँ तक जाना चाहिए। यहाँ से एक सेलिंग का प्लान रहेगा नेचुरल गैस फ्यूचर में। ये 12:30 भी होने वाला है। लंदन सेशन इज गोइंग टू ओपन एट 12:30। लेट्स होप क्रूड में भी उसके बाद थोड़ा वॉल्यूम आ जाए 12:30 के बाद। क्रूड में भी यहाँ पर एक सेलिंग का ट्रेड यहीं से बनाए क्या? इसमें सेलिंग आनी है। यहाँ पर देखो एक बाइंग का ट्रेड भी मुझे लग रहा है बनाना चाहिए वैसे, सॉरी सेलिंग का ट्रेड क्रूड ऑयल में। टारगेट छोटा सा ही रहेगा बट ट्राई कर सकते हैं यहाँ पर एक छोटे से एसएल के साथ, बिकॉज इसमें और कोई ट्रेड यहाँ पर अभी और बन भी नहीं रहा है। तो एक छोटे से एसएल के साथ एक सेलिंग का प्लान करो, काइंड ऑफ स्कैल्पिंग, या फिर अगर चाहो तो 12:30 की कैंडल का वेट भी कर सकते हो। टारगेट बड़ा नहीं है, नीचे सपोर्ट है तो ज़्यादा दूर का टारगेट मिलेगा नहीं, तो थोड़ा सा रिस्की रहेगा ऐसे ही, मतलब लाइक 1:3 भी नहीं है तो। अप्रोक्सीमेटली 1:2 का ऐसा ही बन रहा है ये भी। ठीक है, ये एक ट्रेड रिस्की है थोड़ा सा कह सकते हो। मिडल ऑफ द लेवल ट्राई करेंगे, कोई लेवल नहीं है वहां पर, बट एक फ्लो में जा सकता है डाउन साइड की ओर। चाहो तो एसएल और छोटा कर लो। ठीक है, तो एक छोटा सा ये रिस्की ट्रेड क्रूड में ट्राई करना है सेलिंग साइड पे, तो एक छोटा सा ट्राई कर सकते हैं। ज़्यादा रिस्क मत लेना इसमें, ये नहीं कि ज़्यादा रिस्क ले रहे हो, क्योंकि नीचे सपोर्ट है ऊपर रेजिस्टेंस है, उनके बीच में है कहीं पर ये लेवल। बाकी 12:30 कैंडल का ध्यान रखना, अगर नहीं ले रहे हो तो अवॉइड भी कर सकते हो, थोड़ा सा रिस्क की साइड में रहेगा क्योंकि लेवल पे नहीं है। बाकी ट्राई कर रहे हो तो कम ही क्वांटिटी से करना, क्रूड ऑयल का ये जो सेलिंग ट्रेड लगाया करंट लेवल पे। ठीक है, 12:30 लंदन सेशन ओपन हो जाएगा, थोड़ा वॉल्यूम एक्सपेक्ट करेंगे उसके बाद आना चाहिए। और न्यूज़ वगैरह आएगी तो फोकस उस पर भी रहेगा, अभी तो खैर कोई न्यूज़ नहीं है, 12:30 की कैंडल ही इंपॉर्टेंट है।
You have a responsibility to do more than just advance your own outcomes, to help change the odds for other people. That was a
next week, we think the focus will probably be more actually on the balance sheet, given that, the market is very well priced for a cut. But there is mounting pressure in funding that has been happening, not related so much to the government shutdown, but October and November is a period where you have a lot of bill issuance, and at the same time, the balance sheet has actually shrunk quite a lot. If you look at reserves as a portion of GDP, you would see that we have broken through 10%. And this is exactly the sort of levels when, back in 2018, we started to see some pressure on front-end funding with more volatility, with more widening pressure in spreads, cheapening. So the question is whether the Fed should not act as soon as next week and completely end QT.
Do you think that maybe they'd move up the end of the QT timeline because of what's happened with regional banks just last week?
I mean, is it enough? Maybe not so. If you think that it is only idiosyncratic, you probably ignore that. But looking at the broader picture, yes, it could also contribute to the Fed deciding to be more dovish on the balance sheet side of things as well.
And you mentioned that you are expecting a soft reading when it comes to shelter inflation or housing inflation components. Is that something you see as a long-term trend? And is that because of Trump's immigration policies? What's driving that?
I mean, it's more like seasonality plus the surprising trends that we've had so far. So that's where we would expect some pullback. But at the end of the day, the broader picture will indeed be more about tariffs-induced inflation. And looking at the market again, inflation risk premia is very compressed. So once that happens, when you start to have upside surprise to inflation, we think it could have more of an impact on longer dated yields rather than to the front end.
Can I turn attention to what's happening here in Europe? We're going to get PMI data pretty shortly. We're going to get an update on, therefore, what is happening with the European economy. Politics has been the dominant factor over the last few weeks. Can I buy French bonds now? Is it okay? Is the coast clear? Can I do that again? What do you think about what's happening with gilts as we march our way towards the budget? What does the European government bond picture look like?
So I would say it's a bit twofold. On the one hand, we expect a lot more supply will come out of Germany next year. So that would rather still require some vigilance, and we would expect German yields to continue to push higher over the longer run. But what we would like to buy in the current environment, UK gilts, yes, we think that peak bearishness is behind us. French OATs, we would expect actually to remain in a very stable range as we go into the end of the year with the budget passing. If the budget does pass with a deficit target of below 5%, it would actually be very good news. I think no one were expecting that 2 weeks ago. And if that materializes, then we would expect more tightening from here with a return to 65 bips versus Germany.
Do we get another ratings review coming up? Is it today?
France tonight,
it's
yes.
Tonight, actually. It's tonight. So our view for tonight is no downgrade.
Right.
I mean, the outlook is unstable. So the first step for Moody's will be to move to outlook negative.
Yep.
And we think it's a 50% chance.
What will be the impact of that? The market's already priced that.
I mean, honestly, for a year, we kept saying to everyone, OATs are already trading in line with a full downgrade to single A.
Right. So even if we get a downgrade, there won't be much of an effect.
We've seen the price action after Fitch. We've seen the price action after S&P, and they have downgraded to single A. Moody's, we won't see a downgrade tonight. So I would just reiterate our view that the market is already there.
Great to see you. Thanks for stopping by to see us this Friday. We'll look forward to that a little bit later on. Kimita Korsell, Head of European Developed Markets, Rate Strategy and Economics at BNP Paribas. Let's talk about what we're going to talk about next as the EU continues to look for ways to finance Ukraine's war effort. Here's the bloc's defence chief on funding drone defence.
This part of drone wall was evaluated by those 4 countries that it would cost around of 1 billion euros. Okay. With detection, with anti-drone capability. So that is, of course, it's quite a substantial amount of money, but it's not something. It's not hundreds of billions.
Coming up, we're going to be talking about defence companies. We've got Saab that we need to be focusing on. There's a nice picture of the Gripen. We'll talk to its CEO a little bit later on, plus keep a broader look at what is happening in the defence space, what's going on with Rheinmetall, etc. We'll focus on that next. This is Bloomberg.
With 5 of the world's fastest growing economies, Africa is the next frontier for trade, investment, and innovation.
Foreign investment has grown tenfold since 2000, and by 2050, GDP could hit $29 trillion. Powered by the tech and data that bring global markets into focus, Bloomberg is putting Africa's story on the world stage.
The future is being shaped in Johannesburg at the Bloomberg Africa Business Summit.
There are a lot of misconceptions about B2B. People think it's boring or you're just pushing product. Nothing could be further from the truth. I don't find the distinction between B2C and B2B to be that compelling. People buy from organizations and people they trust. When I'm buying services or products, I not only care about what that thing does for my business, but I care about what that company stands for. The human connection behind B2B brands that are successful is enormous. Brands drive business results by telling powerful stories to humans that move their heads and their hearts, and that works regardless of what you're buying or selling. I always tell people, if you put B2B in a box, you've got it all wrong.
Of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Welcome back. 15 minutes to go until the equity market opens here in Europe. We're up pretty much across the board this morning in terms of what we're looking at. US futures are pretty poppy as well. S&P's up by 0.6%, Nasdaq's up by 0.9%. We've just about filled the gap between the 10th and now, which I think is worth looking at in terms of the futures picture in the United States. Let's talk about what the rest of the day is going to look like. CPI is going to be a major factor in these markets a little bit later on. Val was joking, it feels like a payroll day. You can't, today's not a day for a long lunch. Bloomberg's MLive, Scarlett Montgomery-Koenig joining us around the table. We're all going to be focused on this. Haven't had data for ages. What is it going to tell us?
Yeah, I mean, this is the hard bit, right? We have inflation data coming in. I think the feed through to the equity market, the main channel is how it impacts your expectation for Fed funds. Yep. So what you tend to see is if you get a hotter than expected inflation print, that means you need a higher discount rate. That impacts earnings and therefore equities to the downside. Whereas if you get a downside surprise, you get the opposite impact. Now, the bad news is I think there's a much higher bar to price in more dovishness for the Fed than more hawkishness. So you have a terminal rate currently priced that's 3%. That's in line with dots. That's essentially where the Fed sees neutral at. So to go more lower than that or more dovish than that, you have to say essentially you're entering recession territory, which seems unlikely, but also isn't great for stocks.
Yep.
Whereas you have an ability to price in more hawkishness. What I would say, though, in terms of good news, is that the expectation is quite high. So implicit in that is this idea that the market assumes the Fed is putting more priority on the labor market rather than inflation. So if you do get a hot print, you might just see a wobble in equity markets rather than something bigger, especially given that you won't have the Fed coming out. They're in their blackout period. You won't have any kind of like hawkish commentary to go with that hotter print.
I was on WEI, not WEIF. Just going to point out the futures are up a little less than I said, 0.4% on NASDAQ.
You're talking about the equities market. Talk to us a little about the bond market here. I'm looking at 3.99 on the 10-year. It's kind of been in like a weird 5 basis point range, I want to say, all week long. Does this print change that?
I think it's really hard for this print to change it because there's so much emphasis being put on the growth story, on the labor market, because there's this idea that inflation, if it's tariff-driven, might be transitory, which seems like a big mistake given that we've had this transitory inflation story before. I will say you got a little bit of a feed-through in terms of higher oil prices, higher break-evens. I do think at some point either you need to price a higher Fed funds, which pushes up your real yield in terms of terminal, or you need to admit that you're not going to get back to 2% inflation anytime soon, which means your break-even rises. So I think certainly you need to see higher yields as inflation comes in hotter. I just don't necessarily think that comes today or even really in the near future until we get some kind of sign that inflation isn't just going transitory, it's actually having longer-term impacts.
Skylar, it's a big week next week. There's a lot of weekend risk with these U.S.-China discussions. Do you think there's a risk you could just see profit-taking after this report, regardless of what it is?
Yeah, I mean, this is the thing with valuations is by themselves, they don't predict your equity returns whatsoever. But what they do is they make investors more nervous. So what you tend to see is when equity valuations are elevated, they stay elevated for long periods of time as earnings come in strongly in an expansionary period. But when you do get a sell-off, the sell-off tends to be harder. So I think it's a reason rather for vigilance instead of selling off altogether. And it's something certainly you need to pay attention to is that negative catalyst.
All right, Bloomberg's MLive strategist Skylar Montgomery-Koning, thank you. And remember, you can get up-to-date analysis and insight from Skylar and the rest of the team. Just go to MLIV Go on your terminal. Let's switch focus over to the EU. The European Union has put off a decision on whether to tap frozen Russian central bank assets to aid Ukraine's war effort. Talks among the bloc members stalled after Belgium demands greater assurances that it would not be held liable for risks linked to the proposed loans. We're joined now by Bloomberg's Oliver Crook from Berlin. Oliver, what's behind this deferral?
Yeah, so listen, Valerie, let's give them a little bit of credit where credit is due. They did actually manage to get the 19th package of sanctions against the Russians through. They actually managed to do that even before the meeting began yesterday, which was not really a foregone conclusion. There were a number of objections from a number of member states. Those got cleared, so that package got through. That will mean, in terms of significant moves for the Europeans, they're going to put more sanctions on more of the Russian shadow fleet. They're going to crack down on more of the Russian sort of crypto trading. A number of the financial institutions were also targeted. But critically, this is the full adoption of that LNG ban they were talking a couple of weeks ago, where basically now they will not be permitted to have any LNG coming from Russia into the European Union by the end of next year. The problem is that is by the end of next year. That is 14 months away. And what they really have, the final bazooka for the Europeans, are those frozen Russian assets, 140 billion euros worth of them, that are sitting mostly in Belgium. And the real sort of conflict there for the Belgians is they do not want to be held liable. If something happens in the coming years, they need to repay those assets back to the Russians. There is some kind of legal problem. They want to guarantee that risk is diversified across all of the member states that are guaranteeing that, and not just them, which is, I think, a fairly fair thing for them to want from this. The problem is, whenever I talk to policymakers, and I spoke to the European Defense Commissioner yesterday about whether or not they're going to get these frozen assets moving by the end of the year, basically no one wants to commit to that. This is a conversation that gets kicked into December for the last European Council meeting where that discussion will happen. I'm not sure that they will come to a consensus, though, even then.
Ollie, what else can we do? What else is on the table? What else can be used to fund this war effort?
Yeah, so exactly. The Russian assets is seen as a sort of long-term solution, right? $140 billion. Why this is so important is this is for Vladimir Putin, basically the guarantee that the Ukrainians can continue to pay for this war. In the shorter term, you have these safe loans that the European Commission has put out. All of the member states need to put their projects forward before the end of next month, and that will get those loans put forward, and some of those loans are going to flow to Ukraine. The longer-term picture, though, this is the sort of main point, and this is what we heard from the European Defense Commissioner yesterday. Have a listen to what Kubilius had to say to me yesterday.
Coming into defense on European continent. Those amounts will come, first of all, from national defense spending, if member states will fulfill what they promised, in NATO agreements, to raise their spending up to 3.5%. I hope that member states will fulfill that. If they will fulfill that, then during the next 10 years, we shall have an amount around of 6.8 trillion euros for real defense. For equipment, it will be maybe half of that, 3.4 trillion, but those are quite a big amounts of money.
So really the sort of long-term question here, I think, is the question we had from the very beginning, guys. We're talking about 7 trillion euros worth of spending. Can that be achieved without joint debt? That answer is still not before us, but it's something we'll be continuing to ask them over the coming months.
Bloomberg's Oliver Crook out of our Berlin Bureau. We thank you so much. Let's go from the macro and the geopol to some of the micro stocks that we are watching. Chloe Melly is all over it. Chloe.
Good morning, Kriti. Let's start with technology today, and more specifically suppliers to Intel. So Intel over in the US rallied quite massively, as we can see yesterday, after providing quite an upbeat revenue forecast, and that indicates that it might be on the right track to recover after what has been quite a tough year for the company. So this boosted the shares of Intel suppliers over in Asia, and we'll see if we get the same in Europe today. So some of the key names to be looking out for are ASML in particular. So it derives about 9% of its revenue from Intel, so quite significant. But also smaller suppliers like BE Semiconductors and Siltronic could be moving higher on the back of this sort of long-awaited comeback from Intel. Moving on to NatWest, and NatWest raised its income and returns guidance this morning and also delivered its highest earnings in at least a decade. So this could be boosting the shares in the bank this morning after what's already been a very, very successful year. As we can see, it is the third UK bank to be reporting this week after Barclays and Lloyds earlier, and they all seem to be saying that the UK customer so far is resilient. So we'll be seeing how that moves the picture this morning. And finally, Sanofi has reported earnings that beat estimates thanks to really strong sales of its blockbuster asthma drug Dupixent. This could be moving the shares higher after a little bit of weakness in the stock. However, one weaker spot was vaccine sales, with the CFO saying there was quite negative sentiment around vaccines and maybe a post-COVID fatigue setting in as well. So that would obviously be a little bit of a challenge. So let's keep an eye on Sanofi this morning.
All right, our equities reporter Chloe Melly walking us through some of the stocks to watch this morning. I mean, it's fascinating. We had a really interesting earnings story. It's going to kick up into high gear next week, of course, as well, on both sides of the Atlantic. So we'll probably get a bit more clues about what's actually driving this market, whether we can even call this week a success.
We haven't filled. So to go back to the 10th.
You're all about the gap.
Yeah, really.
But equities. But this takes me back to the momentum story.
Yeah.
There has been a lot of momentum in these markets. You've seen that come out of the crypto trade this week. You've seen that come out of the gold trade this week. Equities have just basically gone sideways. The headline I read this morning was tech powers stocks higher. Yeah, we're basically where we were. Back on the 10th. So is the record highs. Yeah, but I agree. But is the momentum coming out? Anyway, the opening trade's next. This is Blue.
You don't know how tough an investment is until you push it. So at Federated Hermes, we put our actively managed fixed income products through a ruthless vetting process. Because that's how we roll.
With 5 of the world's fastest growing economies, Africa is the next frontier for trade, investment, and innovation.
Foreign investment has grown tenfold since 2000, and by 2050, GDP could hit $29 trillion. Powered by the tech and data that bring global markets into focus, Bloomberg is putting Africa's story on the world stage.
The future is being shaped in Johannesburg at the Bloomberg Africa Business Summit.
Wherever it happens, I'm Tyler Kendall in Washington, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate. Choose addiction. Go
Shatterproof.org/finds treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode, the goal is to catalyze economic development using sports and basketball in particular. And so if we are going to catalyze economic development, then we have to look at the whole ecosystem.
Premieres October 24th.
Only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we travel to Lesotho to see how tariffs are hitting the country, making some of President Trump's branded golf shirts. The legendary Roger Penske explains how technology is transforming his trucking business, and we ask whether we should care about all those tech unicorns staying away from the public markets.
One of the reasons is because of the availability of private capital.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Welcome back. A couple of minutes to go, and then we're going to start trading here in Europe this Friday morning. Yesterday's session in the United States certainly ticked up as the day went on. We were up by 0.6% by the end of the session. Europe went out around here. We've got all of this, therefore, to price in on the other side. Europe needs to figure that out and punch it into its futures picture this morning, which, Val, looks all right.
It looks fairly positive to end what has been a fairly positive week for global equity markets. Euro Stoxx 50 futures in the green, up nearly 0.5%. FTSE 100 futures up 0.1%, and DAX futures in the green as well, up 0.3%. Kriti?
Plenty of stocks to watch. Defense, of course, key in that when we look at the DAX. But a couple of individual stocks that have also started to report earnings. NatWest, for example, lifting their guidance. Their third quarter profit beating estimates, likely to be received fairly well at the open. Their highest earnings in at least a decade. This is enormous. We'll see if that is just a read through to NatWest shares or even beyond to the broader banking sector. Sanofi as well, very much in focus. Remember, you had a lot of the healthcare stocks take a little bit of a beating this week. Some of that is a vaccine story, but for Sanofi today, their profit, another rise. Record Dupixent sales seems to be the story there. But when we're talking about a sector basis, do these individual earnings pieces start to echo, start to feed into the broader sector? Is healthcare still the defensive trade that perhaps it was 6-8 months ago here in Europe? Of course, defense very much front and focus. We do have one eye, Guy, when it comes to the conversations happening in Brussels, the frozen assets, as well as any sort of deals and ceasefire negotiations made with Ukraine, Russia, the United States. I believe Zelensky, Merz, and Keir Starmer, of course, all meeting here in London today.
The coalition of the willing. We're going to talk to Saab CEO a little bit later on. We'll get the update on the defence picture here in Europe from him. Right, let's get an update on what's happening with these markets. Here we go. Friday's session is open. Let's show you what the numbers look like. The FTSE 100. It's going to be interesting to see how NatWest trades through. Keep an eye on chip stocks as well. I just want to flag that one too as being a factor for these markets this morning post Intel, though it wasn't a great day for European chip stocks yesterday. Some of the names that we follow under a little bit of pressure. So the IBEX is up by 0.2%. The FTSE is fairly flat. It's been a choppy week, obviously, for the gold miners, which is another factor you need to fold into the FTSE. It is now up by 0.2% as some of these stocks begin to kind of get going. I think we're going to have to wait maybe for the DAX this morning, but the CAC is already up by 4.5%. Val, what do you got?
Look, when it comes to the sector's picture, technology jumping out as the best performing sector so far. We have ASML well. The biggest points gainer up 1.25%. So the maybe positive read through from those Intel earnings last night. They did give quite a rosy forecast, and we're seeing a read through into European tech this morning. It was also quite an interesting session and a good session for Asia tech as well. So that move seems to have gone global. The rest of the sectors, we do have a few at the bottom of the basket in the red. Basic resources is one of them that comes after yesterday. We had such a huge jump in oil prices, so maybe giving some of those gains back. We also have consumer products and utilities at the bottom.
There's lots of individual movers we want to keep our eye on, though. You mentioned some of the tech stocks. Sanofi, of course, having a fantastic morning, higher by 4% and climbing as we speak. We should mention Accor as well. This is, of course, the hotels and hospitality firm. They announced a buyback this morning, so they're seeing quite a bit of love as well. But some of the outperformers, especially in luxury from this week, they're actually underperforming today.
Yeah, Kering's definitely fading, isn't it? So it's had a massive move. Unsurprising, I think there was a bit of a short squeeze maybe in yesterday's positioning. It rallied quite strongly. I think despite the fact that it's hit a series of 52-week highs recently, I think the market has been still unconvinced. Yesterday we saw, obviously, it moved sharply higher. I think you're just fading a little bit of that move as well in terms of the market move that we're seeing this morning. You're also seeing some of the energy names coming off the boil a little bit. Big moves there yesterday. But ASML, Sanofi, Siemens, Safran's out. Safran's out with I think it's the third upgrade that Safran has delivered this year in terms of its outlook on revenue. It's up another 1%, and it's moving the market higher in France as well. It's a fairly decent mix of stocks, but some of the big moves yesterday, some of the squeezy stocks yesterday, feel like they're unwinding maybe a little bit this morning.
I mean, we're still waiting for an opening trade in NatWest after they raise their guidance, so we'll keep an eye on that, perhaps moving the FTSE when it does open. But let's broaden out this conversation, and joining us around the table is Shanti Kellerman, the Seven Investment Management co-CIO. What has been your take on earnings season so far?
I think it's been a solid start, and we have lower expectations for this quarter than we did Q2, which is obviously helpful. I think it's going to be more about the forward guidance than what is actually delivered, particularly in the U.S., because everyone is so focused on the forward impact of that tech spending and things like that. Europe, I think you'll probably see companies more reaction to the actual earnings and less focus on that guidance, just because the market's focusing on different things for those companies.
We still have a lot to come. Yeah. What is your eye really focused on for the remainder of the season?
Well, obviously, it's the tech earnings, and because that's such a huge portion of the market, and it also has so many reverberations through, if you look at, semiconductors, through all of those supply chains, and increasingly the tech sector is becoming more entwined with the infrastructure sector as well, and I think that's something that will naturally broaden some of the market returns, because a lot of those companies' fortunes are getting very intertwined with the hardware systems, the data center construction, which are just going to need different types of companies to help build that infrastructure.
There is a meeting between Scott Bessent and his Chinese counterpart this weekend. There's a meeting between Donald Trump and Xi Jinping next week. How are you thinking about trade negotiations right now between the world's two largest economies? Does it even matter at this stage?
So I would say, we get loads of questions in from customers all the time. Tariffs are really not coming. No one's asking about it. I think there's just mass fatigue. Now, it doesn't mean it doesn't matter. Things can't happen that aren't important. But I think there's a lot of fatigue in the market about it. And I think it's kind of the pattern we see as we have, these really harsh things come in, then we roll them back, and we all have a huge sigh of relief. And it's hard to see why you would expect anything dramatically different this time. I think they'll probably will roll back on some of those, 100% massive tariffs, because it's not really in anyone's long-term interest.
What is the worst case scenario here? What is, if clients aren't worried about it, the market isn't worried about it, what's the risk we're not seeing?
Well, yeah, so obviously I think we've had quite happy markets, elevated valuations. We certainly could have a pullback. I think if that happens, I wouldn't see it as the start of a huge fall, because there's a lot of cash still on the sidelines. There is still economic growth. People still have money. So I think I would view anything as a correction, a temporary thing, not the start of something more sinister.
So what's going to move things around next week? You've got the meeting. Trump or Xi, you've got the Fed, you've got a whole boatload of earnings that are going to be. Which of those where should I be looking in terms of where I think things are going to change?
I like earnings because I know they're real, they're audited. You look at a lot of surveys these days, consumer surveys. Everyone in the UK says everything's awful, but then it turns out we all spent more money last month.
Yeah, I know. Never believe what a consumer tells you. Believe what they actually do.
Yeah, and then same thing. Do I necessarily believe what Trump tells me, or do I believe what actually? Yeah. And even if we have some grand agreement next week, does that all unravel a month later? So I think for me, it's the earnings is what I'll focus more on.
Momentum has been a really big theme in a lot of different asset classes, and correlations have been kind of quite high. People are in the same basic trades. If we see momentum unraveling in one area, let's call it gold, crypto, there are a few others, do you as an investor go, I just wonder whether or not actually there's going to be some other momentum trades that are beginning to fade a little bit here? We've pushed up a long way. Is there enough momentum to keep equities moving?
I think it's very reasonable that we have a bit of a pause in momentum. You can't keep going up forever. But we also, one thing we talk to customers about, you have to be comfortable with being at all-time highs, because in the long run, if markets go up, you need to be at all-time highs quite a lot to keep going up. So it's not necessarily a bad thing or a warning sign to just because you have an all-time high, we should be worried. I think gold has certainly had a great run. I think you wouldn't be surprised to see a pause in momentum. But the longer-term factors on central bank buying, other countries worrying about, can the U.S. seize all of my assets if they decide don't like me? I think those are still firmly in place. And then it's about, can we keep
a little bit later on in the program. Now, first thing is first, you know the drill. We start the show, we look at markets. Now, European stocks seem to be hovering near this record peak. Again, there's a lot of earnings. We're in the middle of the earnings season. Third quarter earnings continuing to flow in. The stock 600 gaining about 0.1, 0.2%. Of course, the big story is what's happening with crude jumping to a 2-week high. This is after the U.S. President Donald Trump imposed sanctions on Russia's biggest producer. And then gold. We always look at gold. That's our golden rule on the pulse, because it gives us a good indication of maybe money flowing outside U.S. assets somewhere else, and gold 4,099. Again, if you look at Brent crude, look, it's up almost 4%, and then earnings definitely changing the way we look at some European indices. We have another packed agenda for you. On the earnings front, Tesla disappoints. Elon Musk, though, still wants his $1 trillion pay package. On the market news, look, gold again fluctuating after retreating from a record price surge. But first, let's begin with a U-turn from President Trump, with the U.S. stepping up pressure on Russia by targeting its biggest oil producers with sanctions.
We canceled the meeting with President Putin. It didn't feel right to me. It didn't feel like we were going to get to the place we have to get, so I canceled it. But we'll do it in the future.
Mr. President, can you tell us a little bit about why you're elevating sanctions against Russia right now?
I just felt it was time. We've waited a long time. I thought that we'd go long before the Middle East. And Mark, as you know, we did the Middle East plus 7, so we did 7 different wars.
Well, let's bring in Chad Thomas, Bloomberg's executive editor for Europe. Chad, thank you for joining us. It's great being here because we're going to have some great conversations with some of the newsmakers. But if you just followed what Donald Trump wanted to do with Russia and Ukraine, kind of got whiplash because it was a big week to try and understand whether he was friendly with Putin, wanted to meet him, and now these big sanctions.
We got huge whiplash. You and I were talking just a week ago, and we were talking about the Budapest summit. And did that make sense to do that? Should President Trump meet with President Putin for a second time, and whether he was being played? Clearly, within the last week, things reversed significantly. We were hearing already early this week that the talks between Rubio, the Secretary of State, and Lavrov, the Russian foreign minister, weren't going well. And then Trump not only backed away from the idea of there being a second meeting, saying it would be a waste of time to do that now, but he slapped these sanctions on Russia. This is what the European Union has been asking the U.S. to do for a long time. There will be a significant impact on Russia here. These two companies are 50% of oil production out of Russia. 25% of the Russian budget comes from these two companies. So if you want to impact Vladimir Putin's ability to wage war, you just did that.
Yeah, why did it take so long? I guess it's one of the questions. The other one is the ripple effects will be felt far and wide, including China. That buys still a lot of Russian oil.
Yeah, why did it take so long? People were really pushing President Trump to do something, and he's been saying for months that he would. He did say yesterday, and I think this was interesting, I've had some great talks with Vladimir Putin, but then nothing happens. He seems to have finally decided that he needed to take action. China today, we're seeing real strong reaction there. They get 20% of their oil from Russia, and so there's a real concern. They either have to abide by the sanctions or they face the consequences of secondary sanctions on them when it comes to things like access to SWIFT and so on, where Russia obviously has already been cut off from that years ago when the full-scale invasion of Ukraine took place.
So yesterday, a lot of leaders were in Europe, actually in the UK. Yeah. That's a Freudian slip. Still Europe. And today, actually, there's an EU leader summit. What can we expect from that?
Yeah, so we've already seen this morning more sanctions coming out of the European Union against Russia. It will clearly be a big topic. This, by the way, the European Union, Trump says that they love sanctions. This is the 19th sanctions package against Russia from the EU. It's really an effort by them to cut off the ways in which Russia has gone around some of their previous sanctions. So clearly that will be a big topic of discussion at the Leader Summit starting a little bit later today.
Chad, thank you so much. As always, Chad Thomas there and his team with some great coverage, of course, coming all over Europe. Bloomberg's executive editor for Europe. Now on to some corporates, and Tesla profit plunged as rising costs undercut a record quarter of vehicle sales. Now shares in pre-market actually lower, with analysts saying there's just not much to inspire investors and really questioning the timeline to develop new businesses like AI and robots. Well, despite the concerns, the chief executive, Elon Musk, ended the call by pleading with investors to ratify his upcoming $1 trillion pay package.
The point is, I just like that there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Let's go straight to Craig Trudell, Bloomberg's global autos editor in London. Our cards are. Craig, I mean, this is a pretty extraordinary end to a difficult earnings call.
It was, and I guess, I walked away from some of those comments, scratching my head, because if we really sort of have any doubt as to the amount of control that Musk has of this company, it's reinforced quarter after quarter that he's taken them in this direction of kind of sticking with, just the product that they have in terms of their actual core vehicle business. It's been years since we've seen this company bring out entirely new models. The Cybertruck was the last one added. It's also been quite a disappointment and was a product that Musk was very hands-on with. And yet, he is very much in control of this company. And this is a company that is taking his lead into these uncertain directions, chiefly, I would sort of flag humanoid robots as being, sort of the best example there, where it's really unclear just how quickly this, business is going to be something tangible for investors to wrap their minds around.
Craig, can Elon Musk turn Tesla's fortunes around? I feel like I ask you this every quarter.
Yeah, I mean, I think there's a big debate over, this idea that the auto business is getting really difficult for everybody, right? And it's getting particularly tough for electric vehicle makers where, and particularly for U.S. companies, right? In that with the $7,500 tax credits in the U.S. going away at the federal level, real concerns about how much of an effect that's going to have on the EV industry more broadly. And, a quarter ago, we heard Musk acknowledge that may lead to, in his words, a few rough quarters for Tesla, going forward. There was very little sort of discussion of that last night, which I found surprising. And it was much more emphasis on, again, the humanoid robots that Musk refers to as Optimus, and also on sort of robotaxi efforts that are still, not quite actually robotaxis. You still have human operators in these vehicles that are sort of there to step in and prevent against any crashes or accidents in Austin, Texas.
Craig, I'd love to get a humanoid robot on TV actually next time. It's you and I on the pulse with a humanoid robot. This morning, we also had some pretty strong numbers from Volvo Cars. Challenges ahead. That's what the chief executive told us this morning.
Yeah, I think Hakan Samuelsson, to his credit, was pretty clear-eyed about that, and yet the market absolutely is loving what he had to say this morning and the numbers he had to present. This was a company that, when he left it a few years back, was in quite good shape. I think the company sort of felt really compelled to bring him in as a steady hand to turn things around, because performance has gone in the wrong direction since he left. And, he's only been back since April, I believe, and we've seen some pretty decisive moves on his part to really cut costs and sort of unwind some of the things that were happening under Jim Rowan, who was running Volvo for the years since he had stepped away. So, kind of walking back some of this ambition to go fully electric as quickly as previously thought. And again, just sort of reining in costs. I think the job cuts that Samuelsson has announced and moves to sort of improve the operations of this business are bearing fruit much more quickly than everybody was anticipating going into this print.
Craig, thank you so much. What a story. Craig Trudell there, our Bloomberg Global Autos editor. Now, a majority of European Union members, including Germany and France, are now calling for a systematic review of bloc's regulations by the end of the year. It's hoped that the push will dismantle old rules that pose challenges for the competitiveness of EU companies, which are facing a host of headwinds, from tariffs to the ongoing war in Ukraine. Now, these themes are top of the agenda at this year's Berlin Global Dialogue. And I'm now delighted to be joined by Lars-Henrik Holler, the founder and chair of the event. He also served as chief economic advisor to the German Chancellor Angela Merkel. So thank you so much for joining us. Thank you so much for having us. Actually, it's a great event that kind of brings public and private newsmakers at the table. First of all, when you look at Germany, I mean, we talk about an economic revival. This has not happened yet. When do you think we'll have meaningful growth in this country?
Well, I think we're in a very important time. I think this fall is going to be very important, as the German Chancellor said himself. There's a very important summit in Brussels also today and tomorrow, which looks at these regulatory issues. As many have said, Europe is too regulated, so I think that is important. The second element, which I think is very important, that Germany relaxes fiscal, so-called the debt brake, for more infrastructure, but also for defense spending. And now the proof of the pudding is in the eating, that you have all that money and all that flexibility, but now you need to do the reforms, you need to make it easier, you need to create space for private investment to come into place, all things we'll be discussing at the Berlin Global Dialogue, so that that money actually leads into growth.
How is Chancellor Merz doing?
He's doing fine. I think that he's certainly brought Germany back on the international stage. And I think that's very important. And I think a big priority for him is actually Europe, even though he's also, met with Donald Trump and with many other world leaders. But he has to do homeworks at home, and that includes Europe. And he needs support to do it. Germany is a complicated country, not the only one. France is also challenging right now. But I'm quite hopeful that he's going to be able to do it.
What do you think are the main obstacles, actually, for Germany, but also maybe for Europe? I mean, in Germany, is it geopolitics?
Right.
Is it trade?
Yeah, trade is important. I think the defense sector also as an engine of growth for Germany, transforming the economy. Because Germany is an industrial powerhouse. We have lots of companies at the Berlin Global Dialogue which would be willing to move into these areas related to defense or dual use. But it's not easy to transform your economy. So I think that's an issue. And the other one is sort of other regulatory constraints. For example, climate change. We haven't decided on our NDC goal for the Paris. Paris is 2 weeks away. And therefore, don't change the goals. I think we all want climate neutrality by 2050, but I think the way to get there has to be redone, and this is not easy.
But what is the right way? I mean, we're seeing a number of things also from Brussels actually being changed, some of the laws with deforestation maybe taking more time.
That's right.
I mean, there could be a link between defense rights and climate change. Is that far-fetched? Some people say it should be folded into the ESG world.
Yeah, I think defense is an important aspect of it. Okay. I think what you mentioned is true, that we should not overdo it in terms of time. I think we should have realistic goals. And as I said, the reporting and the regulatory stuff, I mean, this is really horrible when you look at it. Yeah. They were all there for good intentions, so it's not the intentions, but actually we need to be more pragmatic and think about what generates growth, and that is a change of mind, which I think is happening in Europe.
But does that happen by actually breaking up the rule book? So if you say, look, we're going to really cut down on regulation, and again, let's see actually what happens on that. That's right. At the country level, some people have tried. Right. Then do you really become competitive towards the US and China?
I think that's a big part of it. By the way, we had, I think, 3 deep regulatory packages under the Merkel regime. So as you said, we've tried so many years. The big difference between then and now is it's blatantly obvious that we need it right now, because I think Europe is going to be irrelevant in the rest of the world if it's not economically strong. That was different 10 years ago. We were doing actually much better economically relatively to other parts of the world. So the pressure is there. There are proposals on the table, which heads of states will discuss today and tomorrow. One big issue, which I think is very important, is rather than having what people call an ex-ante regulatory approach, that before you do anything, you need to report and you need to show there are no risks, to an ex-post approach, when you actually intervene. Is more the American way of doing things. If things don't go well, you intervene afterwards, but you let people go and get started.
But what would you do? I mean, is it AI regulation? Again, we don't have these big AI companies, and the energy market is a bit of a mess.
There's AI, there's climate, there's supply chain management, all of these. I think the AI Act, we are trying to look at a European way of doing AI, which looks also at security and trust, and remains to be seen, and that people are skeptical whether this is really a market or whether we should be more innovation prone. But this is on the table, and also a discussion we're having here.
Christine Lagarde actually steps down from her role at the ECB in October 2027. Is it time for a German to be in charge of the ECB?
If you ask a German, yes, I think it would be time, but it's complicated. It's usually also a package deal with other jobs, but at that time I think the other big jobs in Europe are not on the line.
Who would you put forward? You're so ingrained in German politics. You must have a list or a name.
I like our finance minister, ex-finance minister, your cookies. I think he's a good person, but there will be others. And I think it's more important to get a good person, but it also applies to other countries. In the US, there's also a big change coming up with, Kevin Hassett, who's a good friend of mine, is also in the running. But to get the right person to do that, and I think we'll do that. Yeah.
Thank you so much for joining us, Lars-Henrik Holler. They're the founder and chair of the Berlin Global Dialogue, and of course we'll be broadcasting live today and tomorrow with many panels, so I know we'll see you around the corridors. Now, coming up, it's been a turbulent week for gold prices. We'll discuss all of that with Lombard Odier's Nanette Hechler-Feider. But that's next, and this is Bloomberg.
as much as we are excited about the general groundswell about AI for good, there is AI for bad. Fighting AI takes AI. The news is rife with breaches and ransomware attacks, and there is this tug-of-war between what business needs to do, but also ensure that the business is protected. In a time where criminals now sell the technology, you could walk up and say, hey, I want to launch a ransomware attack, and I have no infrastructure, no tools, no knowledge. And they'll say, sure, there's a price for that. And so there is a need then to use AI to also protect organizations. We feel this battle between AI for good and AI for malicious use, and our goal is to champion the defenders.
I think the Fed should be putting a little bit more weight on the fact that the stock market's been very strong, bond yields have fallen, the dollar has weakened, credit spreads are narrow, all those things are supporting economic activity, and put a little bit less weight on the level of the federal funds rate.
That was Bill Dudley, former New York Fed president and Bloomberg opinion columnist. Now, it's been a pretty dramatic week for gold prices. Gold fluctuating this morning. That's after a rout on investor concern over the market overheating. Well, joining us now, Nanette Hechler-Feiderb, EMEA Chief Investment Officer at Lombard Odier. Nanette, so good to see you. Thank you so much for coming in, and in London. Nanette, there's three things that the market is obsessed with. Of course, it's credit because of the jitters that we had last week. It's gold, and it's AI. What does gold represent to you now?
Really, gold has been the one asset that has come forward in 2025 as the ultimate diversifier. Remember, in April, actually government bonds were not really helping to diversify. So gold has taken this new position for asset allocators. And it's also part of the explanation of the incredible rally and ascent of gold, in spite of the volatility now of past week, has experienced this year. So a very important asset for diversification purposes, but also for structural purposes, Francine. Gold is going to be really quite critical in everything that is happening at central bank reserve shifts.
So, Nanette, I mean, is this really also part of the geopolitical reordering? And if this is, maybe central banks selling treasuries, selling in dollar to buy gold, is there a target price, or does it just go up and up?
Well, you can take basically pre-Bretton Woods and take a look at how much gold represented in central bank reserves, and it's about twice as much as it does now. I'm not suggesting that central banks overall are going that way, but what is clear is that if the financial system continues to evolve and financial settlement systems continue to evolve with a parallel one where central banks are providing liquidity to each other in their domestic currencies, gold is playing a very interesting role as a security, if you like, against that. So I do think that central bank reserves are going to go up, and I do also think that this will push up the gold price. For now, our forecast for next year is that it might reach 4,600.
Nanette, if you look at AI, and we're in the middle of earnings season, there's a lot of concern that AI could be in a bubble, but then there's a good earnings report in an AI world, and then it keeps on going higher. I mean, it's priced to perfection.
It is, and at the same time, it's really quite close to what it has been all along. I mean, take a look at valuations. They are around 28. That is not far from what they have been on average as well. And it is very far from the absolutely excessive valuations we had during a true bubble, a true tech bubble in the dot-com period. Back then, we had multiples of around 55. Right now, we are turning at around 28. So you can see that we, I think, are not in this completely overextended terrain. But what I really would want to point out is that earnings growth as well, Francine, has been really strong in a lot of these AI-related companies. And they are turning around 1.5 or twice as strong as the market globally. So I do think that there are fundamental drivers that are explaining this strength and these prices. Of course, one has to be very selective. And within all these technology stocks, there are some smaller ones that have really seen a very strong multiple expansion and where earnings have not so much been supporting that. There you have to apply caution. That's very, very clear. But selectivity, in my view, doesn't mean that we are facing a bubble here. On the contrary, AI is at this moment really standing ahead of a very broad adoption.
Yeah. Then is there a worry actually that there's too much money, that there's too much investment, for example, going in data centers? Because if you don't see a return in a fairly brief time horizon or timeline, then maybe there's just going to be overcapacity.
It's very true, Francine, that the capital expenditure into the infrastructure of AI and data centers are part of the infrastructure has been mind-boggling. But I do think that it is absolutely what will be required. I am confident that technology and AI is going to pervade so many different sectors and in particular services that the infrastructure required to process that is just going to be there. So I'm really not so worried about that trend. I think that the world of tomorrow is going to make use of data and, by the way, of energy in a way we haven't seen or imagined before.
Nanette, what do you do with the credit jitters? We were talking, last week whether there'd be more defaults, whether there's systemic risks out there. Like a chief investment officer at Lombard did. Like, how do you deal with it?
I mean, look, we've been very, very attentive to all of these news. Anything that is happening on the credit market is always cause for attention for us, because there are really two areas that transmit into the global economy and into recessionary risks. One is credit, the other one is real estate. So anything that is touching to these two areas deserves a lot of caution. But the good news is, in our view, that these are at the moment very contained events. We have had some of them before. We are certainly of the view that credit spreads, Francine, have narrowed down to a point that they are not really compensating for any credit risk. And therefore, we have taken the decision to be a little bit less overweight, in fact, neutral now on investment grade credit, where we find that the overall yield is probably not going to give us much more room for bond.
By not even 1/10%. Coming up this hour, we'll catch up with Drew Mattis of MetLife, with stocks coming off their biggest two-day gain since June. The former White House trade official, Kate Kalukowicz, as President Trump expects to deal with China, and Earl Davis of BMO on increasing odds of a 50 basis point cut at the Fed's December meeting. We begin this hour with stocks edging lower with a slew of earnings on deck. Drew Mattis of MetLife writing, in the absence of government data, the only information we have are earnings. Mediocre nominal growth expectations are out of sync with earnings expectations. Drew joins us now for more. Drew, good morning.
Good morning.
Does something have to give?
Something does have to give. Now, what that's going to be, I'm going to guess it's going to be markets, because it's easier for markets to give than it is for the economy to give. And if the economy gives, it's probably not giving in an unexpected acceleration in activity.
This is just one contradiction. There are many more. We talked about lots of them. Employment's dropped away. Retail sales has been really robust. People are still talking about the so-called K-shaped economy. Upper income okay, lower income struggling. Is one catching down to the other, or the other going to catch up to the top?
Well, just because someone's spending when they have money doesn't mean that they're doing fine, right? It doesn't mean that they feel like things are going to continue to be good. And when you look at the details of how income expectations are changing, particularly real income expectations, so accounting for the inflation component, what you see is actually that the upper income is beginning to feel a lot of pressure. I don't know whether it's what they're buying is just going up in price more aggressively, or whether they are beginning to worry about their jobs a little bit more. I suspect it's a combination of both.
Where are you seeing this in particular? And I say this as we were looking at airline earnings, for example, and a lot of people are shelling out for those premium cabins.
They shell out for the premium cabins, but those premium cabins cost more. And so they're actually seeing their lifestyle requires a much more expensive payment structure now. And so then they have to give in other areas. And so what we're actually seeing is when you look at spending, for example, goods versus services, people are beginning to actually cut back on spending on services. And those are the things that you never cut back on. And so typically, if you're not buying a cup of coffee in the morning, you're not going to go out and buy a car in the afternoon. It just takes a little while for that to catch up across the income spectrum. And what we're beginning to see now is that upper income tier is beginning to feel pressure. They can still keep spending, but the pressure builds, and it means probably that you'll see the savings rate begin to decline, even though it probably should be rising based on where interest rates are.
And maybe we'll get a holistic look at this when we get retail sales. Oh, wait, we don't have any data coming out of the government. There is this feeling right now. You need to parse through the earnings to get a better sense of it. Has there been anything in the earnings so far that has ratified the view you have, or are there a couple of earnings reports that you're really keyed into to give you the ultimate sense of whether this really is the reality, this weakening in even the upper echelons of income earners?
I mean, to be frank, no. But I mean, that's why I get to do what I do, is because I have to make decisions based on kind of the limited amount of information that I have. What we are paying very close attention to are Federal Reserve surveys. You have to pay attention to the Beige Book. You have to pay attention to the earnings reports. But even the earnings reports can see people transiting from one kind of product to another, right? From beef to chicken, or from, who knows what people like anymore. I don't understand actually what people, I am not the average consumer, and I am readily willing to admit it. And my tastes are not everyone's tastes. So it's hard to kind of figure out which direction everyone's heading. But I do know that people are shifting from what they're used to doing. And when people are shifting from what they're used to doing, that's happening because of a reason. And that reason typically isn't good. People are creatures of habit. They like to do what they did yesterday.
If the high-end consumer is under pressure, what kind of economy are you describing? Because everyone continuously says we're in a K-shaped economy, but what you're describing does not sound like a K-shaped economy.
So when you do economics for long enough, what you realize is the top 10% spends no matter what. The bottom 10% spends no matter what. And there's the cohort in the middle is actually the one that moves around their spending, because they've got some potential for savings. And so you really have to watch the movement into and out of the savings rate, and whether or not people are feeling like they can spend money. Now, it gets complicated when inflation's present, because oftentimes the way people make up for the increase in prices, at least initially, is by cutting back on their savings rate, even if they were feeling a lot of pressure or worries about their job. And so things begin to break down, those relationships begin to break down. And so, all the people using, AI to model the economy right now, it's the big new thing. Those models are incredibly complicated. And what you're going to see is that the coefficients on the front of each variable that you can use are probably shifting around, and they might be canceling each other out. And so your whole model might be breaking down, and you're probably not going to recognize it if you're using models that are too advanced, rather than looking at individual components of what's happening and the relationships between, for example, savings and interest rates.
What are you most looking at this week, next week, when it comes to earnings season, to really understand how much that high-end consumer is under pressure?
Well, as I said, it's difficult for us to kind of look at an individual company and figure out what's going on. Upper income consumers are going to continue to spend on things like airfare. They're going to continue to go on vacation. The question is, are they going on vacation, and instead of going to Europe, they're going to California? Or instead of going to, they're taking the slightly less expensive option. There are everyone's got a lifestyle, and certain things are downgrades for certain people. And it's easy for us to all kind of laugh about it, but for these people, it's actually a serious change in their lifestyle, and it affects their perception of what it means to be rich, for example. What's it mean to be rich when you actually have to think about the airfare? Right? These are people who are not used to thinking about how much they spend on airfare. They're not used to thinking about, gee, I really like that hotel. It's in the center of the city, and it's my favorite hotel, because they have a favorite hotel in Europe, right? And now they're thinking, well, I can't afford my favorite hotel in Europe. I have to downgrade. It comes with a social cost. You don't have to cry for these people. Their lives are still really good, and probably better than a lot of people's. But, it doesn't mean that they feel as good as they used to.
Drew, banks aren't feeling as good as they used to after last week. Let's talk about the financials. Zion in the pre-market is up by 2.5%. It was the focal point of a lot of people last week, coming out and basically revealing some losses tied to potential fraud. This isn't the first time we've seen this kind of thing. We've seen some other credit issues as well. You've got the credit issues on the one side and then really robust earnings on the other side. And we saw that from Zion overnight. How are you and what is your perspective on what is happening right now in this sector?
Well, so people are nervous. If you look at credit markets, spreads are incredibly tight. So you're in this weird world where all-in yields are okay. Right, the amount you can get paid for is okay, but the actual premium you're getting paid to take risk is actually maybe a little too low. And so I think what you're seeing is just the nervousness around the economy, that we don't really understand that everything's okay. We're waiting for that next shoe to drop. Jamie Dimon, put it famously. What he's really expressing is not that he sees anything, but that he's expecting something. It's kind of like you live in an apartment in New York City, and you might never see a roach, but they're there. You know they're in the wall. You know it, right? And so you don't leave food out. You do a whole bunch of different things when you live in New York. You know, there's things that you can do in suburban New Jersey where I live that are okay because you're not going to attract animals that quickly. But if you do it in New York City, you're basically stunk. And I think the risk is that people are really focused on what they're not seeing. And the fact of the matter is with no economic data and with, earnings kind of, being okay for the most part, they're nervous that they're missing something, but they don't know what they're missing.
So, Drew, where are we? Are we in a grad house on Murray Hill infested with cockroaches? Or are we in a nice Soho apartment? What is this?
We might be trading down from a Soho apartment to something on the Upper East Side.
Okay. Does that mean you're de-risking?
We've been de-risked for a while now. I mean, to be honest with you, since COVID, there's been kind of one risk after another. And to the extent that we've been able to kind of go up in credit, we've been going up in credit. I don't think that's a surprise to anyone. And I think, everyone who's able to has been doing that. Or you've been looking to things like privates where you're taking maybe more liquidity risk, which you can more easily define. But getting less credit risk on most sides of it if you're doing your underwriting properly.
Drew, good to see you. This was a trip. Thanks. Thank you, sir. Drew Mattis there of MetLife. Equity futures this morning doing okay, just pulling back from close to all-time highs on the S&P 500, negative by close to 0.1% with an update on stories worldwide this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. President Donald Trump signed an agreement with Australian Prime Minister Anthony Albanese to boost access to critical minerals and rare earths. The deal is part of efforts to secure stable supply of critical minerals, with Australia positioning itself as a viable alternative to China. Elsewhere, Sanai Takaichi won the parliamentary vote to become Japan's first female prime minister. Takaichi has appointed a cabinet, including the country's first female finance minister. She's now preparing for diplomatic events, including a visit to Japan by US President Donald Trump next week. And Amazon Web Services says that operations are back to normal after a widespread outage that hit a broad spectrum of customers for around 15 hours. The episode disrupted hundreds of websites and apps, including the likes of Venmo, Robinhood and Apple TV. The outage was caused by a database network issue and highlights just how much of the internet is dependent on the operations of the company. And that's your Bloomberg Brief. John.
Hey, Lizzie, thank you. More from Lizzie in about 30 minutes' time. I'm next on the programme, expecting a fair deal.
I expect we'll probably work out a very fair deal with President Xi of China. I want them to do great. I want them to thrive. But we have to thrive together. It's a two-way street.
In just a moment, we'll catch up with the former White House trade official Kate Kalukowicz from New York City this morning. Good morning. Live from New York City this morning.
Abu Dhabi is, in so many ways, the city of the future, blending technology, high finance, blending livability, and then blending culture. So it's that blend that we bring here that I think is truly unique.
Morning, good morning. Check out this stock in the pre-market. Zion's Bancorp positive by 2.5%. A notable credit loss just last week. Good earnings delivered after the close yesterday. That's been the story more broadly for the sector. These flashy headlines around credit, but ultimately the earnings story's been okay. That stock at 53.31. Thursday's close, following all that mess, 46.93. We've rallied since then, Friday, Monday, and again so far this morning. The broader market this morning looks like this. Equity futures on the S&P 500 pulling back from yesterday's gains. We're down by not even 0.1% after closing very, very close to all-time highs. Under surveillance this morning, expecting a fair deal.
If they don't do business with us, I think China's in big trouble, I'll be honest with you. I don't know that they even make it. I really do. I believe that they're in big trouble, and I don't want them to be in big trouble. I want them to do great. I want them to thrive, but we have to thrive together. It's a two-way street. I expect we'll probably work out a very fair deal with President Xi of China. So most of you will be with us. It's going to be very exciting, and I think we're going to work out something that's good for both countries.
So here's the latest this morning. President Trump optimistic about reaching a trade deal with China, but maintaining he'll hike tariffs if a deal isn't reached by the November deadline. Joining us now is Bloomberg's Tyler Kendall. Tyler, good morning. We heard that word fair. What's a fair deal with China?
Yeah, hey, John, good morning. Well, it could look like a few different things. We know that the U.S. wants to see China in particular drop those export curbs that it unveiled on critical and rare earth minerals, which is why that November 1st date is so interesting when you hear President Trump reiterate his threat that higher levies could go into effect then, because November is also that timeline that Beijing has unveiled for its own enforcement actions when it comes to those export controls. We're going to have to wait and see what's going to ultimately be on the table here. We heard President Trump over the weekend outline those top demands when it comes to fentanyl, soybeans, but also worth mentioning that he did mention yesterday that he also expects Taiwan to now potentially come into these talks, though he did downplay the idea that there could be military conflict in the region and declined to say whether or not he felt that China was going to propose trade concessions in exchange for greater control of the island. We're going to be watching a few different things, but it's clear that this White House ahead of the meeting is bolstering up its position, particularly when it comes to rare earths. We know it was a key focus yesterday at the White House as the U.S. and Australia inked that $8.5 billion cooperation deal, largely seen as a way to bolster against China's grip on the critical mineral market. John, I'll also put on your radar that we got some pretty stark words from the USTR Jameson Greer yesterday as well, threatening China, saying that it should not retaliate against any foreign companies looking to help the U.S. bolster its position in these critical industries, even beyond rare earths. The USTR threatening action after Beijing moved last week to sanction 5 U.S. units of a South Korean shipping giant amid this ongoing dispute when it comes to the maritime sector between the U.S. and Beijing. John, it's just another thread to pull on as we head into this critical meeting.
Some good cop, bad cop going into negotiations. Tyler, thank you. Building on this conversation, the former White House trade official, Kate Kalukowicz. Kate, welcome back to the programme. We've talked lots about the president's asks going into these conversations, these negotiations. What do we know about what China wants in return?
Well, I think China wants lower tariffs. You know, it seems that they have been dealing with the pressure of tariffs, but that pressure is increasing from other trading partners as well. China's economy is slowing. They're dependent on trade, and I think they are struggling a bit to find some leverage in these discussions, which is why they keep going to this familiar threat to restrict rare earths.
Besides tariff levels, what is the equivalent the U.S. can use that matches China's use of rare earths in the negotiation?
It's a really great question, and I think it's why we keep finding ourselves back in this position where the U.S. threatens tariffs, China threatens rare earth controls, and we end up with a deal that resets us back at the status quo. Both sides are struggling to find leverage outside of these two areas, and I think it's why we now see both of them, particularly the United States, moving to encourage our trading partners to join the fray. We need to bring a bit more pressure from outside because we're struggling to do it ourselves.
Kate, what about barring Chinese companies that are listed on U.S. stock exchanges? Is that a third rail that the U.S. could float out there in these negotiations?
You know, it could be. The United States is increasingly looking at these so-called entity lists, these ways in which they target U.S. companies and their affiliates. So certainly that would be one possible option for them to consider. What's happened, however, is that these actions are really bringing other companies from other countries into the fray. You heard the issue related to the South Korean shipping company. We have a Dutch semiconductor caught in the middle of this. This is creating a very uncomfortable position for companies around the world, but also their sovereign nations.
I mean, Meanwhile, there was this deal overnight between the United States and Australia to secure some rare earth minerals, and this idea that maybe the U.S. can source it from elsewhere. How does that fit in some of the discussions that are ongoing with China and the U.S.?
I think it's critically important. The United States, as I mentioned, is struggling a bit in these talks because the reality is we are heavily dependent on rare earths. So you all know how our car and defense and aerospace sectors cannot operate without the rare earths from China. So in the meantime, while President Trump continues to try to reset this status quo with China, he is also ensuring that this is not something that persists. He needs to find other sources of rare earths. The deal with Australia was a really important step forward in securing rare earths from a source other than China, but of course it will take time.
It feels like the administration and actually both sides are trying to buy time to insulate one another from some of the trade partnerships that they have ongoing. And I wonder how much Taiwan is increasingly going to be used as a chip in buying time. I mean, how much could you actually see the U.S. take a step back from protection of Taiwan or some other type of outreach to China, which is something that they would desire?
Well, I think you're exactly right that both sides are seeking to buy time. I think the United States, President Trump made those comments about Taiwan yesterday. That was the first time we've heard that really publicly entered back into this discussion. He's been quite clear, that he does not support any sort of military intervention into Taiwan, but I think he's going to try to dance around and not anger China. But remember, what else is important in bringing allies to our side is in South Asia Sea and what the president is hoping to achieve with the new Japanese prime minister, I think will be very focused on Japan offering some support in the military arena.
Kate, if you're China, do you just want to wait and keep the status quo until the Supreme Court rules on whether or not IEEPA is legal or not?
Well, perhaps, although I don't think that's the wisest strategy. I mean, even if President Trump loses the Supreme Court decision, and that's not a guarantee, he has many other authorities to bring tariff pain on the Chinese. And not least of that, he has all of these export restrictions that he can continue to place. So IEEPA or not, the president certainly is not going to change his approach toward China. And I don't think the Supreme Court is going to be any sort of victory lap for the Chinese in the near term.
Having worked under Trump 1.0, could you see a scenario where he does show up for oral arguments at the Supreme Court?
Anything's possible. When he says he's going to do something, it means he's really considering doing it. So it certainly would not be a shock to me if he shows up there.
Kate, appreciate your time as always. Kate Kalukowicz there, the former White House trade official with the latest on these talks. Lots has been talked about what the president would like to see, soybeans, rare earths, all of those things. We all understand why. Ultimately, what do the Chinese want in return? Is it tariff relief? I think that's easy to give, given where tariffs are currently, super high. Or is it something else? Does it include an attitude, a shift towards Taiwan?
Potentially, and the president was clear that would be part of the discussion, but then he stopped there. He didn't want to continue on actually what the United States would be willing maybe to discuss with China when it comes to Taiwan. When it comes to the tariff levels, though, if that's really what China wants, that's why the president continues that even though he says he thinks it's going to be a good deal, he always says, but we have the threat. We could bring it up north of 100% if we have to.
Can we just get some clarity on deadlines? November, it feels like there's two. November 10th, November 1. Which one's which?
November 10th is when the current truce, that 90-day rolling period we have where tariff levels are pretty much frozen back in Geneva in May that they agreed upon, the U.S. and Beijing. That's November 10th. That's the deadline. But they're going to meet before November 10th. So the market will have a lot to adjust, knowing whether or not an agreement was made or not. November 1st is what the president said he can bring the tariffs north of 100%. So he kind of puts two of the deadlines at loggerheads with each other. It doesn't exactly make sense, but keep both in mind.
Mike Wilson of Morgan Stanley, Lisa, had this to say yesterday. It's important to see clearer trade de-escalation from both sides before declaring the all clear on the risk of a further near-term correction. This spat has once again become the story in this market over the last few weeks.
The story, though, has changed from, oh my gosh, this is going to be a decoupling that's going to lead to some sort of Armageddon in markets, to do we get a dip that we can buy and then profit on the other side? So that really has been the feeling, and that is a market shift from April 2nd.
The dips are small and they don't last long. Here's another one. We're down by not even 1/10% on the S&P 500 after closing very close to record highs in yesterday's session. Up next on the programme, we've got some earnings for you. The numbers from General Motors. This is a tough tough industry. Breaking down the figures in just a moment, Bloomberg's Craig Trudell. Plus, we'll catch up with Yahara with your morning movers. Sunrun soaring on an upgrade from Citi. That stock is up by more than 7%. From New York City, you're watching Bloomberg TV. Two-day winning streak on the S&P 500, the best two-day rally since June. Equity futures this morning pulling back just a little bit. We're down 0.1% on the S&P, on the Nasdaq down by 0.12. For the regional banks, up 4% in just 2 sessions. The bounce continued through yesterday and continues through this morning. More on that in just a moment. On the Russell 2000, equity futures there negative by 0.24%. Let's get you some morning movers 3 hours away from the cash open. Here's Yahara. Hey, Yahara.
Hi, John. We start with Core Scientific. Those shares are rising nearly 3% in the pre-market after proxy advisor ISS said CoreWeave's $9 billion takeover offer undervalues the company. Now, the deal would help CoreWeave expand its AI computing capacity, but this new recommendation adds to a chorus of worries around the deal and injects fresh uncertainty since institutional investors typically follow the advice of ISS. Moving on to Zions, this, of course, was the bank at the center of last week's credit jitters. Shares are now up 2.5%. I know you all will discuss it. So just to check on shares, up again 2.5% after the lender topped profit and margin estimates, even after swallowing that $50 million hit from alleged loan loss. And we end on the residential solar company Sunrun. Shares are up 6.5% after Citi upgraded the stock to a buy and upped its price target to $26. The call comes as the solar sector tries to regain its footing under a Trump administration that has rolled back green incentives and made a renewed push for fossil fuels. John?
Yahara, thank you. Thanks for the update. More from Yahara in the next hour. On our radar this morning, credit fears easing on Wall Street following positive results from Zions. The company reporting third quarter results that topped estimates despite a $50 million loss from an alleged fraud. Elsewhere, President Donald Trump expecting to make a fair and great trade deal with China's Xi Jinping when the two meet in South Korea just next week. Trump warning new tariffs will go into effect. No agreement is reached by his November 1st deadline. Elsewhere, General Motors shares higher. Those numbers just dropped in moments ago. GM with a beat and a raise.
Pretty much across the board coming out with expectations for the full year adjusted earnings per share at the upper range from $9.75 to $10.50 from the high range of $10. Full year auto free cash flow above expectations. You can go through. It was a really clean read across the board. What's interesting is the tenor of this letter to shareholders. I also want to thank the president and his team for the important tariff updates they made on Friday, talking about making more than 2 million vehicles per year in the United States. A big discussion here, clearly in here, focused on the political backdrop and talking about how tariffs came in lower than expected and allowed them to more effectively mitigate any of the potential ramifications.
The automakers, or rather the lobbyists for the automakers, did their job and got a reprieve. Longer lag time, longer lead time in terms of how low the tariff could be for these imported parts. And you're seeing it right here. They're talking about full year gross tariff impact improved to $3.5 to $4.5 billion from $4 to $5 billion. Not a ton, but they are working on these mitigation efforts. On top of that, the CEO also talking about the evolving regulatory framework and the end of federal consumer incentives. Now clear that near-term EV adoption will be lower than planned. So they are dealing with a number of policy issues in Washington that are impacting their everyday decisions, whether it's EVs, tariffs, or fuel emissions.
Getting a bounce this morning in the pre-market. A stock is higher by 6%. Joining us now from London with more is Bloomberg's Craig Trudell. Craig, welcome to the program. How agile do these automakers need to be when they're getting whipsawed by political cycle after political cycle?
I mean, it's hard to sort of overstate, just how significant that whipsawing has been when you go from, from the Obama administration to Trump to Biden to Trump again. We've seen fuel economy regulations and emissions rules really sort of wax and wane to this really significant degree. And you saw, Mary Barr really sort of answer the call under the Biden administration, building an awful lot of battery supply in the U.S., building also, reworking assembly lines to make electric vehicles. a lot of that is now being undone, to the tune of, this quarter they're taking a $1.6 billion charge related to undoing some of that investment. And they've warned that there may be more to come there. On the other hand, all of that investment in electric vehicles and in batteries has been costing this company money. And they've gone from, prior sort of forecasting that they would lose less, but that's, that was still going to be a drag, to now they can do away with that. They can make more full-size SUVs and pickups that, all along have been what really sort of is their, money-making product. And, oh, by the way, they don't have to pay for, compliance costs to regulatory credit revenue that flows right to Tesla's, bottom line. So this is a significant amount of relief for them, even as they have real sort of headwinds from the tariff perspective.
Craig, it's worth pointing out, Anne-Marie's done the same thing. There are positives and negatives for the auto industry. Just on the negatives, Craig, what's been the bigger challenge for this company? Has it been the tariffs or the issues and regulations around EVs?
I think, it's going to be, difficult for them to sell as many EVs as they expected. And yet, again, that may not be as big of a problem for them, at least in the near term. Longer term, that's a big question if this industry really goes electric outside of the U.S. and the U.S. becomes this sort of laggard market. I think in terms of the near term, far and away, the bigger issue is tariffs, and you're seeing Mary Barra sort of trying to mitigate that quickly by investing a heck of a lot in U.S. factories and trying to, sort of rework some of that capacity that had been dedicated to EVs to products like SUVs and pickups, and really banking on the ability that demand is going to be there, where the EV demand that everybody was hoping for didn't necessarily materialize.
Craig, on that tariff point, Anne-Marie was talking about this, that the company said that tariff mitigation actions are expected to offset about 35% of the costs due to a lower tariff base. Do we have a sense of what type of tariff mitigation actions they're taking? Is this a code for increasing prices? Is it code for laying people off?
I think, some of it is investment. I mean, just in the last few months, this company has announced $4 billion of investment in U.S. factories. And some of this is going to be incremental shifting of production from Mexico to the U.S. I think, that will cost the company some real, CapEx. And also, I think there's probably a fairly good likelihood of, the need to perhaps consider raising prices to take into account for the fact that production in the U.S. is going to be costlier for GM than making in Mexico. And yet there's also, I think, sort of an argument to be made that, maybe this is for the best for the company going forward, and that, even in an age after Trump, when you're thinking about, sort of the political risk of just how much, manufacturing has been hollowed out in the U.S. and the fact that Trump has proved this is good politics to sort of saber rattle over how much companies are making in America. Maybe it's for the best that GM sort of takes heed here and sort of undoes some of this offshoring that has been taking place over decades.
And we certainly saw that in Mary Barra's letter, where she's talking about $4 billion of investments and onshoring production plants in Tennessee, Kansas, and Michigan, talking about jobs created in New York. I'm just wondering, on the other side of the GM equation, the idea that this is an incredible company to look at because it both is at the crosshairs of a lot of domestic policy, but also can get a read on consumer demand. Do we have a sense of how much consumers are absorbing higher prices, are continuing to buy cars? Do we have a sense of how much that beat as well?
It's a great question because, on one hand, you do see really strong sales of high-end vehicles, particularly, I would say, the big SUVs that GM and Ford make. We're seeing, some of the strongest sales of bigger vehicles, like, say, the Chevy Tahoe, the Ford Expedition, than we've seen, in 20 years. And yet we're also, on the other hand, seeing, higher rates of delinquencies, signs of strain from a credit perspective. And so you do have to kind of wonder to what degree, we're seeing a bifurcation of sort of the best off consumers being able to afford going out and buying a new vehicle. And yet, under the surface is that incremental new car buyer now coming under greater strain than ever, now that we're coming off a month, by the way, which, the average price of a new vehicle sold in the U.S. just hit a record of more than $50,000 for the first time. That's a lot of money for a lot of consumers, and that's likely going to cost us, some incremental new vehicle sales where the consumer says, you know what, I'm just going to buy a lightly used vehicle instead.
Greg, when it comes to their policy out of Washington, what you hear from a lot of auto lobbyists were that at one point, given the president was striking all these deals with Asian companies, you can get a Japanese-made car at a lower tariff level than an American-made car. Given the latest reprieve some of the auto sector industry companies have gotten, are they now on par to compete globally?
It's really hard to answer that question. I think, to what degree, this is a bit of gamesmanship in Washington. You talked about the lobbyists really doing their job here. I think it is still the case that if you're a Toyota or a Honda, that, even if you've gotten some relief in terms of, the cars that you're continuing to import from Japan, I don't think anyone who's, sort of managing, operations for Toyota, Honda, or Nissan is feeling at all comfortable about any capacity that they're relying on from outside of the U.S. And so we're also seeing a lot of incremental investment on those companies to sort of go from any slack that they have in their U.S. Plants, filling that slack, addressing that with investment, localizing more production. And, to the degree that there's some relief being offered by this administration, it is still costing you more than it did, before Trump was in office to ship cars from Japan into the U.S. It's a question of how much sort of competitive dynamics are, wash out. It's really difficult to get to the bottom of, whether this is, good messaging on the part of GM and Ford in Washington as opposed to legitimately, it's you're better off shipping from Japan into the U.S.
Stock is up this morning in the pre-market by 6.5%. Just a final question, Craig. Slightly provocative one. But on EVs and the strategy on EVs from GM, this predates this presidency. And I think we have to bring that up. It's important to highlight. And here's the provocative question, Craig. Do you think in some ways the administration has done this company a favor to get them to focus on the one thing over the other when investors have been asking that question for a long time?
Yeah, I mean, I think it is a question of long term versus short term. I think in the short term, absolutely, this is going to be better off for the company in terms of investment that they're not going to have to make, spending that they've had to make in the past that they no longer will have to. The question will be for me is long term, if this is still the case that we are going to get to a place where electric vehicles are what dominates the global industry. Have we sort of benefited U.S. manufacturers for now, but sort of lost sight of the fact that for the long term, we've only made them, less competitive 10 years, 15 years from now.
Really important framing. Craig, thank you, sir. Appreciate it. Fantastic work. Craig Trudell there of Bloomberg, out of London. Don't miss our conversation later on this morning. The GM CFO in just under 1 hour's time. We're going to catch up with him at 7:30. Paul Jacobson knows a lot about working in volatile industries in his time in the airline business over at Delta and now at a big automaker heavyweight, General Motors, and they have got to be super agile because things have been incredibly volatile.
Super agile and super political. I mean, you can see that for the letter to shareholders. It talks a lot about Washington, D.C. and investments in the United States. A key question, especially given the fact that they are in these crosshairs of changing policies, how they also face off with a consumer that seems to be somewhat, shifty or difficult to really pin down. And I'm curious about both of those things, policy and the consumer.
Shifty's like shady, right?
Okay,
I know
maybe,
what you meant.
yeah, okay, maybe just, I don't know, K-shaped, U-shaped, Y-shaped.
Just throw out a letter.
X.
You know how this works on Wall Street.
That's like kind of what we were doing this morning.
Basically. Odd start to the programme today. General Motors up by 6.5% in the pre-market. Decent numbers from that company. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey John, shares of GE Aerospace higher after the company raised its full-year outlook for the second quarter in a row, thanks to the strong rebound in global air travel. The jet engine manufacturer boosted its forecast for revenue growth, operating profit and free cash flow. GE Aerospace shares have soared more than 80% this year, driven by rising demand for maintenance and new engines. And as you were discussing, shares of GM soaring after the automaker raised its full-year outlook and posted third-quarter results that topped analyst expectations on better-than-expected pickup truck sales and fresh relief from the Trump administration's tariffs on auto parts. GM will also be reducing its EV investment. In a letter to shareholders, the CEO, Mary Barra, says it is now clear that near-term EV adoption will be lower than planned. And Apple shares hit their first record this year after Loop Capital upgraded the stock to buy from hold, citing positive iPhone demand trends. Shares rose about 4%, surpassing an all-time high that had stood since December. Apple now closing in on a $4 trillion market cap. And that should be brief, John.
Lizzie, thank you. More from Lizzie in about 30 minutes' time. This from Loop Capital's Ananda Buraha saying we are now at the front end of Apple's long-anticipated adoption cycle. Dan Ives of Wedbush has been waiting for this one for a long time.
iPhone 17, have you gotten it?
Getting closer.
Really? Well,
Getting
this is,
closer.
I mean, listen, this is
the
indicator.
I checked out something in his phone yesterday and I was like, it's cooked. You got to get a phone.
Yeah, it wasn't working properly yesterday, was it? I know. All right. Up next on the programme, the Fed's easing regime.
Right now, they're almost getting a little bit of a free pass on this October meeting because both are in good shape, consumer spending and corporate credit. But this will help, I think, lower rates would help prevent maybe that next shoe to drop in terms of weakness.
That conversation up next with Earl Davis of BMO, live from New York City. You're watching Bloomberg TV. GM this morning in the pre-market higher by 8%. Really decent numbers from that company this morning. A beat and a raise, even though they've been whipsawed all year. We've talked about mitigation strategies. Seems like something's working over at General Motors.
Yeah, and you can see that actually rebound into Ford shares also up, not as much, but you can see there's a positive tone that maybe the costs aren't as great, the mitigation tactics are effective, and the consumers are still buying cars. And that actually is the key kind of aspect of all of this.
The CFO, Paul Jacobson, joining the programme a little bit later this morning, 40 minutes from now. For the broader market, welcome to the programme. Pretty snoozy so far. Unchanged on the S&P 500, negative by only 0.1% on the Nasdaq. Under surveillance this morning, the Fed's easing regime.
Ultimately, they are telegraphing that they're expecting to be lower over the next few quarters. Right now, they're almost getting a little bit of a free pass on this October meeting because there's going to be more cockroaches, right? There is going to be more credit stress. Both are in good shape, consumer spending and corporate credit. But this will help, I think, lower rates would help prevent maybe that next shoe to drop in terms of weakness.
So here's the latest this morning. Traders locking in bets. The Fed continues its easing cycle at next week's rate decision. Earl Davis of BMO seeing an increasing chance of a 50 basis point rate cut in December, saying the opaqueness and lack of transparency in private credit could be used to accelerate eases. Earl joins us now for more. Earl, welcome to the programme, buddy. So let's skip October. That's done, dusted. What's on the table for December?
Well, December, our base case is still 25 basis points. We just see the chance of a 50 has increased dramatically. And the reason why it's increased dramatically is because we've moved our possible terminal rate. We saw a terminal around 3%, slightly higher than the market, to 250. And the reason why we've lowered it so dramatically is because of, your Tricolor, your True Rand, basically private credit in general. We believe that the private credit, where the opaqueness comes in from and the ownership of it, it's usually real money, pension plans and like. So it's going to be a slow seeping credit move wider, like things wider. So it's binary whether they go 50, but we see an increasing chance of 50 in December.
Do you believe then, based on the credit risk that you describe, do you think it could lead to a broader tightening of financial conditions?
Temporarily, yes, we do believe it can. We don't believe it's systemic. And the reason why we don't believe it's systemic is, as I said, most of the holders of private credit are real money. So they could take the losses. Liabilities, they still have the liabilities to deal with. So it does have an impact on the economy, but they could take the losses. Having said that, why we see it as a possible increasing chance of 50 is they basically took the safety off the gun of 50 eases. And the thing about 50s is central banks just don't do 150. Otherwise, they wouldn't do it. So that's why we lowered our expectation for terminal to 250 by the end of 2026.
So I hate talking about cockroaches this early in the morning, but there is sort of this irony that the reason why there are these fears of credit problems is because of the prolific Fed policy that has enabled this, and the fact that monetary conditions used to be a lot lower to allow a lot of credit creation that may have overlooked a number of different underwriting standards. I'm just wondering if there's a bit of moral hazard here. The idea that the economy isn't cracking and that the Fed could respond to concerns in credit that were done in pretty easy financing conditions.
Yeah, no, we do believe, I don't know if I'd use the word moral hazard, but there's definitely inflation hazard risk because, it hasn't, our growth, despite what's going on in credit, our growth expectations have not changed for 2026. And it's because, big, beautiful bill, everything people are hearing. We think it's very supportive of growth, and growth will still be good. So then you're going to be in a very easy financial conditions market. And we think there's a big risk for inflation, but the market's not focused on that. We're not focused on that right now. We think that's a late 2026 story. One of the interesting things about inflation, though, we do get a print Friday. And if we do get a higher than expected print, the market, credit will widen, duration will go higher. We think that's temporary. We would use that as an opportunity to go longer duration and to go longer credit because we think the 50 basis point eases are very much on the table.
So if inflation is still a concern, Earl, how do you get conviction to go into long-term rates on Fed cuts that affect the front end of the yield curve?
Yeah, it's very easy. As I said, I've been in this market for 30 years. And one of the things with the market is it only focuses on one thing at a time. And right now, inflation is not the focus. So it's determining what is the catalyst to get inflation back on the radar. And there's basically two catalysts. One is employment. Employment starts improving. We don't expect to see that until 2026. And, there's no data or tier one data coming out on employment. And the second thing is geopolitical. And what I mean geopolitical is an oil price spike. That we'll see coming. And we'll be able to adjust positions accordingly. And the reason why I say we'll be able to adjust positions accordingly, in a higher yield bear market, you don't get, yields higher by 2 or 3 or 4 or 5 basis points a day. You get yields higher by 15 or 20. Once you start getting a sense of that, with the catalyst either being oil or employment, when that starts coming out, that's when you adjust duration to reflect that. Right now, it's an easing environment. There's no catalyst for that to turn. And our terminal, as I said before, has gone lower, which changes our view on duration right now.
Earl, will the government shutdown force the market just to focus on inflation? That's the data we're going to get. And what you hear from Washington is that they're expecting a prolonged shutdown, even potentially having congressmen and women come back to extend the date on the continuing resolution because they're hunkering down for a long shutdown.
Yeah, the market will focus on inflation. I think that's fair, but it won't be persistently focused on that because you'll get central banks speak once they're out of the blackout period or at the FOMC meeting, and you'll get people focusing back on employment. And that's why we see it as a buying opportunity because that focus will be very short-lived, very temporary. So yes, it will focus on inflation, but everyone's made clear that employment is the thing that the central bankers are looking at.
Oh, Davis of BMO.
Could I say one more thing?
In about 20 seconds, sir, you can, absolutely.
Yeah. Go Blue Jays, go. Thank you.
Oh, my God.
Nice.
Good luck
well
with Ohtani, Earl. Good luck. It's showtime, baby.
Is he allowed back?
Yeah.
No.
Yeah, absolutely.
I thought it was going to be more piercing insight on markets, but it was just shade for Anne-Marie.
Evidently, although honestly, you're right. Shohei Ohtani was just absolutely a monster. So good luck with that.
Showtime is going to destroy Toronto.
Wasn't that brutal?
That was Earl. I didn't know he had it in him.
Regular
a dagger
watching.
like that.
I think it's great. You're welcome back.
Killing AMH.
Oh, yeah.
Coming up on the program, Evan Brown of UBS Asset Management, Monica Guerra of Morgan Stanley, GM CFO, Paul Jacobson, and Michael Reed of RBC.
You still have a very resilient.
Around the late 70s, Vietnam was actually the poorest country in the world by GDP per capita. See where it is right now.
New Vietnam is all about youthful energy, it's about reinvention, and it's about determination.
The private sector is going to be the key driver. There will be a lot of startups coming to the market to seek for new funding.
The best thing is to feel it and see it.
Resilient and robust economy.
Profitability is still strong. Financial conditions aren't pulling back.
I think we should be very careful about cutting into higher inflation.
You're going to see the balance of risk shift back a little bit towards the inflation.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P 500 down by not even 0.1% following the biggest two-day rally since June on the S&P 500. In the bond market, twos pretty stable, likewise on tens. Across the curve at the moment, pretty much unchanged. Tens at 398, twos at 346. For the day ahead, lots of earnings. The earnings season starts to build up. We had Zions before the close, or rather before the open, yesterday. After the close. We will get Western Alliance after the close today. We've just had GM, decent numbers from them, and Netflix a little bit later as well.
What's interesting is all of these companies are telling a really positive story. I mean, really, they're all coming at different angles. But whether it's Zion's putting to rest some of the worst credit fears and the idea of some sort of big credit bubble that was busting, to GM putting to side some of the concerns about tariff-related costs really coming to the fore. The consumer's still strong from Coca-Cola. You look at all of these things and you start wondering how many people can still feel bearish on the U.S. economy and feel like it is necessary to cut rates dramatically. And yet people are saying that you can cut rates dramatically because oil prices are low. So you put this together and it feels like that melt up just seems poised to continue.
Bramo questioning the bear thesis is the scariest thing I've heard all morning.
That's the top.
Right?
That's the top.
Well, I mean,
not
honestly,
a Gucci blazer.
All I can say, all I can say is you have to wonder where is the hole that's going to get poked in all of this narrative. I mean, really, we were talking about earlier about maybe some trade down. Is that really enough to hang your hat on?
Banks are making money. Saw that across the board in the last week. Saw it from Zions just yesterday. Will we see it with Western Alliance later on? And GM, to Bramo's point, is selling lots of cars. GM numbers are beating a race.
They're selling lots of cars, and they are doing tariff mitigation efforts. And as you said, the CEO is thanking the president in terms of the reprieve the auto industry recently gotten in terms of the high-level tariffs they were paying on auto parts coming into the United States. But still, 2025 full-year gross tariff impact improved. What is the improvement? $3.5 to $4.5 billion from $4 to $5 billion. They're still paying billions of dollars when it comes to the tariff policy out of the United States.
The stock is up this morning by close to 8% on General Motors. We'll speak to the CFO very shortly. Coming up this hour, Evan Brown of UBS as a big tech rally fizzles out. Monica Guerra of Morgan Stanley as President Trump finds a new ally in the rare earth space. And the CFO of General Motors, Paul Jacobson, with a big earnings beat for the automaker. He joins us in about 27 minutes' time. We begin this out with stocks hovering near record highs ahead of a busy week of earnings and inflation data. Evan Brown of UBS seeing resilience in the market, writing until the private sector meaningfully levers up, severe negative outcomes for the economy and market are a low probability. Evan joins us now for more. Evan, good morning.
Good morning, John.
It's good to see you. I think you've touched on something really important. We haven't had the leverage cycle yet, have we?
That's right. I mean, we came into this cycle with multi-decade lows in consumer leverage and non-financial corporate leverage. And that has kind of been our North Star, keeping us pretty glass half full throughout the cycle. It's difficult to get worried about these, systemic credit risks or the consumer absolutely falling apart when you have not had that leverage build up yet.
Even Bramo questioning the bear thesis now. So
one.
I'm sure you do. Do you want to share it now or wait?
We can wait.
Okay. Do you want to share what yours is? What is the most credible case now for this bull market running out of steam?
Yeah, I mean, I think the one thing we're all wondering about is the return on investment in AI CapEx, right? And it's difficult for any of us to have an edge in this because we've never seen it before. We don't know just how transformational this technology is going to be. It could end up being an absolute game changer for humanity. It could be we're just putting out, funny videos that we've made up and sending around, and that's that. So there's a lot of money that's being spent. And there are questions to be raised about the return on that money in the data centers and on the GPUs. And it's difficult to know right now if that money is going to be worth it. But I think, we're still early enough in that cycle that it's not a major concern just yet.
Yeah, and this goes to the AWS issue yesterday and a question around, is there going to be some sort of fissure or inability to deliver on some of the promises just by some of the technical constraints that could potentially torpedo some of these valuations? How much is that part of your short U.S. dollar call?
Yeah, I mean, the U.S. dollar call is less about U.S. equities being, a major concern or an end of U.S. exceptional. It's more just that we think U.S. rates are going to continue to catch down to the rest of the world. I think the reality is that we're going to have a new Fed chair coming in next year who is going to be structurally more dovish, right? And so that might mean that as the economy recovers, should it recover as we respect, actually it doesn't need to recover that much because it's hanging in pretty well. But if the economy is picking up, the labor market's picking up, and you're going to get wages potentially rising because labor constraints are now more in effect due to immigration policy. Is that new Fed chair going to become less dovish, thinking about not cutting rates or maybe even hiking rates next year? We think the bias is that it's going to be kind of a run-it-hot Fed. And that's an environment where real interest rates remain low and the dollar weakens.
I just wonder how much a loss of Fed independence is sort of embedded in this call. The idea of go long equities around the world, go long EM, go long Japanese equities, go long U.S. equities, short the dollar, and overweight gold. How much is this a bet that the one loser is going to be debasement and you can see everything else do okay?
Yeah, I mean, I don't think it's a binary either or. The Fed is independent. The Fed is not independent. I think, you will have a dovish Fed chair who will keep rates, potentially a bit lower than Powell would have. And so on the margin, that is going to be more supportive of the kind of trades that you're mentioning. But I think if you have a chair that has complete lack of credibility, and I think that's difficult to do given it's still a committee, the decision, then that would be something that actually is more concerning. And I don't know if all of those trades, risk asset wise, would do quite as well.
You asked me about the bear case.
Here we go.
Okay. The bear case to me has probably more to do with AI and a question not necessarily of some AI bubble in some of the hyperscalers, but a question of where else has the money gone and how much do we get some sort of constraint from whether it's energy or whether it's some of these other areas that start to not come through in the way that people previously expected. How close are we to that? Or do we have a lot more to run before we even begin to find out where the pockets of excess really are?
Yeah, I mean, like I said, in the overall economy-wide, the leverage is pretty low. The capex that we've seen, the numbers are huge, but as a share of GDP, they're actually not that big compared to the tech bubble. We're talking about less than 1% of GDP compared to, getting up to 5% of GDP that we saw in the tech bubble. We do clearly have some constraints in terms of the grid and energy and the like, but maybe that's a good thing on some level and constraining some of the like overbuilding and the like. So yeah, I mean, I think this kind of AI capex cycle still has room here.
You're optimistic on China tech as a way to play the AI trade. How contingent on that trade is it that these trade talks go well?
I think it matters. We did see as soon as we had Trump's tweets on that Friday and talking about 100% tariffs that China tech, the ETFs were down 7%. So it matters for sentiment and the like over the short term. But what we have seen China do is that the more there are export controls on them, the more they kind of find their own solutions and develop their own hardware and own access to GPUs and the like. And so I think over the medium term, those kind of trade scares are an opportunity to get long China tech.
But long term, isn't the writing on the wall that these two economies, especially the technology sector, is going to be further apart from each other?
There will be a gradual strategic competition and moving away, but there can't be a complete divorce between the U.S. and China's economy. And I think Trump realizes that, and Xi realizes that there's just too much pain to be had on both sides to completely decouple. So, I think it's likely that China gives something on the rare earths, the U.S. gives something on the export controls and the tariffs, and they all realize that the downside scenario is much more severe than either of them want to agree to.
Evan, there appears to be a difference in approach, though. It's something that's been discussed on this program. In the US, these tech firms are investing as if they're confronting existential risk. Capacity, investing loads of money, NVIDIA's really benefiting. In China, by necessary means, they have to invest as if they're facing existential risk, sure, one. But two, it seems to be about efficiency over everything else. And it's interesting to me that this year we've moved on from DeepSeek pretty quickly. And DeepSeek was the efficiency shock. And then we moved on and we've gone back to whatever we're doing in the US. Is there an approach that you favour at the moment, the US versus, say, China?
I think you want to be long both approaches. And I think it's absolutely fascinating that in the US we're like, let's get to AGI and superintelligence as quickly as possible. Whereas China, whether because they can't due to the export controls or just don't want to, they're saying, let's be as efficient as possible with what we kind of have, and then let's focus on the applications of it. And so I think, that AGI race and winner takes all race is something that's kind of compelling on the U.S. side, even if, it might be carried to an extreme. But I think China's approach makes a lot of sense from a kind of efficiency and monetization side. And so be long both, and that's a good diversified way to be in the AI trade.
Evan, it's good to see you. Evan Brown of UBS, thank you, sir. Breaking things down on the tech side, the US versus China. Things are so frothy out there, even France has hit a record high. CAC 40 index surpassing a May 2024 record all-time high. This is just an English France thing. That's all it is.
It's not actually anymore. Now it's kind of the world France thing, considering the recent reputation.
Yeah, not a great weekend. We were talking about that yesterday.
Terrible weekend.
No.
Yeah, I mean, look, this has been an ongoing difficult spot in the world, and it's sort of the weak child now of Europe in many ways, and for them to reach a record high.
And they lost the crown jewels.
We were talking about the French museums.
Yes, but it actually, yes, the Louvre. Where do people sell jewels that they steal where everybody knows where they're from?
Wall Street Journal has a great story on this.
What did they say?
How difficult it is, but how quickly you have to move if you want to basically isolate, chop up these jewels and then get them out to the market.
Sometimes it's targeted, like someone's got a list and these are the things they want.
Okay, so maybe that's what it was.
For their own private collection.
Yeah.
All I know is that we'll be watching Ocean's 25 for this.
The Thomas Crown Affair.
Yes, exactly.
Fantastic.
I like that too.
Yeah, love that movie.
Yeah,
the Pierce Brosnan one, though.
Yeah, that was good.
Okay, let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. Shares of GM soaring after the automaker raised its full-year outlook and posted third-quarter results that topped analyst expectations on better-than-expected pickup truck sales and fresh relief from the Trump administration's tariffs on auto parts. GM will also be reducing its EV investment. In a letter to shareholders, CEO Mary Barra saying it is now clear that near-term EV adoption will be lower than planned. Elsewhere, shares of Coca-Cola higher after posting third-quarter sales growth that beat Wall Street expectations, a sign that consumers aren't shying away from the company's beverages despite higher prices. Coca-Cola reported organic revenue growth of 6%, topping estimates, while adjusted earnings per share also outpaced expectations. And in sports, the Toronto Blue Jays are headed back to the World Series for the first time since 1993 after a thrilling Game 7 win over the Seattle Mariners. George Springer hit a go-ahead 3-run home run in the 7th inning on the way to the 4-3 victory. They'll be facing Shohei Ohtani and the LA Dodgers, who are looking to become the first repeat champions since the Yankees in 2000. And that's your Bloomberg Brief, John.
Touchy subject over here, Lizzie. Thank you. Thanks for the update. Up next on the programme, mining for new deals.
We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months. In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them.
That conversation up next with Monica Guerra of Morgan Stanley, live from New York City this morning. Good morning. Stocks just about unchanged, turning positive briefly on the S&P 500, going nowhere on the Nasdaq, on the Russell pulling back by just 0.1%. A better tone to this equity market in the last 24 hours. Last week worried about credit risk, particularly around the regional lenders. That was Thursday into Friday morning. That fear has really subsided, particularly with decent earnings coming from Zion after the close yesterday. So the tone doing a little bit better. The focus now on earnings. GM was okay, likewise on Coca-Cola. So far, so good.
And we get Western Alliance later today also that might give another read on just how much these cockroaches are real or whether they are worries that people have. Look, right now we are seeing an economy that still is strong. And it's going to be bolstered by rate cuts. And we're not necessarily having any other data. So why wouldn't the market continue to melt up on the back of this?
That's the latest on Wall Street. For the latest down in Washington, D.C., under surveillance this morning, mining for new deals.
We're here to talk about trade, submarines, lots of other military equipment. We are discussing critical minerals and rare earths, and we're going to be signing an agreement that's been negotiated over a period of 4 or 5 months. In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them. They'll be worth about $2. But in the meantime, we're working with Australia and other countries. They're working with us, too.
So here's the latest this morning. President Donald Trump making a deal with Australia to boost America's access to rare earths. It's an attempt to counter China's dominance over the issue. Bloomberg's Tyler Kendall joins us now from Washington with more. Tyler, what precisely has been agreed between the two countries?
Yeah, hey, John, good morning. So this is actually considered to be a landmark agreement, appearing to make Australia the U.S.'s partner of choice when it comes to mineral projects. It's an estimated $8.5 billion deal that will see the U.S. and Australia jointly invest in critical and rare earth mineral mining, but also processing projects in Australia. Australia has also pledged to invest in U.S. defense companies. There are still big questions here on how concrete the agreement is and how long it will take to implement, but it is widely seen as a win for Australia, which has been trying to ink such a deal at this point for months, because up to this point, the administration has really been focused on these domestic projects. Think MP Materials or Trilogy Metals, which is why our own analysts at Bloomberg Economics say that this really does mark the first real tangible effort by the Trump administration to partner with a credible ally for help in this sector. And while the agreement itself is between the U.S. and Australia, it also is calling for this broader coalition to come together to agree on fair standards and also pricing mechanisms, all in a bid, of course, to compete with China, because that's what's really hanging over the backdrop here as we head into next week in this critical meeting between President Trump and Chinese President Xi Jinping. John, as you all know and discuss on this program all the time, China has a major grip on the industry. It accounted for more than 70% of rare earth global supply last year alone.
Tyler Kendall with the latest down in Washington. Tyler, thank you. With us around the table, Monica Guerra of Morgan Stanley. Monica, good morning.
Good morning.
China's flexed, and it's flexed, and the whole world has listened, and arguably maybe even brought the likes of Australia and America closer together. Was that a strategic mistake going into negotiations later this month?
I think what's interesting about this deal is that China's response was actually constructive on paper, right? They were actually positive, saying, yeah, join the party on rare earths. That was really surprising to me. That tells me that they're not worried. It's going to take at least 5 to 7 years, maybe longer, to have this whole initiative ramp up. A lot can change in that time. Doesn't mean that this isn't going to be a positive for the U.S. I think more, players at the table is ultimately long-term a benefit, but this isn't a zero, end game here.
So going into this meeting, it sounds like, do you think China has the leverage?
I would say that both parties, right, need each other. Right? When we're thinking about our combined economies, they don't want a 100% tariff on all of their goods. That's an issue for them. But they don't really need to worry about this move on rare earths. I think that they're going to be focusing on the other components. China is still in charge of 90% or more, right, of that market. So this isn't a now issue. It's going to make them have to focus on all these other factors that could impact their import-export relationship.
To Jonathan's point, China, though, flexing its muscles on rare earths. Is it giving the Trump administration an excuse to continue making these deals where they take outright equity stakes in mining companies?
I'm not going to speak to that, right, to that piece. I think, we were all surprised by the other outright stakes in U.S. companies. Now, as far as the mining company component, we're going to continue to see foreign direct investment, right, directed out of the U.S. in order to make these deals happen. What's going to be interesting is as we build out our relationship with Australia and China, it's like, where do we land on that final tariff number? And I think that, again, when we go back to actually the beginning of the year, that you could see something that's in that 30 to 40% range if we're going to go back to those campaign promises.
Do you think that's where we end with China, say 2026? We're kind of there now on some products.
On some products. I think, you could see an increase on those Section 301 tariffs. You could see more on, Section 232. The other piece here, right, that we have to really appreciate is the U.S.'s reliance on that tariff revenue from a fiscal policy perspective. And the fact that we're in the middle of trying to just even determine if we can have the IEEPA tariffs in place. And once we get that, it's going to be that patchwork on Section 301, Section 232, and others, right, to try to make us whole from a fiscal policy perspective. So I would say from China's lens, yes, maybe they definitely have the advantage on rare earths. Is there something at stake for them? Big time, right, when we're thinking about that relationship. But the U.S. also has to think about their fiscal policy future and trying to find that sweet spot.
So given that concern and that hang up and that, frankly, support to the debt market, how much of a risk case is it if Supreme Court overrules the tariffs that have been put on and forces the administration to scramble and cobble together another sort of regime of tariffs to plug that fiscal gap?
Well, they're already working on it. So, for example, Section 232 tariffs, you have to have studies put in place. Those prior to the shutdown were in the works. And so I think we need to get through this shutdown period in order to see some of those puzzle pieces come into play. I think markets are right to assume that there will be some tariff revenue coming in at the end of the day. It's just how much? And that's going to be the big question. If they get a negative ruling, there will likely be a market response, right? That's natural. That's going to be a normal course of action. But soon to be backfilled with all those other tariff pieces that they've been, working on heavily.
We got GM earnings earlier this morning, and it showed that the tariff mitigation plans have been working and have offset a great deal of any extra cost. In general, earnings have been pretty positive across the board. Is the takeaway that the tariffs are manageable and that, frankly, companies are adjusting and adapting, and it wasn't as big of a hit? Even if the tariffs go in and remain as such, it's not as big of a hit for the underlying profitability momentum of the United States as expected earlier this year?
I think that the full pull-through, right, of impact of tariffs hasn't been seen yet. So while I think that the GM reporting is a positive sign, that we're finding a sweet spot here, one of the key things we have to focus on is this patchwork, component of tariffs and what that's going to mean for the consumer in other areas. So while they might have found that sweet spot with GM and the auto industry, can they do it across the board when we're thinking about all goods and services? That's to be seen, and we'll get more information in November.
What channel are you and the team focused on? Prices or through the labor market? Cost cuts?
We're focusing on labor market right now, especially as it relates to the shutdown, because this is a really interesting period. Typically, when you have a shutdown, right, people get laid off and then they get brought back. And so that furlough period, you essentially get made whole. Doesn't have a major impact long term. Now, this is different because we don't know how many employees are actually going to be brought back. And so that could have an additional drag, especially when we're thinking about those inflationary factors.
Monica, good to see you. Thanks for being here. Monica Guerra of Morgan Stanley. It is different this time. We've heard that a few times already.
And also the fact that now you see Washington preparing for maybe being in a shutdown longer than November 21st. Talk about labor market data we're not going to get. Also, the clarity of that data, given the fact that a lot of these workers are not deemed essential, so they're not out there collecting these surveys. But when you have the Senate Majority Leader saying, yeah, maybe Speaker Johnson needs to bring Republicans back, so we need to extend the date on the CR, this looks like an administration and Republicans in Congress preparing for a shutdown that maybe will go past the record we had in 2018, 2019 of 35 days.
Didn't get the jobs data for September. Probably not getting it for October anytime soon. It's going to threaten November too.
Yeah, and now we're going to get a CPI, which is probably going to come in hot. So go square that with the idea of rate cuts.
And a bond market rallying into that too.
I mean, everything about this is
some real tension out there.
I mean, market only can focus on one thing at a time.
It's true. Coming up on the programme, General Motors CFO Paul Jacobson with a big earnings beat. Plus, Yahira's got your morning movers. Coca-Cola shares rising on earnings and a resilient consumer. Earnings pretty decent so far this morning. More on that in just a moment. Equity futures.
As I reach a milestone in my life, I'm humbled by my good fortune, yet well aware that I still have much to learn. And if I stay true to myself and follow my instincts, my legacy will be looked on kindly by my friends, my family, and hopefully generations to come.
Futures, your scores just about unchanged on the S&P 500. Big two-day gain on the S&P, the biggest we've seen since June. On the Nasdaq 100, just about unchanged so far this Tuesday morning. With your morning movers, let's cross over to Yahira for more. Hey, Yahira.
Hi, John. We have a slew of earnings to get through. We start with GM. Shares are rising 9% in the pre-market. It was a beat and a raise for the automaker after red-hot demand for its trucks and SUVs helped offset tariff pressure. And CEO Mary Barra is giving credit to President Donald Trump because those tariffs were not as bad as expected due to some discounts. And moving on to GE Aerospace, those shares are up 1.25%. The jet engine maker just raised its outlook for a second straight quarter, and that's thanks to booming demand for air travel, which fueled demand for new engines and maintenance work. Remember, CEO Larry Culp broke up the company, and the changes are gaining traction with those shares up 80% this year. And we end on Coca-Cola, another positive earnings story. Shares are up 2.8% after it topped third quarter sales expectations as shoppers continued buying across its beverage lineup. And it was its smaller sized bottles and cans that helped lift sales, showing that consumers are still buying but choosing slightly cheaper options as the cost of living remains an issue. John?
Yahira, thank you. The stock is higher by close to 4% so far this morning. On our radar this morning, the Vice President J.D. Vance arriving in Israel today. He's set to meet with the Prime Minister Netanyahu in an effort to shore up the fragile Gaza ceasefire deal between Israel and Hamas. The Vice President will hold a news conference at 11 a.m. Eastern Time this morning. Elsewhere, a group of U.S. banks behind the $20 billion Argentina bailout is looking for collateral. The Wall Street Journal reporting the group, which includes J.P. Morgan and Bank of America, is struggling to finalize the loan without leaving themselves on the hook. And finally, Amazon Web Services resolving all issues related to Monday's 15-hour outage, the company blaming a malfunctioning digital directory for the disruption. The outage affecting hundreds of sites, including financial services and gaming companies.
This is about a third of web services around the world, and it raises this question of how fragile some of these companies could be if they rely all on one cloud computing service. It raises a question about the systemic import of some of these companies and how much companies are willing to pay extra in order to duplicate some of those efforts and maybe diversify. A real question here about how much we're hinging ourselves on something that really hasn't been fully secured.
And right on target. You have individuals in Washington, like the Senator of Massachusetts, Elizabeth Warren, saying this just proves a point that big tech is monopoly and need to be broken up.
Sometimes it's very predictable in Washington, isn't it? Like we could write the letters for them sometimes based on who they are.
Yeah, but at a certain point, they have to have enough size and scope in order to be able to provide these services. We've been talking about the inability to fuel it through some of the energy sources, and then you're going to say they're too big. I mean, pick one. I mean, okay.
They've got the drafts ready to go.
Yeah. I mean, we just need to go back to
the
pad of paper.
From Massachusetts just has the draft ready to go. Something malfunctions in big tech. It's like send.
Monopoly one.
Yeah, every single time. All right, Amazon up by 0.2%. Let's turn back to earnings. Shares of General Motors jumping after the company beat earnings and raised guidance. The GM CFO, Paul Jacobson, joins us now for more. Paul, the stock is up by more than 9%. We'll spend some time talking about the numbers, but I just wanted to take a step back with you just for a brief moment. You've got real experience navigating volatile industries, experience in the airline business and experience in the automaker business too. You took over as CFO in the pandemic. Can you talk to us about this year, Paul? Just how agile have you and the team needed to be and how volatile have things been too?
Well, Jonathan, first of all, thank you very much for having us. It's a great day to be at GM and celebrate the success of all of our employees and partners worldwide. So really appreciate you being here today, having me today. So, you know, at the end of the day, it's just another change. I mean, since coming to GM in 2020, we've gone through COVID, we've gone through chip shortage, we've gone through tariffs, we've gone through EV pivots and so on. But what we've really tried to do is create a model that is resilient. And when you look at our balance sheet, you look at our inventory discipline and the way we've gone to market, there's a lot of things that have changed that allow us to be able to react to the world around us faster. And I think that's paved the way for us to have another really strong year in the face of a lot of macro changes.
Paul, in order to increase resilience and maybe agility, do you have to sacrifice long-term planning? Is that something that becomes harder?
Well, you know, I think what we've really done well as a team, I think, is we've kept focus on that long-term vision. So, you know, for example, while we've taken a charge on reducing some of our EV capacity, reflecting the demand that's out there, we still believe that EVs are the future. And we think that there's an opportunity for us to take a little bit of a pause in demand growth that we've seen over the last few years, structurally improve it, right-size our capacity, and make sure that we can be successful as more and more customers adopt it. So it's just an example of how we make sure that we're managing the short term within the face of that longer term vision.
So what are the big steps, Paul, that you've taken in order to remain agile, particularly with supply chains and removing any kind of direct input from China in particular? How much have you rejiggered where you get your goods?
Well, I think we learned a lot in industry from COVID and a focused supply chain that was really susceptible to individualized shocks. And I think we've taken the effort to try to make sure that we diversify our supply chain base. We've made a number of investments, for example, in battery raw materials and other materials in the U.S., in addition to the $4 billion that we've announced this year to increase our U.S. manufacturing capacity. So I think it's been a case of making sure that that's balanced. And then when we went through the chip crisis of 2021, there were some more challenges about making sure that we expand the places where some of our chips are fabricated and our supply base that we use. So this has just been part of it. I think we've learned a lot of lessons over the last 5 years that have helped us and positioned us well to be able to thrive in ever-changing circumstances like we see right now.
All of this costs a lot of money. And I'm just trying to get my head around, we've all been trying to get our head around where it comes from, these extra costs in order to rejigger supply chains, to offset any kind of increased costs that might come along the way. How much is coming from, whether it's freezing labor forces or trimming around the edges? How much is coming from higher prices on consumer vehicles?
Well, I think if you look at what GM has done, we've saved a lot of money by rationalizing our inventory balances. So we used to keep probably about 40% more inventory on the ground at our dealerships around the country. And we've cut that down. That frees up a lot of working capital to be able to invest and redeploy back into the business. But it also makes sure that we can change much more quickly to changing demand around us. So our pricing has been stabilized, and I think that's given us a little bit more comfort to invest a little bit more than what we have historically, but still making sure that we're very disciplined with our capital allocation, because we still have opportunities to pay down debt and also return capital to shareholders. So it's that balanced approach that I think has really paved the way for our success.
Paul, you and your colleagues in the industry recently had a big win in Washington, a little bit of a reprieve when it comes to the arrangement on the timeline for the tariff costs for imported auto parts. What else are you asking in terms of tariff relief from Washington?
Well, you know, I think I want to praise the administration for really listening to the concerns of the industry and making sure that they're helping us to be positioned to be really successful as one of the largest U.S. industrial producers that are out there. And the announcements that were made Friday essentially take what had already been done by the administration in the spring and expands it a little bit to be able to use those MSRP offsets on a wider variety of parts that we're bringing into the country. And as a result of that, we're were able to lower our total tariff forecast for the year by about $500 million from where we started the year. And I think it's that proactive partnership in terms of really making sure that we can remain competitive and help to drive more investment into the U.S., which we've done.
So do you expect more reprieves, especially as the U.S. goes into negotiations next year with Mexico and Canada?
Well, I think what we're looking for is a little bit of stability. Obviously, this year's been a bit of a transition year. For us, the handshake deal that we have with Korea, we're really eager to get that finalized. We do have some production of some of our lower cost models in Korea that help with some of the affordability concerns of our consumers here in the U.S. But also, obviously, Mexico and Canada are going to be really important to us. But as we look at those deals being finalized and we start to look into 2026, we think that there's actually an opportunity for us to do better in 2026 than we've done in 2025 and start to work our way back up to those 8 to 10% targeted margins that we set for ourselves before the tariffs were put in place.
Paul, just finally, can we stay in Asia and finish on China? Paul, for a long time we've said on this program, this must be the most competitive market on the planet in any industry. How difficult is it to operate in that country right now? And how much harder is it going to get in the future for US automakers like yourself?
You know, about a year ago, Jonathan, we undertook a pretty ambitious restructuring program in China with the realization that, we were probably not going to be as big in China as we have been historically going forward with the amount of just tremendous competition that's in the country going forward. But, together with our partners, we were able to restructure that business, and we've been profitable every quarter this year and look to be able to sustain that. So it's really about making sure that we're right-sized for where we are. We've got great products over there. We've got a long legacy, and we've got a good partnership that I think has really paved the way. And with that work that the team did in China, really proud of what they accomplished and think we can be sustainable there.
Paul, appreciate your insight and your experience as always, sir. Paul Jacobson there, the General Motors CFO. A beat in a race from that company. Stock is higher in the pre-market by around 9%. $80 million in China in the latest quarter. That's what GM made. That's a turnaround. That's important.
And it was actually better than expected. And they've been trying to right-size that team. It's sort of a difficult dance between both investing in that nation and also navigating this sort of tit-for-tat between the two countries at a time where both countries are really prioritizing their domestic champions.
Three completely different markets.
Completely.
Right now, you've sort of got China going one way, the US going another, Europe stuck in between, and these global players trying to work out what product sells best where.
Yeah, and exactly what the future is going to be, too. It's sort of the Craig Trudell kind of view of the world. Near term, it might make sense in one region to get out of EVs or to go into EVs. Long term, what is the ultimate goal? And that, I think, is less clear right now than it was, at least what the lip service was maybe a year ago.
GM this morning higher by around 9%. Let's get you an update on stories worldwide with your Bloomberg Brief. Let's cross over to Lizzie Burden. Hey, Lizzie.
Hey, John. President Donald Trump and Australian Prime Minister Anthony Albanese have signed an agreement to boost production of critical rare earth minerals in Australia. The two governments will invest more than $1 billion over the next 6 months for initial projects, both pledging to protect their domestic markets from unfair trade practices. Elsewhere, the US government shutdown is in its 21st day after the Senate failed for an 11th time to advance a House-passed measure to fund the government. The impact is being felt across the federal workforce. Senate staffers were told they'll no longer be paid for the rest of the shutdown, and the federal agency overseeing the US nuclear stockpile furloughing most of its workforce. And parts of the White House's East Wing have been demolished as construction begins on President Donald Trump's new ballroom. Trump announced the construction in a social media post, saying for more than 150 years, every president has dreamt about having a ballroom at the White House to accommodate people for grand parties and state visits. And that's your Bloomberg Brief, John.
Lizzie, thanks for the update. More from Lizzie in about 30 minutes' time. Up next on the programme, the last clean inflation report.
This coming CPI report, this one on Friday, is likely to be one of the better ones. What's going to be more worrisome is next month or whenever the shutdown ends, as people come back from to the BLS.
The data desert. Get a drip of water on Friday. CPI. After that, I don't know what comes next and when it drops. From New York City, you're watching Bloomberg TV. Live from New York City. Welcome to the program. Equity futures on the S&P 500 just about unchanged, on the Nasdaq going absolutely nowhere. Snoozy on the Russell too. We finally get some data later this week. CPI coming up on Friday. Under surveillance this morning, the last clean inflation report.
This coming CPI report, this one on Friday, is likely to be one of the better ones. These individuals were not actually on furlough for all that long, so they're not that far behind schedule. What's going to be more worrisome is next month, or whenever the shutdown ends, as people come back from to the BLS. Even if the shutdown were to end today and people were to come back tomorrow, they're already going to have to ask about stuff that happened retroactively.
It's the latest this morning. Investors looking ahead to this week's CPI report, an oasis in the data desert. And I tell you, based on this government shutdown chat with Anne-Marie and everyone down in Washington, D.C., might be a while before we ever see an employment report.
I mean, honestly, at this point, there seems like an incentive once it gets past November just to keep on going. In the meantime, the earnings have been pretty good, and yet people still have confidence that the Fed is going to cut rates. And this coming from Ed Yardeni overnight. I thought this was interesting. He said that he thinks that 10-year treasuries could hit 3.75%. Why? Because the Fed's cutting and oil prices. And that's the key. Oil prices keep going down, and that will keep a lid on anything potentially.
When it comes to the shutdown, though, what this administration is doing is trying to mitigate all the pressure points. There's an article yesterday in Politico. They're trying to find ways to pay air traffic controllers because, remember, 2019, that was the sticking point. That was the day Trump caved because there was a ton of flight delays going into Orlando, New York City, really big airports. And it was starting to, really hurt citizens, getting curmudgeon. They're trying to find ways because they're preparing for a protracted shutdown.
The Federal Reserve, they're essential workers, apparently, we're told. We've got that confirmed. They meet this time next week, a two-day meeting with very little economic data and the prospect of a big change at the top of the Federal Reserve in May of next year. Joining us in the last week, Governor Waller, a candidate to be the next chief of the Fed. We talked to him about leadership and his view on what's happening in the economy right now. Take a listen. How's the process going? Let's start there, and then we can get into all the other good stuff. How's the interview process going?
It's going well. As far as I can tell, the secretary has a very systematic way of going down the list and doing the interviews. As I said the other week, I had a great interview with Secretary Bessent. Talked a lot about economics, Fed policy, the Fed, balance sheet, just general stuff in the economy and financial markets. It went very quick. It was about an hour and 45 minutes. The next thing I knew, it was over. So it was a great conversation. Of course, I love those kind of conversations. I can do that all day long.
The Treasury Secretary has spoken about in the past, he wants almost a visionary, someone who looks forward, like an Alan Greenspan type, open-minded. Do you get a sense of what he means by that?
I think it's the idea of if you're looking at the data and it's always looking back at the data, the data is always kind of old and you have to think forward, like where are you going with this stuff? I've managed to do that a couple of times with thinking about this beverage curve argument back in May of 22, that we could have the soft landing earlier this summer with the weakness in the labor market, which turned out to be true. People doubted it at the time I said it. So I think I don't want to, brag, but, it's that kind of being able to look at the data and see forward where things are going. And I think that's a critical thing he's looking for.
You were certainly vindicated. The president was obviously excited about the fact the Fed finally was cutting interest rates. Have you spoken to him at all?
No, I have not.
Is that on the schedule?
I don't know. That's up to Secretary Bessent.
We're going to find out soon, hopefully. We'll talk to the man himself, the Treasury Secretary, hopefully later on in a month. I want to talk about the meeting that takes place at the end of this month as well. You were pretty clear going into the last meeting. You delivered a speech, and I believe the title was "Let's Get On With It." Yep. Are you advocating for the same thing at this meeting?
Yeah, I think it's the right thing to do. Back then, there was an issue of whether you go 50 or 25, and I argued we could do 25 and see how the data comes in. Of course, we're not getting much data. And then we can think about the next 25. So in the last 6 weeks, I don't think a lot has changed. We're not getting the public data, but all the private sector data that we're getting, Beige Book yesterday, everything we're getting is telling roughly the same story. The labor market's weak. Growth seems to be on the stronger side, which is a bit of a puzzle right now because you can't have a really strong growing economy and negative job growth or zero job growth. And, people talk about productivity, but AI hasn't had that effect yet on the labor market or productivity. It will down the road, I think, but not right away. So I don't think that's the story that's driving it. So in that case, one of these things has to move, right? Either GDP numbers start coming back down or the labor market rebounds. You just can't have growing economy and very weak labor market. They just don't go together.
In the meantime, do you just continue to reduce interest rates meeting by meeting as you wait to see what's going on? What's your overall approach? And what do you think about that?
That's exactly what I've been arguing, is since we don't know which way this is going to break, if the labor market rebounds, there's less of pressure for cutting rates. If the growth comes back down, there's more pressure for cutting rates. You don't want to make a mistake. So the way to avoid that is to go, cautiously or carefully and do 25, wait and see what happens, and then you can get a better idea of what to do. But if you've already started the process, you're providing whatever initial support for the labor market that you feel is necessary.
So we've had this obvious step down in payrolls growth. It's pretty clear. Yeah. It feels like that alone, though, might be an outlier compared to everything else that's going on in the economy. You yourself just acknowledged that. What do you think is behind that? And can that persist?
That's the thing. When I've talked to private sector CEOs about hiring, we typically get a couple things. Maybe early part of the summer, there was a lot of uncertainty about tariffs. We're just holding off on doing anything. One of the things I heard is firms were going to have to pay the tariffs. One easy way to do that is just not hire. Take all the labor savings to pay off whatever the tariffs were. So that was one thing. Then you have this AI story, which was people like, we don't know if we're going to need to hire, but we're going to wait and find out. We're not going to go out and hire a lot of people right away. So I think the tariff uncertainty, paying for tariffs, trying to sort out what AI really is going to do, kind of put firms on their back foot. Now, that's what I mean. Either they decide the AI is not going to be in the near term the big job replacement that they thought, and they're going to have to start hiring, and it comes back, tariff uncertainty goes down. All of those things could lead to a rebound. On the other hand, if GDP starts softening, it's not as strong as we think, that somehow the data is a kind of a mirage right now. Then the labor market is telling you things are just not as good as you think. Now, the financial markets are the big puzzle. I'm not the only one. How much of this is just a big boom in AI and everything else is marginal? I've kind of been arguing there's a big difference between the financial conditions for corporate America and financial conditions for Main Street America. If you're Main Street America, you're looking at mortgages over 6%, very expensive housing, car loans over 7%, credit card interest rates in the 20s. These are not loose financial conditions for American households. So when we look at the financial markets, you're seeing a lot of when people talk about credit spreads and all that. I don't think most American households care what the credit spread between corporates and treasuries are. That doesn't really, unless it shows up in mortgages. So I think there's this is one of the things that I find kind of puzzling right now, is there are just always these dichotomies between things. If you look at AI, if you take out anything data center AI related, business fixed investment is turning down. It's not widespread. All this investment is not widespread across. There's a real reallocation from kind of everything else into AI. So there's this bifurcation in so many ways that make kind of reading the economy tough right now.
How much influence do you have on one versus the other? Financial conditions on Main Street versus Wall Street. Wall Street's immediate. Wall Street's gone. It's off to the races. Yeah. Can you really influence financial conditions on Main Street?
Well, that's kind of what we hope. If you think about cutting rates, which we're doing and I think we'll continue doing, that does have a pass-through to the 10-year. And the 10-year is often the anchor for pricing mortgages. So the 10-year is down to like 4%. It's come down from 4.5%. That's about 0.5% off. If it were to continue drifting below 4%, you'll start seeing some downward pressure for certainly mortgages. Auto loans are kind of a different thing. They're trying to figure out how to deal with tariffs on the auto industry. One thing I've heard is they got rid of a lot of cheap financing that they used to subsidize for consumers. That's going to raise the cost of financing. All these things are more tightening for Main Street America. So hopefully these things, as we go on through the rest of the year, start loosening up some.
Governor Chris Waller of the Federal Reserve and potential Fed chief May of next year on the economy and what's happening. All these dichotomies, these contradictions that we've been discussing on this program, the fact you can have employment drop off the way it has, but retail sales have remained solid. The fact that people can freak out about what's happening with credit issues, but bank earnings are absolutely fantastic. We're all grappling with the same thing right now.
And it seems like the Fed doesn't have an edge on it and they don't have the data. And yet what they are seeing is a labor market that is deteriorating and the K-shape that some people reject, but other people see as being one that they need to cater to. And they want to ameliorate some of the issues for people on the lower end of the income spectrum.
And even if we get this hot CPI, they're going to look through it. They're going to continue to look through it. As you've been talking about really for months, Jonathan, 2026 is going to be so challenging for the Fed. because you're going to have to potentially deal with hotter inflation and a brand new regime when it comes to the head of the Federal Reserve.
And a bond market's rallying into it. It's a very intriguing moment in fixed income at the moment. Coming up on the programme, we'll catch up with Judy Beale of Kane Anderson Rudnick, Alicia Reese of Wedbush. We'll catch up with Lorena Urici of T. Rowe Price and the CEO of Atlas Merchant Capital, Bob Diamond.
The key point for growth really is how these tech stocks are doing.
The AI momentum in the near term looks pretty solid.
If there's any slippage in earnings from the tech guys, I think you're going to see a more wobbly, more volatile market.
This is a very what we're calling a high risk bull market.
I'm very bullish. I think the market goes to new highs before Thanksgiving.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
The opening bound 90 minutes away, live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores look like this. Just about positive on the S&P 500 following 2 days of gains on the benchmark. The biggest two-day rally since June on the S&P 500, leaving behind the credit fears for now at least. Solid earnings across the board from Zions overnight. We saw it from Coca-Cola and General Motors already this morning. Later on, we'll be catching up with Netflix, and you'll hear from Western Alliance.
Yeah, do you get the same sort of confirmation that the economy is solid, that the credit problems are less concerning than maybe some people feared, and that everything is a go? People have been looking for things to worry about, and so far the earnings have not given them that node of anxiety that they otherwise would have gotten. And what you're seeing is really resilience, both in corporate earnings, corporate expenditures, as well as in consumer spending, and that continues to be the theme.
It's a breath of fresh air as the world is trying to figure out, and investors trying to figure out what is going on with the tariff policy going into this meeting with China, as we don't have tier one data coming out of Washington except for what's going to be the CPI print. Zions is talking about that this was an incident, isolated incident, not idiosyncratic, isolated, because Jonathan hates that word. And then GM is talking about the fact that they are able to weather the storm of whipsaw changing policy in Washington, whether it's tariffs, whether it's emissions, or whether or not they're going to EV subsidies or not.
Give credit to some of these management teams. Give a ton of credit to them. Savita Subramaniam of Bank of America said it a long time ago. Never underestimate corporate America. The agility of these management teams through getting whipsawed after one political cycle to the other, from Biden to Trump, on things like EVs and tariffs, and they're still making money the way they are.
Yeah, and if you think about it, it'd be Paul Jacobson of GM in the last hour talking about how he came in during the pandemic and he had to manage supply chains during that moment, and they learned a lot from that. Look, they were also the ones, corporate America, that termed out their balance sheets in a way that the United States did not. And so they've been more resilient to the Fed rate cycle in addition to everything else. And it's the reason why people are wondering, well, even if they report earnings that are really good, does that really represent the rest of the economy? Because we have seen that split in a growing way.
Increasing agility, adaptability, are you sacrificing long-term planning? Are you at the mercy of the next political cycle? General Motors would obviously push back to some of that, but that's certainly a question we've got to ask.
We're dealing with that right now when it comes to rare earths. China has the entire control of the supply chain. They have the rare earths, they can process them, they refine them, they can ship the magnets. They doubled down the CCP when it came to rare earths decades ago. They're doing the same exact thing when it comes to EVs, which the United States is flip-flopping back and forth every 4 years. China is doubling down. At some point, China is going to say to EV car makers, GM, Tesla, who it may be, you cannot buy our battery, you have to buy our car. And they are going to become the superpower when it comes to EV car making and shipping.
General Motors this morning higher in the pre-market by more than 10%. Coming up this hour, we'll catch up with Judy Beale of Kane Anderson Rudnick with the latest market rally on pause. Alicia Reese of Wedbush ahead of earnings from Netflix later on today. And the former Barclays boss, Bob Diamond, the CEO. He's going to join us as he remains bullish on regional banking. We begin this hour with stocks flat as Wall Street awaits another round of earnings. Judy Beale of Kane Anderson Rudnick writes, investors will continue to overlook government shutdowns and geopolitical tensions as long as corporate profitability is strong. Judy joins us now for more. Judy, welcome back. You've talked about this a million times too. How impressive is the adaptability of management teams across corporate America?
I agree. I think your sentiment is exactly right. If you think of everything that has been thrown at them, it's not just tariffs, right? It's pandemics, it's supply shutdowns, it's huge swings in demand, huge swings in policy. They've really been able to put their ingenuity to good work. Imagine actually how productive they could have been if we didn't have tariffs, right? How they could have really used their ingenuity in good ways. But that's neither here nor there.
Julie, are you seeing this across market caps? Is this something that just management teams in large cap America can handle well and small caps can't? Or are you seeing this across the board?
I think we're starting to see that small caps really struggled with inflation in a way that large caps had more pricing power and they were much better able to maintain their margins. And then the bigger issue for small caps was they were not able to borrow long with, fixed rate interest. For them, they've been on variable rate debt and they've really struggled under that. I think we've reached the peak of their interest rate costs rising, and now we're in a place where they can finally start to have some earnings expansion just based off of that.
Do you think that's been priced in, or do you think that that's an upside in the months to come?
I think what's interesting, right, in this rally in small caps is that it's been very localized in super high beta stocks and stocks that don't have earnings. So that's biotech and quantum. The rest of the kind of higher quality scale really hasn't gotten to participate in this rally in small cap in the same kind of way. And so I actually don't think it's reflected everywhere in the same. But of course, I'm going to say that I'm an active small cap manager, and I'm going to say that you need to be selective.
I'm trying to square this idea that you're seeing profits reaccelerate in some small caps, that you're seeing earnings from the large caps come in better than expected, the increase in full year expectations that we're seeing pretty much across the board. And yet one manager after another is saying you have to be cautious. You have to move up in quality. You've got to be prepared for the next shoe to drop. Why? Can you square those sort of distinctions, the idea that we're seeing real optimism from the C-suite at the same time that fund managers are looking for something to get nervous about?
I think it's connected to the labor market. I think we kind of all recognize that the part of the reason why we have had such a strong economy is that we have a consumer who is so willing to go out there and spend money. And that has really propped up a lot of this economy in a really major way. If we lose that, as we're starting to see some degradation in the consumer strength at the low income, it really does ripple through this economy when so much of it is driven off the health of what the retail consumer is doing. So I think that's where people have a lot of anxiety. And look, how many articles are you going to read about a bubble in AI and not start to be a little bit worried when you have valuations as stretched as they are?
Julie, not just a bubble, you call it the AI pixie dust that is basically floating around when it comes to the stock market. What vulnerabilities are you seeing?
I was at an AI conference just this last week, and what struck me is how many panels people use the word unlimited. And the word unlimited, when you're in finance, it's a non-word, right? It doesn't really exist. Everything is limited. And if you talk to mega cap tech, they're all talking about how capacity constrained they are, how they need more GPUs, how they don't have enough power, and they don't have enough data. It was strange to me hearing all of this talk about unlimited. And it reminded me, do you remember when cell phone plans went to unlimited, right? I used to call my girlfriend, put the phone down and just watch TV with pure silence, right? Because we were so excited about unlimited. I'm worried that we're not going to have the most cogent, thoughtful, capacity-constrained minds with AI and CapEx because there's this thought that if demand is unlimited, I can do whatever I want.
So, Julie, is there a side of the story you're more comfortable with? Maybe you want to buy into the constraints and maybe fade the moves where everyone's talking about investing like their lives depend on it.
I think the thing is that the place where you really want to be thoughtful of is now that we're at this stage of the capacity investment where we're using debt, I think it's really critical to have a keen eye on valuations. It's exciting to see places where there's growth and expansion and we've moved beyond the mega cap tech. But part of the reason why mega cap tech can rally with such strength is that fundamentally those names are defensive, even if you exclude their AI benefits. That's not the case for a lot of other players that are more fringe and adjacent. So that's the place where I think you see the most vulnerability. And you see that in the pullbacks that we've had recently. People really run away from those names because they know they're not as high quality.
Julie Bill with the latest. Julie, thank you. Julie Bill of Kane Anderson Rudnick, the latest on the equity market, looking ahead to tech earnings. Next week, Microsoft, Meta and Alphabet after the close on October 29th. October 29th, a week tomorrow. Fed decision in the afternoon. After the close, big tech players report.
You know what I think is going to be more important? big tech, by far. And ultimately, this entire market hinges on growth expectations that are, to use Julie Beal's word, unlimited, given the fact that that is what we've seen, and that's the promise that people are pricing in with the multiples.
The promise without real use case. We don't see it yet. And this is why it's so uncomfortable for everyone. She calls it AI pixie dust instead of a bubble. But isn't that what is really so uncomfortable? They're spending all this money. Where's actually the use case just yet?
We keep going back to the comments of the Alphabet CEO last summer when he said the greater risk was underinvesting and not overinvesting. That really set the tone for their approach to this whole moment. Meta acting like, behaving like, investing like they're confronting existential risk. That's the psychology of the tech firms right now. That's why you're seeing them invest the way they are.
And honestly, I mean, I understand the idea of pixie dust and I understand the idea of not necessarily seeing the profitability, but every CEO you ask, none of them think it's overstated. And they say that it's just the beginning and that they're starting to figure out exactly how they can percolate it through their staff. So it does seem like they also see the promise is unlimited and they also are investing a lot of money. So we have to start asking the question, how long are you going to wait before seeing a use case while continuing to invest this kind of money? Is there sort of a tipping point at which you can't justify it anymore?
Why people are nervous? Their behaviour and their communication is a guarantee of a misallocation of resources. When some of the richest companies on the planet tell you that they believe the greater risk here is underinvesting, you should believe them. You should listen to them. And that's why people are nervous.
Well, and it is going to be something where people lose money. I mean, even the OpenAI CEO, Sam Altman, has come out and said, yeah, people are going to lose money big time and people are going to make the wrong bets. But this is what always has to happen during a technological innovation. It's making people nervous because why buy some sort of data center in the middle of a cornfield out somewhere and nowhere close to a big city if it's essentially there's going to be another DeepSeek moment that's going to bring the energy back close to a lot of these cities? Look, there are a lot of questions here. At the same time, people keep investing.
Next Wednesday, they'll mint money.
Exactly.
Just what they typically do. Maybe things will change, but that's ultimately the expectation for Wednesday's earnings reports. Equity futures on the S&P 500 just about unchanged with an update on stories worldwide with your Bloomberg brief. Let's cross over to Lizzie Burden for more. Hey, Lizzie.
Hey, John. President Donald Trump and Australian Prime Minister Anthony Albanese have signed an agreement to boost production of critical rare earth minerals in Australia. The two governments will invest more than $1 billion over the next 6 months for initial projects, both pledging to protect their domestic markets from unfair trade practices. And a US appeals court is allowing, for now, President Donald Trump's plan to send National Guard troops to Portland to counter protests against his immigration crackdown. A divided court in San Francisco lifted the order blocking deployment of 200 troops. And billionaire John Katzimatidis is urging Republican mayoral nominee Curtis Sliwa to drop out of the race to consolidate support behind Governor Andrew Cuomo. This echoes the calls from billionaire investor Bill Ackman in an effort to challenge the frontrunner Zohran Mamdani. Katzimatidis, a longtime Republican and former mayoral candidate himself, said that the move is essential for avoiding a potentially damaging outcome for the city. And that should be my brief, John.
Sort of mental gymnastics right now that I'm trying to figure out. The politics of New York City. We've got to get the Republican to drop out to help the failed Democrat defeat the Democrat that won the primary.
Yes. That's correct, yes.
Because the existential risk the city faces.
Yes, correct. You put it perfectly.
The Republicans have got to clean this up.
The Republicans...
Can you just help me out with that bit? Because that's the bit of it I'm struggling with.
Because basically they view Sliwa's not going to win, so they're basically saying they think Cuomo
Shouldn't
is
the
better
Democrats
than
address this
Mamdani.
mess?
Okay.
Is it really up to the Republicans?
All right.
Still waiting for Hakeem Jeffries, who
tweaking.
apparently yesterday said he will at some point talk about it and make an endorsement.
My point precisely.
Okay.
You know?
There's a huge split in the party, and this is
Obviously.
highlighting this. And I wonder at a certain point if there starts to be more consolidation around the center.
The Republicans are like, we prefer the Democrat, not the socialist.
Right. Okay. Up next on the programme, the Morning Calls Plus. Alicia Reese of Wedbush ahead of earnings from Netflix later on today. That conversation just around the corner, live from New York City this morning. Good morning.
We were able to lower our total tariff forecast for the year by about $500 million from where we started the year. And I think it's that proactive partnership in terms of really making sure that we can remain competitive and help to drive more investment into the U.S., which we've done. We think that there's actually an opportunity for us to do better in 2026 and start to work our way back up to those 8 to 10% targeted margins that we set for ourselves before the tariffs were put in place.
That was the General Motors CFO, Paul Jacobson, with us in the last hour. This hour, that stock up in the pre-market by 11%. A beat and a raise underlining the adaptability of corporate America. GM knocking it out of the park in many ways this morning.
Yeah, and highlighting how they're able to adapt and adjust to the changing policy landscape while also continuing to sell cars. It raises a question long term, how much companies can use upper income buyers to support their earnings, because it's the trucks and the more expensive cars that have bolstered things and allowed them to keep prices stable more broadly. And that, I think, is a key question. Are they benefiting from the K-shaped economy, and can that actually sustain things in a way for a longer period of time than people previously expected?
The stock is up by 11%. We'll have more on that stock in about 15 minutes' time. The broader market's doing okay, just about positive, following a big two-day run on the S&P 500, bouncing back from the credit scaries on Thursday. Equity futures this morning just about unchanged. That's the price action. Let's get to some morning calls. First up, JP Morgan raising its price target on Zions to 62, noting credit quality trends outside of Tricolor and First Brands are well contained. Your second call from Wells Fargo downgrading Cleveland Cliffs to underweight, calling Monday's 22% rally excess exuberance. And finally, TD Cowen reiterating General Motors as a top pick after earnings, citing positive 2026 commentary. There's that name again. The stock is higher by more than 11%. Let's stick with earnings. Netflix reporting after the closing bell later on today. Geetha Raghunathan of Bloomberg Intelligence joins us now for more. Geetha, welcome to the program. What are you and the team focused on when they release their earnings later on this afternoon?
Yeah, thank you so much, John. So I think the big number that everybody is looking for, obviously, now that they no longer disclose subscriber metrics, is the revenue growth number. So, they've guided to about 17% revenue growth. Operating margin, of course, also upwards of 30%. They've guided to about 31% or so. The big thing I think that everybody's going to be looking for is, fourth quarter guidance. Again, we expect strong double-digit revenue growth. Consensus is at about 16%. And then whether they're going to raise their operating margin guide for the entire year. I think that's, again, something that we're looking at. Right now, they're at about 30% target for the full year, whether they take that up and then provide any forward guidance for 2026.
Geetha, can we talk about subs? I know they don't emphasize that anymore, but historically, this name would be the source of massive beats and misses. Have we smoothed that out over the last few quarters, Geetha? Is this easier now to forecast?
I'm not sure whether it's easier, John, but I think definitely we've seen definitely a pattern of somewhat of smoothing. I wouldn't say it's a very smooth story, but I think what Netflix is really trying to get investors to focus on right now, instead of subscribers, is really engagement. And we saw a huge bump in engagement in the third quarter. Think of K-pop Demon Hunters. That was a monster hit for Netflix in the third quarter. By the metrics that we're tracking, it led to about, maybe about a 20% increase in engagement through the third quarter. And we expect that to be extremely strong through the fourth quarter as well. So that is really the new metric that they're trying to get everybody to focus on.
Geetha, thank you. Thanks for jumping on. Geetha Raghunathan there of Bloomberg Intelligence. Alicia Reese of Wedbush Securities has an outperform rating on Netflix and a target of 1,500, writing the following: as Netflix continues to enhance its ads business, its aim of doubling ads revenue this year is entirely achievable. Alicia joins us now for more. Alicia, welcome to the show. We talked to Geetha about it briefly. Can you just offer us your thoughts? What are you laser focused on later on this afternoon?
Yeah, I think Netflix is poised for to hit their guidance this quarter, but I do think the focus is primarily on the fourth quarter guidance and whether or not they give 2026 guidance. I think there's a lot of high expectations that they'll give 26 guidance, and I think they might give a couple metrics, but not overall guidance. The fourth quarter, though, is shaping up to be extremely strong from all the metrics that we have seen. The upfront season was really healthy for Netflix, and they have a lot working for them in terms of their partnerships, live events, and like Geetha said, that there's incredible engagement. And I think that crosses the ad tier as well as the premium tiers. And so they're positioned very well going into the fourth quarter and certainly throughout 2026 here.
We've been talking a lot about how frustrating it is for people, Alicia, to not know where their favorite programs are playing, whether it comes to sporting events or whether it comes to their favorite shows. And that's the reason why M&A has always been percolating in the distance. How much do you expect them to address M&A in 2026? We know that they kind of shunned it this year.
Yeah, I don't think Netflix is as keen on M&A generally as many others. I think Roku and Amazon, the other platforms, are doing a good job of, curating the content and working with the likes of, Roku and Amazon as a platform on just M&A spending, doing some good marketing, having the sports landing page on the Roku. I think it's really helpful. So those are good partners, and I think as Netflix continues to partner with Amazon ads, the Roku platform, and in the future, performance marketers, I think there's a lot more potential with that than pure M&A.
Are we reaching a breaking point when it comes to how much, Alicia, consumers are willing to pay right now, given the fact that prices have been going up significantly and there are so many different outlets?
I think, all the data that we have seen shows incredible resilience on this latest round of price increases, which says to us that, there's still a room. You have something for everyone on the Netflix tiers. You have premium tiers that's incredibly elastic. And then you have the ad tier, which is less so. But, it's reasonably priced. It's, $7. They increased it $1 and, there was no pushback from what we could see.
Alicia, do you think there's going to be any impact from Elon Musk earlier this month in October calling for his supporters on X to cancel their Netflix subscriptions?
There was probably some brief pushback, but our survey work that we did, which kind of coincided with that happening, indicated very little pushback. There's some churn, but interestingly, the amount of people who are planning to subscribe in the fourth quarter who had never been on the service before was higher than we've ever seen it. So I think people are planning to come on for the Christmas NFL games and for some other live content, some specialty content, and all the content that Netflix is bringing to the service to increase that engagement. And they're spending quite a bit on content. That should keep that engagement high and keep those people on the service.
Is basically all press good press? Individuals want to know what Elon Musk is talking about, why he's saying they should cancel their subscriptions?
That's a tough one. I think to some extent, yes. But the boycotts, look at Disney. That boycott, was really impactful, and that was quite damaging, I think. I don't know how long that will last for them, but it certainly did impact them. I think this is less important.
Alicia, are content decisions getting harder? Is that ultimately what we're witnessing here? The kind of content that you produce, you have to be...
ओके गाइस, इंडियन मार्केट क्लोज होने वाला है, आधा घंटा रह गया है. क्रूड ऑयल में देखोगे नेचुरल गैस तो साइडवे चला गया पूरा. क्रूड ऑयल वापस अपने ओरिजिनल रेजिस्टेंस पे, कल वाले रेजिस्टेंस पे ही आ गया. वहां से एक सेलिंग का ट्रेड था, मॉर्निंग पे हल्का सा गैप डाउन. यहाँ पर एक छोटा सा ट्रेड लगाया था बीच में, नीचे लग रहा था नीचे आएगा, एग्जैक्टली सपोर्ट पे वहां तक आया नहीं. उसमें एसएल जा चुका है, ध्यान रखना, इसलिए मैंने पहले बोला थोड़ा सा रिस्की है. 1230 हुआ, उसके बाद से कंटिन्यूसली अपसाइड ही जा रहा है. लेट्स सी ऊपर का रेजिस्टेंस ब्रेक होता है, नीचे आता है वापस ये. कोई और फ्रेश सपोर्ट, ठीक है. बीच में कोई, याद रखना, बीच में कोई लेवल नहीं है यहाँ पर एक क्रूड ऑयल में कि यहाँ पर सपोर्ट बन गया. दिस इज नॉट अ लेवल. वो एक छोटा सा काइंड ऑफ कह सकते हो पॉइंट ऑफ इंटरेस्ट लग रहा था जहाँ पर मोमेंटम होने के चांसेस है. अभी भी ये कल की रेंज ही है, याद रखना. मार्केट बिल्कुल साइडवेज है. कल रेजिस्टेंस एरिया पे था, याद होगा आप लोगों को. सेलिंग आ गई थी, नीचे बाइंग आई, फिर सेलिंग आई, फिर बाइंग आई, फिर सेल ऑफ आ गया था. उसी में फिर बाइंग आई है, वो इसी रेंज के अंदर फंसा हुआ है. मल्टीपल टाइम टेस्ट हो चुका है ऊपर का ये रेजिस्टेंस. नीचे भी अभी स्ट्रॉन्ग ही है सपोर्ट. वापस नीचे आएगा तो यहाँ बाइंग ही करेंगे. आता है तो या तो ऊपर ये ब्रेकआउट कर दे, कोई नया नीचे सपोर्ट बनाता है तो देखते हैं. 1230 ऑलरेडी जा चुका है. 7 PM यूएस मार्केट, उससे पहले 6 PM पे यूएस का इन्फ्लेशन का डेटा, बहुत इंपॉर्टेंट डेटा. अभी थोड़ी देर पहले बट एक मेजर इवेंट हुआ है. ऐसा लग रहा था कि यूएस और इंडिया के बीच में ट्रेड डील हो सकती है. और फिलहाल के लिए यूरोपियन यूनियन ने जो रशियन LNG पर बैन लगा दिया, कह सकते हो आप, सैंक्शन लगा रखे हैं, उसकी वजह से इंडिया के जो ट्रेड मिनिस्टर हैं पीयूष गोयल, उनकी ओर से स्टेटमेंट आया है कि इंडिया की जो ट्रेड पॉलिसी है उसमें हम किसी भी कंट्री, कोई भी कंट्री अगर हमें कहेगा कि किसी और से ये बाय ना करें या फिर ये करें, वो हम नहीं करने वाले। ये उनका क्लियर स्टेटमेंट है। India's trade minister stated that European Union's trade rules are causing harm to trade relation between India and the European Union, highlighting growing tension over trade policies between the two economic regions. India declares it will not accept trade conditions from partners requiring the country to sever relationships with other nations, emphasizing commitment to independent foreign policy. तो major news आप कह सकते हो। तो देखना पड़ेगा क्या ट्रेड डील हो पाती है नहीं हो पाती है। मोस्टली क्रूड ऑयल भी उसी पर देख रहा है, क्योंकि इंडिया चाइना अगर रसिया का क्रूड ऑयल परचेज करते रहते हैं कंटिन्यूसली, तो क्रूड ऑयल के प्राइस और कंटिन्यूसली डाउन जा सकते हैं। अगर ऐसा नहीं होता है, अगर कहीं दोनों ने मिलकर थोड़ा सा पॉज करा कि हम अब रशियन ऑयल नहीं परचेज करेंगे, तब थोड़ी सी फिर प्रॉब्लम आ सकती है। तब क्रूड ऑयल के प्राइस और कंटिन्यूसली सोअर हो करते हुए देखने के लिए मिल सकते हैं। जैसे परसों हमें देखने के लिए मिले थे लास्ट 2 दिन से, और कल भी मार्केट उस वजह से ऊपर गया था। तो देखते हैं क्या अपडेट निकल के आता है वहां से। जैसे क्रूड भी ना देखोगे रेंज के अंदर ही फंस गया बिल्कुल। पीएम पे यूएस का सीपीआई का इन्फ्लेशन का डेटा है, इस पर ध्यान रखना। 7 PM पे यूएस मार्केट ओपन हो जाएगा, 7 PM पे उनका सर्विस पीएमआई और मैन्युफैक्चरिंग पीएमआई का डेटा, दैट इज आल्सो इंपॉर्टेंट। लास्ट ट्रेडिंग सेशन है तो ज़्यादा रिस्क भी मत लेना। नेचुरल गैस थोड़ा सा ऊपर आता है तो एक यहाँ से सेलिंग का ट्रेड प्लान है। मॉर्निंग पे सपोर्ट पे था, मॉर्निंग पे थोड़ा सा आया नहीं एग्जैक्टली, नहीं तो यहाँ से बाइंग भी करते आ जाता। तो नहीं आया, बट एग्जैक्टली देखोगे नहीं हिट किया था लेवल को। तो गाइस बाकी डोंट फॉरगेट टू लाइक द स्ट्रीम, जिन लोगों ने लाइक नहीं किया स्ट्रीम को। हंड्रेड पॉइंट की रेंज है क्रूड की, नीचे आ जाए तो बेटर ही है अब।
just walk us through what pushed Trump over the edge here. What was in the ad that rattled him so much?
Yes, good morning, Joanna. This does seem like this ad really infuriated the president. This is an ad that the government of Ontario put out. It features Ronald Reagan talking about the potential negative impact of tariffs and what the government of Ontario, which is one of the hearts of Canadian industry, was intending to do is to target Republican areas in the U.S. to try to kind of sway Republican voters, the key constituency for Donald Trump, to convince them that tariffs may not be the greatest thing in the world. This is obviously something that really hurt their economy locally. And if we zoom out a little bit, this is just a reminder of just how rocky the relationship with Canada has been ever since Trump returned to the White House. And even though there has been a sense of stabilization recently and talks have been happening, Mark Carney was in the White House a couple of weeks ago, and that meeting seems to have gone well. That really important trade relationship, which is worth almost $1 trillion a year, is still very uncertain. And while the two leaders will both be in Korea this next week, they might have a chance to discuss this issue. It doesn't look like there's anything immediate planned, so there are a lot of questions that remain about the Canadian economy.
यहीं से यहाँ ऊपर आने के चांसेस भी कम हो गए इसके। एक स्कैल्पिंग काइंड ऑफ नेचुरल गैस में भी अगर करना चाह रहे हो, छोटा सा सेलिंग साइड का बीच में फंसा हुआ है, प्राइस ना ऊपर जा रहा है ना नीचे एग्जैक्टली। ये लेवल है, सेम वही क्रूड ऑयल की तरह ही है, लेवल पे नहीं है एग्जैक्टली, मिडिल ऑफ द लेवल कह सकते हो। यहाँ पर एक ट्राई करना चाह रहे हो तो छोटा सा एक सेलिंग का ट्राई कर सकते हो, ज़्यादा रिस्क मत लेना। काइंड ऑफ स्कैल्पिंग है, लेवल थोड़ा सा ऊपर है एग्जैक्टली, सपोर्ट भी थोड़ा सा नीचे है एग्जैक्टली। इस रेजिस्टेंस को देखोगे ना, थोड़ा सा ये पहले भी टेस्ट कर चुका है 2 बार। ये कल आया था तीसरी बार, ये चौथी बार, ये पांचवी बार। बार बार इस रेजिस्टेंस पे जा रहा है, लेकिन हायर लो क्रिएट हो रहा है यहाँ पे।
For the moment, let's talk about that meeting between Trump and Xi, because the White House has confirmed that the U.S. president will meet with his Chinese counterpart, Xi Jinping, next Thursday on the sidelines of the APEC summit as the leaders look to de-escalate a simmering trade war. Let's bring in our China correspondent, Mimin Lo, in Shanghai for us. So, Mimin, there's been so much attention. Will they or won't they? Now we have the White House confirming it's a date. But what do we know beyond that?
Yeah, I guess certainly quite a bit of relief coming through that this is finally going to happen after so much of a guessing game over the past few days. But there's a lot at stake, right? The list of things on the agenda is very long, from geopolitical flare-ups like the Ukraine war and Taiwan to things like tariffs, rare earths, the threat of more software export controls from the U.S., soybean purchase commitments, fentanyl, for example. So President Trump has said it's going to be a pretty long meeting, but he is setting up, he's setting a pretty positive tone so far, saying that everybody is likely going to come out very happy after this meeting. But I've been speaking to investors here. Honestly, many people have been telling me they're expecting the meeting to happen as a baseline scenario. They are expecting possibly an extension of the trade truce because that expires on November 10, after which tariffs could ratchet up once again unless a truce or an extension is reached. But not many people are really expecting a big sweeping deal, and perhaps this could be just a meeting for them to continue the dialogue. President Trump did say that dialogue directly with President Xi is the best way to resolve their litany of issues. Could be an agreement to continue to speak further down the road, but we'll see. Certainly there is a lot to discuss. Whether or not we get that breakthrough, I think that's hard to say at this point.
Yeah, and rare earth controls or export controls have impacts on a range of different areas or countries, jurisdictions. What are we hearing about the EU response or what they're said to be mulling as well?
Yeah, so the EU summit is taking place in Brussels, and we are hearing from sources that Emmanuel Macron has been telling his EU counterparts that the EU should be using their strongest trade tool yet to deal with China's rare earth export controls. And that tool is the anti-coercion tool. It was a legal tool that was created back during Trump's first term in power to counter any coercion from other countries. It gives them the legal tool through a majority vote of the EU countries to implement measures such as trade measures, financial measures, limiting access to EU's funding or public procurement, for example. But of course, if the EU does take these measures, it really represents a big escalation of trade tensions with China, and it could be a critical juncture where China would be then facing a multi-pronged trade war with both the US and the EU. And as you can see on this chart, China clearly dominates the rare earth supply chain, and has tremendous implication, as you said, Belle, on everything from EV batteries to consumer electronics to even chips production, because they are needed in these ultraviolet lithography machines as well. So the EU trade chief has said that they cannot accept the current situation, but they do not want to escalate, and still they're hoping to find a diplomatic solutions. But if not, we know the EU is preparing a series of trade measures by the end of the month to increase their negotiating leverage.
What happens if you are elected to government and you're Prime Minister and you find out that you can't find the savings you want? You're in the process of rethinking your economic policy.
Well, you can
had
find the
all
savings.
kinds of tax-cutting plans which are now having to be rethought. Is that because they were unworkable?
Net zero, 30 billion saved, cutbacks in civil service, tens of billions saved. But of course the big one, and the thing that I've got to think out far more fully, is the whole explosion of PIP, of disability payments.
And you are in the midst of having serious things. What I want to ask you is that people said about your plans to spend and to tax cuts that they were unworkable and they were fantasy economics. And the fact that you're having to rethink them suggests
No, I'm
that
not rethinking
they were
them.
right.
I suspect what we come back will be a lot more radical than what you saw there.
More radical in which way? More
You'll
tax
have to,
cuts or
well,
more
as I said to you
austerity?
before I came and did this, I'm going to be laying out some economic stuff between now and the budget in terms of speeches. What is for certain? I tell you what is for certain with the economy. And we touched on this right at the beginning. We touched on this place in the 80s, but we could go more broadly across the country in the 80s. There was an attitudinal change towards work, towards having a go, towards risk, which I'm pro. I'm very pro-risk. I'm very pro-individuals taking risk. I don't believe we should protect people from themselves. We should allow them to go out and have a go. We need an attitudinal change towards success, towards money, towards business, towards tax and incentives. And this is stuff that you can't necessarily write in a manifesto.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity-futures.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Lisa Mateo.
Lisa, we begin with new developments on two trade fronts. First, talks between Treasury Secretary Scott Bessent and China's Vice Premier He Lifeng are scheduled to take place in Malaysia this weekend. It's a prelude to the closely watched meeting between Presidents Trump and Xi Jinping next week. President Trump wants Xi to resume American soybean purchases, crack down on fentanyl, and back off on restrictions on rare earth exports. He says if no deal is reached, big tariffs will resume.
Actually, on November 1st, the tariff on China goes to 157%, which is record-setting territory. And we don't want that because it's not sustainable for them. They can't sustain that. We don't want them to have to go through that. So I'm meeting with President Xi, and I would say we have some big issues, like with the farmers and various other things. But the first question I'm going to be asking him about is fentanyl.
President Trump is scheduled to arrive in Malaysia, his first stop on his Asian trip, early Sunday morning.
Well, meantime, Nathan, President Trump is injecting new uncertainty into America's closest trading partnership. The president posted on Truth Social that he's terminating trade negotiations with Canada. He's citing this TV advertisement from the province of Ontario.
When someone says, let's impose tariffs on foreign imports, it looks like they're doing the patriotic thing by protecting American products and jobs. And sometimes for a short while it works, but only for a short time. But over the long run, such trade barriers hurt every American worker and consumer.
Now, that commercial features excerpts of then President Ronald Reagan defending free trade. We get more from Bloomberg's Balash Pens.
This is just a reminder of just how rocky the relationship with Canada has been ever since Trump returned to the White House. And even though there has been a sense of stabilization recently and talks have been happening, Mark Carney was in the White House a couple of weeks ago, and that meeting seems to have gone well. That really important trade relationship, which is worth almost $1 trillion a year.
Bloomberg's Balash Pens reports President Trump is accusing Canada of timing the ad to interfere with the Supreme Court case against his country-by-country tariffs. Arguments in that case set for November 5th.
Well, now, Lisa, let's turn to the latest on the government shutdown. It is now day 24 of the second longest shutdown in American history. On day 23, Senate Democrats blocked a Republican bill that would have paid members of the military and federal workers who have had to stay on the job since the funds ran out October 1st. Democrats say that bill would have given President Trump too much leeway to decide which government employees have to keep working while the standoff continues. House Minority Leader Hakeem Jeffries says all federal workers will receive pay once the government reopens.
When Donald Trump says anything, and he's the president of the United States, and there's been a willingness to engage in unlawful and illegal behavior, sometimes rubber stamped by the conservative majority on the U.S. Supreme Court, that's problematic. But the law is very crystal clear in this particular instance, and we are going to make sure that every single federal employee receives the entirety of their pay.
House Minority Leader Hakeem Jeffries spoke with Bloomberg's David Gura. You can hear their full conversation on the latest edition of the Bloomberg Big Take podcast.
And the government shutdown, Nathan, it's also delayed important economic data. Later this morning, we finally get the consumer price report for September. Bloomberg's Michael McKee has a preview.
One rose among the thorns. We actually get some inflation data from the government. The Labor Department has called furloughed employees back to work to put together the September Consumer Price Index. Social Security uses a third quarter CPI average to determine next year's cost of living increase for beneficiaries, which, by law, must be published this month. The data had all been collected by the time the government shut down on October 1st, so it's simply a matter of collating it and making the usual seasonal adjustments. Analysts expect we'll see no appreciable slowdown from August, with headline CPI rising 0.4% during the month and core 0.3%. That would put the annual rate of inflation at 3.1% for both. Another move in the wrong direction for the Fed. Michael McKee, Bloomberg Radio.
Time now for our Bloomberg Sports Update. For that, we bring in Bloomberg's Dan Schwartzman.
Thanks, Nathan. Game 1 of the World Series tonight in Toronto as the Blue Jays are hosting the Los Angeles Dodgers. LA's looking to repeat as champions, which would make them the first team to win back-to-back since 2000 when the Yankees won their third straight. Toronto hasn't been in the series since 1993. The Blue Jays send rookie Trey Yesavich to the mound versus the Dodgers' Blake Snell. Thursday Night Football, the LA Chargers dominated the Minnesota Vikings 37-10 behind 3 touchdown passes from Justin Herbert. There were just 2 games in the NBA last night, the Thunder beating the Pacers in double overtime 141-135 in a rematch of last year's final as Shai Gilgeous-Alexander scored 55 points. In Game 2, the Warriors knocked off the Nuggets 137-131 in overtime. That's your Bloomberg Sports Update.
Thanks, Dan. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager.
I'm Lisa Mateo, and this is Bloomberg.
When the rest of the markets slow down, the futures market keeps moving. Did you know that CME Group S&P 500 and NASDAQ 100 futures trade nearly 24 hours with great liquidity? In the ETF markets, volume and liquidity lessens after 4 p.m. until the next morning. But with futures, you get trading opportunities both day and night. Learn more at cmegroup.com/equity futures.
The forces shaping markets and the economy are often hiding behind a blur of numbers.
So that's why we created The Big Take from Bloomberg Podcasts, to give you the context you need to make sense of it all.
Every day, in just 15 minutes, we dive into one global business story that matters.
You'll hear from Bloomberg journalists like Matt Levine.
A lot of this meme stock stuff is, I think, embarrassing to the SEC.
Amanda Mull, who writes our Business Week buying power column.
Very few companies who go viral are totally prepared for what that means.
And Zoe Tillman, senior legal reporter.
Courts are not supposed to decide elections. Courts are not really supposed to play a big role in choosing our elected leaders. It's for the voters to decide.
Follow the Big Take podcast on the iHeartRadio app, Apple Podcasts, or wherever you listen.
ओके यहाँ पर ये नेचुरल गैस में देखते हैं नीचे आता है तो यहाँ पर एक सपोर्ट तो है, एक बार सपोर्ट लिया, दूसरी बार है ये। देखते हैं यहाँ पर नीचे दो सपोर्ट हैं, पास पास में ही हैं दोनों सपोर्ट। इंडियन मार्केट भी क्लोज हो गया निफ्टी बैंक निफ्टी को देखोगे क्लोजिंग थोड़ा सा नेगेटिव ही हुई है बैंक निफ्टी ऑल टाइम हाई निफ्टी 50 ऑल टाइम हाई से थोड़ा सा रह गया कह सकते हो फ्यूचर में एग्जैक्टली ऑल टाइम हाई को हिट नहीं किया टच नहीं किया बाकी बैंक निफ्टी भी अपने ऑल टाइम हाई से रिजेक्शन ले गया वापस फ्यूचर में भी और नॉर्मल में भी ऑल टाइम हाई प्रीवियस ऑल टाइम हाई के नीचे क्लोजिंग आई है आज थोड़ा यहाँ पर रुके कंसोलिडेशन करे मे बी देन देयर इज अ पॉसिबिलिटी कि प्राइस अपसाइड मूव कर जाए इजीली बाकी जब तक अब वापस 24,500 के नीचे नहीं जाता है मंथली टाइम फ्रेम पे तब तक है तो बुलिश ही बस कंसोलिडेशन करता है तो फिर ऑल टाइम हाई भी आ जानी इजीली ब्रेक हो जाएगा
Also, China, is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Ivani, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Ivani, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important, and also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump, and then yesterday Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the US and China are set. China saying Vice Premier Le Hefeng will meet with US officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the US and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trade czar there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Liu Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Bonnie, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Bonnie, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the U.S. and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trades are there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15 and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Liu Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Ivani, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Ivani, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the US and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trade czar there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Le Hifeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Ivani, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Ivani, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important, and also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump, and then yesterday Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the US and China are set. China saying Vice Premier Le Hefeng will meet with US officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the US and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trades are there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Liu Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Bonnie, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Bonnie, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priyam Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the U.S. and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trades are there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15 and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Le Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Ivani, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Ivani, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Vani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the US and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trade czar there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Le Hifeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Ivani, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Ivani, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the U.S. and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trade czar there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Liu Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Bonnie, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Bonnie, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup up in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil. Prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and Lukoil. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit. And we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the U.S. and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trades are there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like, there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Le Hifeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel, good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday. The big one being Tesla. The shares are sliding 3% in pre-market trade, Ivani, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Ivani, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to.
गाइस अपना एसएल ट्रेल कर लेना नेचुरल गैस में और क्रूड ऑयल में भी 6 पीएम पे डेटा आने वाला है, इंपॉर्टेंट है। यूएस का इन्फ्लेशन का डेटा है 6 पीएम पे, तो थोड़ा ट्रेल कर लेना, ठीक है, क्रूड ऑयल में भी और नेचुरल गैस में भी। ऐसा ना हो कि डेटा आने के बाद प्राइस सडनली फिर मूव करे। सो ट्रेल योर एसएल बिफोर 6 पीएम। 6 पीएम पे इंपॉर्टेंट डेटा है, देखते हैं डेटा क्या आता है। यूएस का इन्फ्लेशन का डेटा है, क्रूड ऑयल को भी इम्पैक्ट करेगा, ध्यान रखना। स्लो जा रहा है नेचुरल गैस भी। ठीक है, 20 मिनट लेफ्ट इन डेटा। लेट्स सी क्या डेटा आता है, ये इंपॉर्टेंट ही है डेटा सीपीआई का यूएस का।
Infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump, and then yesterday Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the US and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trades are there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15% and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Liu Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that there are reverberations around India and China today as they were the two main buyers of Russian oil. Brent crude up almost 5% above 65, and WTI, which had been below 60 for a couple of weeks now, 61.36. You also see a little jump up for copper. I want to point to the yen as well, a lot weaker today as those new fiscal policies seem to be getting ever closer in Japan. All right, let's get across now to London for some individual movers. And Valerie Teitel. Good morning, Valerie.
Good morning, Ivani. Let's start with the disappointment across earnings after the bell yesterday, the big one being Tesla. The shares are sliding 3% in pre-market trade, Ivani, off the back of some disappointing operating profit numbers that shrank 40% year on year. And Ivani, this is despite record sales for the quarter. It does seem like there is an issue with margins at Tesla as this EV price war heats up. They're also dealing with Trump's shift away from the Biden-era green policies, those EV tax subsidies that rolled off, and this more pivot towards deregulation of gas guzzlers, all really changing its business model, and so much that they declined to give forward guidance. There was also no substantial update when it comes to its robo-taxi business, its fully automated driving ambitions, as well as its humanoid robots. So disappointing investors at the end of the earnings call with Tesla in the red. Let's move on to IBM. Another disappointment, Ivani, on revenue. IBM shares down over 7% in the pre-market. The market is focusing on the lack now of momentum in their AI cloud growth hybrid unit called Red Hat. That's all slowing sales momentum, and maybe some questions now posing on whether IBM is best suited to benefit from this AI trade. Lastly, let's end with some stocks in the green. That's quantum computing. We had a source article from the Wall Street Journal saying that the U.S., the Trump administration, is considering taking direct equity stakes in some of these quantum computing names in order to for them to receive federal funding. So we're seeing the likes of IonQ up nearly 14%, Rigetti up nearly 12%, and D-Wave up 15%. Now note, this is a very volatile market. These shares had been depressed in the last few weeks, but we're definitely seeing a decent pickup in pre-market this morning.
Yep, they for sure had seen a sell-off along with the rest of tech. Valerie, thank you so much. Valerie Teitel there. And later this hour, we'll look ahead to the Fed's rate decision next week with JP Morgan's Priya Misra. And RBC's Tom Narayan will join us to recap Tesla's earnings results. But first, let's get back to oil prices jumping after the U.S. announced sanctions on Russia's biggest producers, including Rosneft and LukoIl. That's as President Trump ramps up pressure on President Putin to end the war in Ukraine. Now, across the Atlantic, the European Union has also adopted fresh sanctions to target Russia's energy infrastructure. For more, Bloomberg's oil strategist Julian Lee joins us now. So, Julian, this oil, will it get to market, or does Russia significantly have its exports deteriorate because of these moves?
Well, I think that's the that's the really big question, and I'm not quite as convinced as some of the traders seem to be that this oil will get to market. Indian refiners are telling Bloomberg reporters in the country that this really for them is a game changer. They are very worried about access to the US banking system, US capital markets, and so US sanctions have a potentially big impact on them. Many of them are seeing that their purchases of Russian oil could go close to zero. That means that somebody else is going to have to take those barrels, and I don't see where they're going to go. China is already the biggest buyer, and I think they are going to be very concerned about becoming overly dependent on Russian oil.
Yeah, I mean, speaking of which, we know that the president is going to ask China to maybe limit or do something about its imports of Russian oil when they meet later this month, which would be a fresh, turn of the screw on Russia. The president is really changing his tone here, isn't he?
He is. Obviously, we will all wait and see the longevity of this. This is a president who is known for changing tack. And just as he's suddenly put sanctions on these major Russian oil producers and exporters, they could be removed again. So I think the longevity of this move is going to be important. And also the amount of pressure that he's willing to put on India and China to reduce their purchases of Russian oil. Those will both be very significant.
Yeah, absolutely. I mean, just last week we were preparing for another meeting between Putin and Trump. And then yesterday, Trump said he didn't want a wasted meeting. Julian, thank you so much for joining. That is Julian Lee. Well, the next round of trade talks between the U.S. and China are set. China saying Vice Premier Le Hefeng will meet with U.S. officials in Kuala Lumpur for 4 days starting tomorrow. Time is ticking on a new trade deal with the truce between the two nations set to expire November 10th. Bloomberg's Brendan Murray joins us now for more. So, Brendan, we had more headlines about software exports from the United States to China in the last few hours. Are these new? Is this another sort of shot across the bow towards China?
Yeah, exactly. So this is the fifth round of the talks between the world's two largest economies as they try to resolve and sort of tamp down the tensions in their trade disputes. And it's probably the one with the highest stakes compared to the previous four. Both sides are coming in an escalatory posture. You had China tightening its control of rare earths a few weeks ago. Now you have the U.S. saying we're gonna tighten our own export controls to restrict technology flowing to you. So we basically have both sides saying, what are you going to give me in order for me to loosen my controls? And it's not really clear what that could be. Secretary Bessent and his counterpart this is basically a meeting to prepare for the summit between Trump and Xi and to see if they can announce some sort of deal or at least extend the ceasefire that expires on November 10th. So there's really a lot at stake here. It could go either way. We could see, most likely we'll see some sort of temporary agreement to postpone any sort of escalation. But the tensions are high, and you could see both sides coming out of this with some sort of effort to keep the punishing controls that they have on each other.
Yeah, well, we're certainly experiencing a lot of whiplash. I mean, India's Prime Minister Narendra Modi will now be skipping the ASEAN summit, and we had just been talking yesterday about a meeting with President Trump. So what does that mean for those trade talks between the U.S. and India?
Yeah, well, it means they're not going to lead to any deal for the next several weeks. Of course, as you and Julian discussed, you have the complication now of the U.S. sanction on Russian oil. Any sort of agreement with Modi now, could be bad optics for him if he signs a trade deal with Trump on his trip through Asia. So the expectation is that the talks with India are still ongoing. Maybe this gives India cover. The sanctions do to stop buying Russian oil, and they can get to some sort of deal where those high tariffs on Indian exports to the U.S. are lowered, but nothing imminent on the U.S.-India trade deal front.
All right, Brendan, thank you so much. Brendan Murray, our trade czar there. Now to other top stories trending on the terminal this morning. A fiery ending to what had otherwise been a pretty ho-hum Tesla earnings call. Elon Musk spent the end of the call pleading to investors to approve his $1 trillion pay package. Shareholders will vote on it at Tesla's annual meeting November 6th in Austin.
The point is, I just like there needs to be enough voting control to give a strong influence, but not so much that I can't be fired if I go insane.
Well, a warning from McKinsey. According to a new report, banks facing a hit of as much as $170 billion to their profits if they don't adapt their business models to respond to customers turning to AI to optimize their finances. The banking sector is set to make cost savings of between 15 and 20% from AI, but competition will likely erode the gains. And record Wall Street bonuses. According to the New York State Comptroller, profits at 130 firms on the New York Stock Exchange reached $30.4 billion in the first half of the year and will hit the highest level on record if that pace continues. That performance is expected to boost the bonus pool of those on Wall Street. Coming up, the three mayoral candidates make their last pitches to New York City voters with 2 weeks until Election Day. We recap last night's debate next. This is Bloomberg. It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Turning the screw, oil surging as the Trump administration makes a U-turn, announcing sanctions on Russia's biggest oil producer, citing a lack of commitment to peace in Ukraine. China's Vice Premier Le Hefeng will meet with U.S. officials Friday for the next round of trade talks as U.S. weighs export restrictions on software to China. And Tesla disappoints with subpar earnings and margins as tariffs take a bite. Intel and Ford among companies on deck today. So it was a very choppy trading session yesterday. The S&P ended the session down 0.5%. The Nasdaq 100 was down 1% at the close, but it had been down as much as 1.9%. So a lot of churn in yesterday's session. Headlines vying for attention and so on. We'll see what happens today now that we have these new oil sanctions. It's certainly having an impact on the oil market. But is the tide turning a little bit in terms of what Russia and the US are going to say to each other and do next? Also, China. Is the tone getting better or worse? It's actually quite difficult to know. Let's take a look at the Treasury market because we are seeing a little jump up in yields. We have the 2-year at 3.46 now. The 10-year in particular, it's hovering very close to that 4% mark again. The 30-year yield, though, staying well below 4.60 at 4.57. And then take a look at the oil picture because that's one of the main stories, obviously, that we're going to be following. Look, analysts say the crude from Russia will get to market. It will just take longer and it might be a little bit more expensive. But you can be sure that
गाइस डेटा आ गया है 6 PM पे यूएस इन्फ्लेशन का 7 PM अब सीधा यूएस मार्केट ही ओपन होगा एंड इफ यू लुक एट द यूएस सीपीआई डेटा तीनों के तीनों कोर सीपीआई का मंथ ऑन मंथ सीपीआई का मंथ ऑन मंथ और सीपीआई का ईयर ऑन ईयर बेसिस पे जो डेटा है वो जितना फोरकास्ट था उससे कम आया है मतलब यूएस में जो इन्फ्लेशन है वो कम हुई है तो इन्फ्लेशन कम हुई है यहाँ पर देख पा रहे होगे फोरकास्ट 0.3% का इन्फ्लेशन था कोर सीपीआई का आया है 0.2 मतलब फोरकास्ट से कम आया है तो इट इज बेरिश फॉर यूएस डॉलर पॉजिटिव फॉर गोल्ड एंड सिल्वर तीनों के तीनों डेटा सेम ही आए हैं यूएस इन्फ्लेशन का डेटा देखोगे
tenths on the month. Apparel, though, a big rise, 7 tenths during the month after 5 tenths the months before. Services were up 0.2% during the month, and goods up 0.2%. So inflation restrained, Fed is a go.
Mike, that is what we call the right kind of downside surprise on headline and on core. Headline inflation comes in at 0.3, the estimate in our survey 0.4. Core CPI month over month comes in at 0.2, the estimate in our survey 0.3. At the back of that, push you through the bond market, 2-year, 10-year, 30-year bond yields declining as you might expect, particularly at the front end of the curve. We're down by 4 basis points to 345. Take the bond move, push you through foreign exchange. What have you got? Some dollar weakness, euro dollar up to 116.40. And ultimately, with that kind of yield yield move, equities up by 0.7% on the S&P 500 and some outperformance, some big outperformance on small caps. Bramo up by 1.6%.
That was exactly where I went to, this idea of how much this is going to help some of the smaller and mid-sized companies that really have been more significantly affected by higher rates. This is a clear signal to the Fed that they can go for 25 basis points. My question is, how long before we start to see some analysts saying this means they can go 50 or something of that nature? Not clear that that's exactly what's being priced in, but definitely a sign of relief.
And Mike, I'm sure you've got another take on the data, but I've got another question on the Federal Reserve, and if we can deal with that up front. I think for many people this data this morning wasn't going to change whether the Fed will or won't go next Wednesday. Does it give them a little bit more space to guide beyond October when the chairman sits in that news conference and addresses you directly?
I don't think it really does, in the sense that we are flying blind right now in the month of October, and when they get to December, they may not have any October data, and who knows whether they'll have November data. So at that point, they're really not going to be sure of where we are with inflation, and they're certainly maybe not going to know within a reasonable guess of what happens with labor market. So I think you have to assume that December is going to be up in the air until at least we know when this shutdown ends and data starts coming back in again. Things we want to note here for you in terms of prices. Rent of shelter, we're talking about here the overall housing numbers that play into services, up by just 1.4%. No, I'm sorry, I'm reading the wrong one. By just 0.2, which is good news because shelter has been coming down. Owner's equivalent rent up just 0.1. I don't have the comparison, but that is the lowest in many, many, many months. And remember how last year we were always worried about when would housing come down. So as I mentioned, we're also seeing gasoline prices were up a lot. Food prices up 0.2. Food at home up 0.3. So still a little bit of inflation at the grocery store. Motor vehicle insurance down 0.4. That was one that was rising big. So it looks like we've seen a kind of a rollover in inflation. Airline fares up just 2.7%. They were up 5.9% in the month of August. So inflation has rolled over, at least in the month of September, and this is good news for those who want a Fed rate cut.
Mike, I feel like we're out of practice. It's been so long. Mike McKee, thank you, sir. Some economic data to go through. Yields take another leg lower at the front end of the curve. We're down by 5, another leg higher in the equity market. You can see that across the board down the S&P, on the NASDAQ, on the Russell. If you turn briefly to foreign exchange as well, just a little hint of dollar weakness and some euro strength. Data out of Europe was pretty good as well this morning. Eurozone PMIs, one of the best reads we've seen going back to 2024. Look out for the US PMIs a little bit later on this morning. If you are just joining us, a downside surprise on headline and core CPI, unlocking some lower bond yields this morning, going into that Federal Reserve decision next Wednesday. Joining us now to discuss is Tiffany Wilding of PIMCO. Tiffany, welcome to the programme. Is this a source of comfort for this Federal Reserve next week?
Well, I mean, I don't know. I mean, I think certainly it's good news on the inflationary pressures, but the argument that we've been making, which I think is symptomatic of this report, is that the economic adjustment that we're seeing to tariffs is coming through less on a price adjustment, and instead companies are finding ways to defend margins by offsetting other costs. And I think the fact that you saw another headline this morning around a large retailer, that is doing, some layoffs at the, kind of higher executive levels, that's just in our minds symptomatic of that they are finding these other ways to cut costs. So, what that means for the Federal Reserve is that there is some downside risk to the labor market here. So I don't know that they should be, completely, taking a sigh of relief here. We need to see the labor market data, obviously, when the government reopens. But as you and Mike mentioned, we do think they cut in October, and of course the median expectation from the Fed is that they'll cut again in December.
How much of a forward look can they give us at the October meeting, Tiffany? When Chairman Powell goes into the news conference, he doesn't have much visibility on anything right now. How much guidance can he offer us for December and beyond?
Yeah, I mean, I think it's incredibly tricky, and I'm not sure that they will offer a lot of guidance. I think they're going to say that we don't have a lot of data to go on here. There's private sources of data, but even there, it appears that some of the Fed's, the previous sources of private data that they got in the labor market, maybe they're not getting anymore. So it is a much more tricky situation for the Fed. They're going to be looking at markets and and I think the news flow in order to kind of figure out what's going on here. And I think it's going to be really tough for him in terms of guiding any further.
Tiffany, a lot of people have been looking at the housing market in particular as a sign of disinflation going forward. And one thing that Mike pointed to was owner's equivalent rent. Looking at this, it just looks like inflation owner's equivalent rent has fallen to the lowest pace going back to 2021 with a pretty big decline, which is one thing that's giving fuel to some of the enthusiasm in bond markets this morning. I'm just wondering how big of a tell that is for you.
Yeah, no, I mean, I think that the normalization in housing and rents is something that, the economics community has expected for some time. And I would argue that it's delayed. And it was delayed because we saw a really big immigration boom over the last couple of years. Now, obviously, that the immigration policy has taken a big U-turn, you're not seeing those tailwinds of additional population coming into the United States needing housing. And as a result of that, you're seeing rents cool off quite a bit. So I don't think it's that surprising, but I do think it's, one of the things that should give the Federal Reserve comfort, that they, that inflationary pressures outside of, some tariff-related pass-through are pretty benign at this point.
Given the fact that we're seeing no inflationary pressures to note that really are even beyond what people expected, and you are getting these announcements, you were talking about the Target announcements without naming them, laying off about 1,000 people and removing 800 jobs from their listings. We also saw GM announcing a round of job cuts this morning. I'm just wondering how much these are just anecdotes and typical versus something that really is a softening that is behind the disinflation as well as the concerns that the Fed has about the labor market.
Yeah, I mean, again, we think it's very symptomatic of how we see the economy that's ultimately adjusting to tariffs. I think the really big surprise this year coming into the year and thinking about tariffs is that you'd get some price level adjustment. And there's multiple ways that companies can adjust to this. And I think what we're learning is that, they're not fully adjusting prices and that they're trying to offset costs in other ways. And I think the fact that you're seeing this AI investment boom and some broadening out just in the diffusion of AI technology, companies are hoping to get some labor-saving cost benefits here. And investing in capital because of the tax, the new tax law, the One Big Beautiful Bill Act, gives you pretty big, tax incentives with upfront capital expensing. So I think companies are really just making this adjustment, more so through the labor market. And in terms of the Federal Reserve and their mandate, that just suggests that they have more room to start to, to adjust policy back towards neutral. If they do cut 2 more times this year, they would be, 3.5, which is kind of the upper end of the range of neutral estimates that they have. And so getting back there and making that adjustment, seems very reasonable to us, just given the information that's coming in.
Tiffany, when you say labor-saving cost benefits, should we all be expecting more layoffs then to be announced in 2026?
Well, I mean, I think the economy will need to go through an adjustment as a result of, these transitions that we're seeing, whether it be, the policy-related transitions this year or, this tech, sort of tech transition that we're seeing. It does seem like AI is moving pretty quickly. I think it's still uncertain how much productivity gains we'll actually get and how that will, save costs for companies. But I think we are starting to see the effects of that. I think you could start to see it at announcements, layoff announcements as well at some of the tech companies. It is displacing some workers. Now, I think what's harder to understand is, eventually it will also create new jobs. And how quickly will that happen? And what those new jobs will be is more difficult to forecast. But I think at least in the near term, you will see some labor-saving, displacement here. And the companies need that and are forced forced to try to get it because they have more tariff-related costs.
Tiffany, thank you. Tiffany Wilding there of PIMCO. It's why so many on the committee right now are prioritising the one side of the mandate. To take stock of things, though, unemployment in the low fours, headline inflation still at 3%. There's a lot of people out there still asking the same question. There's some hawks on the committee. They'll say the same thing. What's the rush? Why go again?
And the Fed's still going to cut rates, so they can ask questions all that they want. And ultimately, how they justify it is going to be that we are at restrictive areas, so we have some room to have these insurance cuts. You are asking the right question about long term. Can they signal beyond that level, those easy insurance cuts, about how far they can cut into just what a lot of people can't determine is the neutral rate?
It gets harder, that's for sure. Equities roll over just a bit after spiking, still positive by 0.5%. In the bond market, off the back of the right kind of downside surprise on the CPI report, yields are a little bit lower, but off session lows. We're down 3 or 4 basis points now on 345. Let's give an update on stories worldwide with your Bloomberg brief. Here's Yahara. Hey, Yahara.
Hi, John. President Donald Trump has terminated trade talks with Canada. The president posted on Truth Social this morning. Canada took a big buy ad saying that Ronald Reagan did not like tariffs when actually he loved tariffs for our country. Ontario Premier Doug Ford responding on X, writing, Canada and the U.S. are friends, neighbors, and allies. President Reagan knew that we are stronger together. Meanwhile, this just in, General Motors is laying off more than 200 workers, mostly affecting tech center employees in Warren, Michigan. The cuts come just after GM raised its profit guidance for the year earlier this week. The news also follows a post in the last hour from President Trump, who touted the positive impact of tariffs on the company. Shares are up nearly 1%. And the Trump administration is preparing a proposal to open almost all U.S. coastal waters to new offshore oil drilling, despite opposition from state governors. Sources telling us here at Bloomberg that the draft plan for selling oil leases includes waters near the southeast U.S. that President Trump tried to close off while campaigning for re-election 5 years ago. That's your Bloomberg brief. John?
Yahara, thank you. Appreciate it. Thanks for this morning. Up next, we'll catch up with David Kelly of JP Morgan Asset Management as we break down the latest CPI data. Plus, Danny's got some morning movers. Beyond Meat, up on a revenue beat. That stock is higher by 11%.
The lesson is that 1.5 is not the end of it. So if we look at last year, you mentioned one of the metrics, one of the temperature databases went above 1.5, but there are about 4 or 5 others that still are below 1.5 for now. The IPCC has sort of projected that by early 2030s or thereabouts, all the other databases will consistently be above 1.5 for the entire year. So we still have that little bit of wiggle room, but I think some of the messaging is a bit mistaken. It's not that we passed 1.5, we're dead in the water. No, the assessment of the science has showed that if we go to net zero by 2050, there is still a chance of us peaking and coming back down to 1.5 or below by the end of the century. There is still hope to actually get back down to something of a livable world if we get our act together.
in case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
The open about 43 minutes away, and we're looking to add some weight to this rally this morning. We're up by 0.6% on the S&P, on the Nasdaq up by 0.9, on the Russell. Small caps up by 1.6 following a downside surprise on inflation data. Up on the week, up on the session with your morning movers. Here's Danny. Hey, Danny.
Hey, John. It's the poster child for the meme stock rally renewed. Beyond Meat, the company that's up more than 300% so far this week. Finally, some fundamentals to trade on. Beyond Meat reporting earnings, EPS coming in better than expected. It's a company that, again, fundamentally has been struggling, giving a pullback in some of the meat alternative products that they've been offering. But the earnings come in better, so you get this renewed bout of buying, up 11.6% in the pre-market. Shorts still exist in this company, so there still is more room for a short squeeze. Elsewhere in earnings, the big one after the bell yesterday was Intel, and what a result it was. A sunny outlook from Intel, a return to profitability given all of their partnerships, but it was the old school business, not building out AI. It was PCs that seemed to really be benefiting them. We also got earnings after the bell yesterday from Deckers, not so sunny. Shares falling 13%, the maker of UGG and Hoka, cutting their second half outlook. The CFO getting on the call and saying it's a consumer that's a little bit hesitant. They feel the price raises from tariffs, and they are pulling back because of it. They did say they had about $150 million impairment charge from tariffs, but they are working through that, trying to mitigate some of the costs. John.
Danny, thank you. Looking forward to the coverage. We got a consumer problem or a Deckers problem?
I think it's a Deckers problem.
Based on the year so far, without a doubt.
People are kind of, I think, over Uggs, and they're not buying Hokas. I think Hoka, the top was when Biden wore a pair of Hokas with his suit.
I said the same thing at the time.
It just wasn't that cool.
Not great for the brand. Once you start becoming that, like for older people with problems with their feet.
Like when boomers were starting to wear Skechers, it was over.
It was over. The kids aren't going to be interested. Equity futures on the S&P up by 0.6% as we count you down to the opening bell. Let's get you the trading diary. Some more data later. Look out for some PMIs, UMich consumer sentiment. Next week, though. Wow, next week. Next Wednesday. Federal Reserve interest rate decision, Chairman Powell news conference, earnings from Microsoft, Alphabet and Meta. On Thursday, the president meets the Chinese leader in South Korea, and more tech earnings from Apple and Amazon. Next Wednesday and Thursday, absolutely humongous. This morning, the focus is on inflation. CPI coming in below expectations. Traders adding to bets for 2 more rate cuts this year, including 1 next Wednesday. David Kelly of JP Morgan Asset Management joins us now for more. David, let's start with the inflation data. Is 3 the new 2? And is it going to stop this Federal Reserve from cutting interest rates?
Well, I think the Fed's going to keep on cutting rates. It's generally a better than expected report, but I think what it really shows is we have a K-shaped economy, and it's sort of a K-shaped CPI report. The thing that really jumped out at me is, first of all, rental costs coming down. There's, we've got a big change in demographics here, and rental inflation is just going away. You also saw used vehicle prices fall. I thought that was pretty interesting. And then the big thing here is core goods prices outside of food and energy. That's the stuff that should be hit by tariffs. But that's only up 0.2%, up 1.5% year over year. It is clear that mainstream retailers don't believe they can pass on the tariff increases right now, and that's what's making this inflation rate a little bit tamer than people feared.
David, doesn't this just justify what the market's already sussed out, which is that inflation fears were overblown earlier this year? The Fed can keep cutting, potentially below 3% by the end of next year, and that it's not going to cause a huge inflation problem?
Well, I never thought we had a long-term inflation problem, but I think it is still early days on the tariff effects. What's going to happen is, right now, retailers feel like they can't pass on the price increases. But early next year, you're going to have this refund bonanza. The average income tax refund per household, we believe, is going to be over $4,000. Last year was $3,200. And that is the exact time when retailers are going to feel like they can pass on these tariff increases. So I do think we've got a little bit of a spurt in tariff inflation still to come. But then, if nothing else happens, there isn't a lot of momentum in this economy, and it'll slow down again and it'll cool down again. So I don't think we've got a long-term inflation problem. My real question is, given how bubbly financial markets are, do you really need the Federal Reserve adding more liquidity to the party right now, or should they just hang on in there and say this is enough liquidity?
What are you saying, or what are you seeing that really is bubbly, given the fact that earnings have exceeded expectations, the forecasts have exceeded expectations, and we're likely to see more of the same next week with the tech earnings?
Well, valuations are extremely high for the over. Now, obviously, a lot of it's concentrated in the mega cap stocks, but also profits as a share of GDP are extraordinarily high. So overall, the total value of all U.S. market cap is about 365% of GDP right now. It was about 212% before the tech bubble burst back in 2000. It was 87% before the 87 stock market crash. So there's it's leverage upon leverage. High P.
और गाइस क्रूड ऑयल में चाहो तो प्रॉफिट बुक कर लो, ठीक है, बुक द प्रॉफिट इन क्रूड ऑयल। यहाँ पर कोई सपोर्ट तो नहीं है, दिस इज नॉट अ सपोर्ट बट कन्फ्लुएंस एरिया कह सकते हो। बाकी अगर कोई ट्रेल करना चाहता है तो फिर एक सेकंड टारगेट भी रख सकता है। वैसे इसमें नया कोई सपोर्ट बनेगा तो देखेंगे, अभी बना नहीं है तो कह नहीं सकते कोई रुकेगा कहाँ पे। ये आपका फाइनल टारगेट रहेगा, बाकी बुक करना चाहो तो पूरा ही बुक कर सकते हो। टारगेट थोड़ा बड़ा कर दिया मैंने, 167 पॉइंट का, 100 पॉइंट निकल चुके हैं उसमें ऑलरेडी। यहाँ पे कोई सपोर्ट नहीं है, ठीक है, देयर इज नो सपोर्ट ओवर हियर। ये रुक सकता है बट यहाँ पर तो हाफ प्रॉफिट बुक करके ट्रेल कर लो। नेचुरल गैस में भी प्रॉफिट बुक कर लो, करना चाह रहे हो तो। कुछ नया ट्रेड यहाँ पर देखते हैं, कुछ बनता है तो अब। और ठीक है, थोड़ा वेट करेंगे नेचुरल गैस में, अभी कुछ करना मत यहाँ पर अभी डायरेक्टली, और थोड़ा सा वेट करते हैं। बाकी 7 बजे यूएस मार्केट ओपन होगा, उसके बाद थोड़ा और मोमेंटम आना चाहिए। अब लास्ट ट्रेडिंग सेशन है, ज़्यादा रिस्क मत लेना, जिनको हो चुका है प्रॉफिट अवॉइड करो। बाकी 7 PM यूएस मार्केट ओपन, 7:15 पे सर्विस पीएमआई और मैन्युफैक्चरिंग पीएमआई का डेटा है, ये भी गोल्ड और सिल्वर को इम्पैक्ट करेगा, इसका भी ध्यान रखना। मैं क्या एक्सपेक्ट कर रहा हूँ कि यहाँ पर ये थोड़ा बहुत रुके और फिर ऊपर जाए और फिर यहाँ से सेलिंग आए। थोड़ा बहुत रुकेगा तो ज़रूर यहाँ पर रुकना चाहिए लॉजिकली।
24 days.
What a week coming up next week. This week has all been about anticipation of next week. Massive tech earnings, Federal Reserve decision, and a meeting between the two leaders of the two largest economies on the planet. The President of the United States with the Chinese leader Xi Jinping. Coming up on Monday, full coverage of all of that with Elizabeth Economy of the Hoover Institution, Greg Peters of PGIM Fixed Income, Angelo Zeno of CFRA, Abby Yoda of JP Morgan Global Wealth. Before we go, a very special happy birthday to our executive producer, Amy. Have a wonderful birthday, Amy, and to all of you at home, have a wonderful weekend. Live from New York City this morning, good morning.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones, Erica Ayers-Badon, up in our zone, Justin Tuck.
Stay tuned. You won't want to miss it.
A cidade estava sitiada.
Nisso, ao começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho tanya ki kon akhna ta suara pangau akhna lepa manjang le nyai kon mananya.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
In case you missed it, on Bloomberg Crypto.
There's a debate going on right now in D.C. that I think folks need to start paying more attention to, and that is the yield. And the question really is, who is going to keep the yield? Who makes money off stablecoins? Well, right now, in the case of some of the large stablecoin issuers, there's a yield that, on those deposits. So when there's a dollar, for example, deposited in a bank account, there's interest paid on that dollar. And so who's capturing that yield? And I think one of the really interesting things about the Genius Act is that it bans so-called yield-bearing stablecoins from giving that yield directly back to consumers. Now, that's not true everywhere. And I think if consumers have a choice, why would a consumer want an institution to keep that yield? Or would there be sharing of that yield? So right now, one of the debates going on is, will rewards be allowed? And I think these are really important questions.
Don't miss Bloomberg Crypto live Tuesdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Inflation cooling off, giving equity markets a boost. 30 minutes until the start of the cash trade. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, the first major data release since the shutdown. U.S. inflation rose less than expected in September, keeping the Fed on track to cut rates.
And the latest tariff twist, President Trump terminates trade talks with Canada and gears up for a meeting with China's Xi.
Plus, the busiest week for earnings is upon us. Nearly $27 trillion in market cap reports, with the Mag 7 leading the charge. That's next week, right?
That's next week. We're already getting some of the tech players, though, maybe not the bulk of the Mag 7, but we got Intel, and those earnings were very strong. The CFO over at Intel saying that demand is outpacing supply. They returned to profitability. They give an upbeat forecast. PCs are doing well. So shares up 5.7%. I believe if this sticks, it means Intel will have doubled so far this year in price.
All right, very good news for Intel. For Ford, they plan to build 50,000 more F-150s and Super Duty trucks at factories in Michigan and Kentucky in 2026. This will recoup about half the production it expects to lose this year as a result of that fire at a New York State aluminum factory, at the Novelis aluminum factory, Danny.
Well, not just Ford, but markets overall are higher this morning after the release of a long-awaited CPI data. Underlying inflation coming in less than expected in September, keeping the Fed on course to cut rates next week. Let's break down the data with Michael McKee, Bloomberg's international economics and policy correspondent. Mike, the right kind of surprise?
Well, the right kind of surprise, not a huge surprise in the sense that it was only slightly lower than anticipated. We'll take what we can get. But take a look at the overall numbers, the 0.3 gain in headline and 0.2 gain in core on the month. Better news, and that's something to hold on to. But look where we are annually. There's a 3 handle on core and headline inflation, and that is not a 2 handle, which is what the Fed's target is. So we're not going in the right direction, even if we are going in the wrong direction a little bit more slowly. Some of the numbers of in specific sectors were a little bit of a surprise too. No surprise that apparel was up 0.7 because that's obviously heavily tariffed. Gasoline we knew was up during the month. Here's a surprise: housing up just 0.1. Omar Sharif of Inflation Analytics says that that was a probably noise-related number. It may not have a lot of validity because it was such a big drop in housing prices, owner's equivalent rent. Furniture also tariffed up 0.9%. Here's an interesting one, though. Smartphones down 2.2%, and that may be because Apple held the line on pricing when it brought out its new iPhones this year. So it's something to keep in mind as we go forward. And finally, we should note that the Social Security cost of living increase for 2026 is going to be 2.8%. That's why they put out this data. During the government shutdown, they had to have the latest numbers to calculate what the COLA would be for next year.
The iPhones remind me of, I'll never forget when a reporter told Ben Bernanke that you can't eat an iPad. By the way, the White House says just now, coming over the wire, there will likely be no release of the inflation data next month, which is interesting. Don't they legally have to put out some release for the COLA increase for Social Security recipients?
It's based on third quarter averages, and so September was the last month of the third quarter. The farther we get into October, the longer it goes, the less time they will have to collect data. We saw this in 2013. A lot of data comes in electronically now, so that would still be available, maybe half or so. But if you're not collecting the rest of the prices, you're not going to get a scientifically valid number. So people have asked me, well, does this mean the Fed's going to cut rates at both October and December? December, who knows? Because they're not going to have any data, maybe. And you know, it's better when you walk into the dark room, as they say, you want to avoid the furniture.
Well, I think we all hope that this government shutdown is resolved by then. Michael McKee, thanks for joining us, Bloomberg's international policy and economics correspondent. Now, Ford's CEO, Jim Farley, says the production of the company's top-selling F-150 pickup will bounce back after a fire at one of its key aluminum suppliers. I spoke with him yesterday on The Close.
We're still working through it. It'll be, I'd say, around 100,000 units, but we still have the opportunity to improve that. This is really a retiming of wholesale. What we lose this year, we'll gain most of it back next year. Maybe $1.5 billion to $2.5 billion of EBIT this year, a little bit heavier on the cash because of how auto works. But we'll be gaining at least $1 billion, if not more, of that back next year.
For more on Ford, we're joined by Bloomberg's auto reporter Keith Naughton. He covers the company out of Detroit. And Keith, you know, this was interesting yesterday. The market has known about the Novelis fire for a while now, and I guess the shares rallied on a little bit of relief that Ford is going to boost production to try and bring some of that back, but it's still going to cost the company quite a bit.
Oh, for sure. But there was relief, Matt, because they feared it would be far worse. The loss will be about 100,000 units. The financial loss will be 1.5 to 2 billion of EBIT. But as you just had Jim Farley saying, they think they can make a lot of that back. And the other thing that sort of counterbalanced it and helped drive the stock up is that they had a very strong third quarter. It was a big beat, and they're selling a lot of very profit-rich SUVs and pickup trucks.
What about this message from the president on Truth Social, Keith? He said Ford and General Motors up big on tariffs placed on big and mid-sized trucks coming from other countries. Is that why Ford and GM are up big, Keith?
Well, I mean, Jim Farley did thank the president in his comments to the analysts on the phone, and his CFO, Sherry House, said that the tariff impact will be reduced by $1 billion based on these newest tariffs and the proclamation from October 17th that extended tariff breaks for automakers to 2030. So they did get relief on tariffs, and both GM and Ford reduced their tariff impact numbers this week.
All right, Keith, thank you very much. That's Bloomberg's Keith Naughton in Detroit. And we're going to have more from Matt's conversation with the Ford CEO in the next hour. First, other earnings that hit the market post-market close yesterday. Intel, those shares climbing 5.8%. Their sales forecast was below Wall Street estimates, but that's because some analysts were still including revenue from a unit that Intel just spun off. Bloomberg Tech co-host Ed Ludlow joins us from San Francisco. Ed, digging through Intel's results, how much of it is starting to factor in the various partnerships and investments they have from the government, from OpenAI, from SoftBank, versus just like a classic PC kind of market for them?
Yeah, the plan in the short term was to strengthen the balance sheet, and they probably added $15 billion in that sense in the quarter. They also paid off $4 billion of debt. The one partnership that isn't accounted for yet is the NVIDIA investment. That $5 billion stake or investment will close at the end of the current period. But, you know, basically, the stock is up, Danny, because in aggregate, the turnaround, they are producing evidence that it's working to an extent, at least based on financial metrics. But the environment for them was a lot better than perhaps they had thought. You know, PC processors is still their bread and butter. And, you know, Windows had a refresh, AI PC is strong. They benefited from that. But they're also finding a little bit of a foothold in data centers and servers, noting that they don't do the sexy bit. They don't do the GPU that NVIDIA does. But their argument is that the hyperscalers and other data center operators realize that the CPU is ready for a refresh, and so they're investing, and Intel's a beneficiary of that.
Hey, at my weekly dad lunch, the topic of conversation has been whether or not ChatGPT will be a monopoly. And I see you wrote a story yesterday with a couple of your colleagues, Davey Alba and Rachel Metz, about Alphabet working with Anthropic. What's the deal?
Yeah, I mean, Anthropic is a frontier model lab, an AI lab that has just intense demand for compute. This confirmed our reporting from earlier in the week, right? But 1 trillion TPUs, 1 million TPUs, 1 million of Google's custom processors is a massive win and validation of their custom technology for both running models, inference, and training them with Anthropic, who historically have been very closely aligned with Amazon. And so, you know, that was a very interesting dynamic to play out this week. It's not been a very good week for Amazon and AWS, frankly. So the fact that Google's willing to back Anthropic at that level with the compute they need would suggest, to answer your question on ChatGPT, that Claude, the models that Anthropic makes, are seen as market leading and a contender. But I would say that the difference between ChatGPT and OpenAI and Anthropic went very aggressively and early for enterprise business, not for the consumer. And now OpenAI is kind of acknowledging that they need to catch up in that enterprise domain.
If it were OpenAI, Ed, then it could be 1 trillion TPUs.
I know, and I misspoke, sorry.
No, yeah. I mean, in this day and age, I wouldn't initially or immediately disbelieve that number. Ed Ludlow is the co-anchor of Bloomberg Tech. That show kicks off at 11 o'clock, a show you don't want to miss, even on a Friday. Let's get a check on futures, because on this Friday, we're looking at a rally to what could be another record close. Right now, S&P futures up 0.6%, NASDAQ futures up almost 1%, about 0.9%. So we could see new records on both of those benchmark indexes.
Thank you, CPI. Now look at some of the other movers that are on our radar this morning. Deckers, which makes Uggs and Hoka's, is plunging. 2026 sales look weaker than anticipated. Analysts say it might be a conservative outlook. I don't know if the issue is the consumer. The CFO got on the earnings call and said that people are worried about tariffs and higher prices, so they're not buying. Or is it just that nobody wants Uggs anymore?
Well, I certainly don't, but
I'd be surprised if you did.
Tastes change, so maybe, you know, I will by this Christmas. P&G sales, Procter & Gamble sales, topped estimates led by beauty and razor products. P&G maintained its outlook for the fiscal year, and as a result, those shares are up 2.5% in an up market.
Yeah, and it just shows that people are willing to pay up for brand names like P&G, so not everything is weak for the consumer. We also heard from precious metals miner Newmont. Their 2026 guidance for gold production is the same as 2025, which disappointed analysts and shareholders, especially given the run that gold has been in. Shares down 5.5%.
All right, coming up, President Trump halts trade talks with Canada over a tariff, an anti-tariff ad. Plus, he heads to Asia for a high-stakes meeting with China's president. We'll round it all up for you next. This is Bloomberg Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Eternal life, a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Getting out of high interest, look what's making headlines around the world. Jane Street, Citadel, and other non-bank firms now command a fifth of global trading revenue and could hit 30% by the decade's end, according to Boston Consulting Group. Fueled by tech and lighter regulation, they're overtaking banks like JP Morgan and Goldman Sachs as top market makers, and Jane Street alone raking in $10 billion last quarter. JP Morgan Chase plans to let institutional clients use Bitcoin and Ether as loan collateral by year-end, deepening Wall Street's crypto embrace. The program will rely on a third-party custodian and expands the bank's acceptance of crypto ETFs as collateral. The move is a symbolic shift for CEO Jamie Dimon, once a fierce Bitcoin critic, as major banks warm to digital assets under the Trump administration's lighter regulatory stance. President Trump is shutting down trade talks with Canada over an ad campaign funded by the government of Ontario. The ad uses quotes from former President Ronald Reagan's address in 1987. Here's part of it.
Throughout the world, there's a growing realization that the way to prosperity for all nations is rejecting protectionist legislation and promoting fair and free competition. America's jobs and growth are at stake.
President Trump, reacting on Truth Social, wrote, quote, Canada is trying to illegally influence the United States Supreme Court in one of the most important rulings in the history of our country. And he even said that President Reagan loved tariffs, which makes me think I wasn't there in the 80s. Let's bring in Brendan Murray, who leads our global trade coverage. Brendan, I was there in the 80s. And President Trump, although he did put tariffs on some countries and industries, was most definitely anti-protectionism and pro-free trade.
Yeah, absolutely. I think what President Trump has done with this tantrum that he's thrown against the Ontario government is turn a lot of people to President Reagan's old speeches about how free trade is really the path to prosperity, not tariffs. And so this could complicate the talks that are going to start in the weeks and months ahead between the U.S. and Canada and Mexico. They need to review the USMCA by the middle of next year. And so this really isn't a great starting point for those negotiations to get going. But by the same token, the president of the U.S. didn't threaten tariffs. He just threatened to suspend talks. So there seems to be some room for Canada to either apologize or retreat in some way to get back in President Trump's good graces. But it definitely leaves the two sides in a sticky situation if they're going to reach some sort of agreement on the USMCA negotiation by the middle of next year.
At the very least, it shows that negotiations and talks and sentiment can turn on a dime. Brendan, we're also awaiting a meeting between President Xi and Trump next week at the end of this month. What's the expectation?
Yeah, well, first we're going to see Treasury Secretary Scott Bessent meet with his Chinese counterpart in Kuala Lumpur through the weekend. They need to extend the truce that expires November 10th. It's going to be a tough ask, though, because both sides have ratcheted up the tensions, the rhetoric, and the threat of export controls on, in China's case, with their rare earths, and in the U.S.'s case, with high-tech exports to China. So those talks are going to play out over the weekend. We've seen a pattern where they escalate the rhetoric and then they reach some sort of deal and they push back the next deadline another 90 days. That would be sort of the base case scenario that you could expect out of this. But there's a lot at stake, and China has realized that it really has a lot of leverage with these rare export controls that it can apply to the rest of the world.
You know, I was thinking about these rare export controls. They didn't exist before this trade war was started. Rare earths flowed freely, and soybeans also is a product that the Chinese bought a lot of before this trade war was started. In fact, almost $13 billion worth of soybeans from the U.S. last year. So is a win here just sort of reversing the damage that's already been done by this trade war?
Yeah, exactly. I mean, something like getting China to purchase American soybeans again is not really a win. It's just kind of restoring what has been happening all along. And the same goes with rare earths. You know, China knows it has a lot of leverage here. The U.S. is trying to rally other countries, from Canada to countries in Europe to Australia, to try to push back against China's leverage on this. And it's yet to be seen whether that will have an impact. But China is definitely going into these talks feeling like they have the upper hand, whereas when they started off in May back in Geneva, the U.S. felt like it had the upper hand. So we've really seen the tables turn over the past 5 months.
All right, Brendan, great to get some time with you. Really appreciate it. Bloomberg's trade czar, Brendan Murray, coming to us out of London. Now, quick checking what's going on with futures ahead of the opening bell as CPI came in a little bit lighter than expected. We were looking for 3.1%. We only got 3% even on the headline and the core. So as a result, traders pricing in more rate cuts and futures rallying right now 0.6% on the S&P.
A look at some of the other movers on our radar this morning. GM laid off about 200 salaried employees just days after raising its profit guidance. The firings were due to business conditions, they said, and not their performance.
Target will eliminate 8% of corporate roles, about 1,800 positions through layoffs and closing out open roles. Booz Allen, I guess, is actually down. The shares are down after the defense contractor cut its adjusted earnings per share guidance for the full year, and as a result, those shares are off more than 10%.
Now, coming up, Emily Bowersock Hill says overvaluation by itself rarely triggers a stock market correction in 2025. The same goes for government shutdown, trade upheaval, or credit market worries. We're going to discuss what it would take to slow the bull rally. That's coming up on Bloomberg TV.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we travel to Lesotho to see how tariffs are hitting the country, making some of President Trump's branded golf shirts. The legendary Roger Penske explains how technology is transforming his trucking business, and we ask whether we should care about all those tech unicorns staying away from the public markets.
One of the reasons is because of the availability of private capital.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/findtreatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/findtreatment.
In case you missed it on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Fed's going to keep on cutting rates. It's generally a better than expected report, but I think what it really shows is we have a K-shaped economy, and it's sort of a K-shaped CPI report. The thing that really jumped out at me is, first of all, rental costs coming down. There's, we've got a big change in demographics here, and rental inflation is just going away. You also saw used vehicle prices fall. I thought that was pretty interesting.
JP Morgan's chief global strategist David Kelly speaking earlier on Bloomberg Surveillance after an inflation print that came in lower than expected. Let's bring in Emily Bowersock Hill of Bowersock Capital CEO. Emily, really great to see you this morning. And there you go. One risk event out of the way. We got CPI coming in less than expected. Next up, we have tech earnings. We have a meeting between President Xi and Trump. Do any of those risk events, do they seem like it could derail this rally, this ride that we're currently on?
The momentum behind this rally is very strong, and the market seems basically impervious to bad news. DeepSeek, Liberation Day, cracks in the credit market, a government shutdown. So I think what it would take to derail the market at this point would be something really unexpected and surprising. I don't think it's going to come out of the meeting with Xi. I think the markets have just stopped listening to the tariff vacillations coming out of the administration.
What about earnings? How do you see the third quarter going so far?
I do not see earnings disappointments significant enough to derail the market momentum. I think we're probably not going to see. I think the next chance, frankly, for a very significant market downturn, and this is notwithstanding some minor correction, which is certainly possible before the end of the year, is going to come in first quarter earnings of next year, which is going to report how things went during the retail season. We've got three very significant sources of stimulative spending coming into this economy, and the first one is well talked about. That's the spending on AI. The second is consumer spending, which while it's not high by historical standards, it's certainly stabilized after the second quarter. And the passion of the American consumer for spending is unmatched. The worse their mood, the more they spend. The better the mood, the more they spend.
Yeah.
And we're seeing the spending coming from those higher income Americans that seem pretty insulated from price change.
So, Emily, we'll get more into some of those individual earnings and the spending coming up. Emily Bauer-Sawkill is going to stay with us. Coming up next, it's your Market Open.
Between 2010 and 2025, we have a new form of capital. Because what lives in here, ladies and gentlemen, is a machine. It's not just what's in here, but all the networked machines that are connected to this. Satellites, the carbon fiber cables, the algorithms, the server farms, all that. I call this cloud capital because it lives supposedly on the cloud. It's not on the cloud, it's on Earth, and it's inside our oceans. What does this do? What does Amazon, or the Google, or the Meta algorithm do? It doesn't produce anything. What you buy on Amazon has been produced elsewhere. It hasn't been produced by Amazon. What it produces is a remarkable power to input and infuse desires and thoughts into your mind. So it's the first time we have machines that do that which once upon a time advertisers, human advertisers, human marketeers, orators, preachers, politicians, poets did, which is to change our mind, to modify our behavior. This is now automated. So anyone who owns concentrated quantities of cloud capital has an immense power.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
All right, moments away from the start of trading on this Friday, and it looks like we have a rally on our hands, potentially new record highs on equity indexes today. S&P futures up 2/3%, NASDAQ futures gaining almost 0.9%. In terms of the bell ringers, we don't have a lot of substantial historical performance to look at. Grayscale ringing the bell at the New York Stock Exchange. Speaking of crypto, just working its way into traditional financial structures. They're putting out an ETF that now has multiple different crypto kind of coins in it. Who knows? And then down at the NASDAQ, AXG, I think it's SoloWin or something, but if you look at the performance, it's like done nothing forever. So there are stocks that are important for us to watch and take note of and are doing things, and you've got one on your board there.
Yes, and if we keep at this pace, Matt, I have Intel. It's going to have doubled. They're just about doubled for the entirety of the year. What a wild ride this company has been on. Shares are up 7% here at the open. Their turnaround plan, it's showing signs of progress. They've returned to profitability. Intel also gave an upbeat revenue forecast because it sees a rebound in PC demand, Matt.
All right, and speaking of rebound, Ford plans to build 50,000 more trucks at factories in Michigan and Kentucky in 2026, recouping about half the production it expects to lose this year as a result of a fire at the Novelis aluminum factory here in New York State. As a result, Ford is up more than 3% because it looks like the market expected worse and is happy to get some guidance. Ford shares actually doing really well this year. They are up 29% year to date, really neck and neck with GM, which has just really broken out this week, also up, but only 27%.
President Trump taking credit for it, saying that GM and Ford are up big because of tariffs on foreign trucks.
Yeah, they don't mind that they're going to have to pay billions or multiple billions of dollars in tariff bills, and maybe the Supreme Court reverses that, and then they'll be up even bigger. Let's bring back Bowersock Capital CEO and founding partner Emily Bowersock-Hill. I guess that's kind of the story of this market, right? Things could have been so much worse, but is that really reason to rally this far, this fast?
We're deep into the greed phase of the fear-greed cycle. And so there's a lot of FOMO going on, and I think that the momentum is very significant. So frankly, I think that as long as earnings overall don't really unexpectedly surprise investors, I don't see earnings themselves being a reason for a major market setback. And frankly, Intel's earnings and the earnings by Lam Research earlier this week, both of which are AI-related tech names, surprised on the upside. And I think we may see more of that.
I was reading some research from Citrini Research that's done a really excellent job on capturing the AI trade. Emily, they wrote over there something that has been a relative comfort in being able to stay long despite calls for an AI bubble so far has been the fact that most of the CapEx has come from cash and cash flow. You don't have a bubble until the majority of the expansion is done on debt. I bring that up because we have coming into the market $38 billion worth of Oracle coming in to secure financing for a data center that they're building for OpenAI. Does the use of debt concern you from these tech giants?
You are right that until very recently, the AI spending was funded by free cash flow. And now the Fabulous Five are starting to take on debt to do this. I think the most analogous recent period in history that I'm looking to is the telecom boom. And the real build out was 1997 to 2000. A lot of that was debt financed. And so, yes, it does concern me that debt is now part of the equation. But I still think that if you look at where we are versus that telecom boom, we're still a couple of years, 1 to 3 years away from that coming to an end. I think debt is one indicator that we're getting closer.
What do you like right now outside of growth? Or let me put that a different way. Do you see value that's worth buying in this market, Emily?
Yeah, it's tough. It's tough right now to put cash to work, and it's definitely tough to chase these tech names if you don't already own them. We like financials because I think they will benefit from deregulation. The capital loss requirements have significantly loosened, and most of the banks have not taken advantage of that yet fully. And earnings last week, I think, were a good indication that, that things are looking good for financial institutions generally. I think they will benefit from the adoption of digital payments over the next 5 to 10 years. So you have a little bit of an AI boost and, some productivity boosts that are going to come from AI and AI spending. So I think generally financial services are probably still at a good value.
Has we've seen some stocks get clobbered as a result of the one big beautiful bill, but you note that there were some real tax advantages there for certain businesses. Is there an investment case to be made because of some of those changes?
Yes, I think I mentioned previously that I mentioned two sources already of stimulative spending that are going into this economy. The first being AI spending, and the second, higher-end American consumers. The third is that the tax legislation put new depreciation rules in place, which provide a very strong incentive to finish construction, capital spending projects by December 31st of 2029. So there is a rush to start these projects and finish them within 3 years. And that is also going to inject more stimulus into this economy.
Emily, it's an interesting environment because you have that at the same time that you have Trump sparring with Canada over trade talks, with trade talks on deck for China. From Bespoke, they said companies so far on their earnings calls are avoiding mentions of negative macroeconomic headwinds on their earnings calls. Are you surprised that more of corporate America isn't citing this macro environment, or has it just become all the more friendly for them?
I think there's a certain amount of fear out there. I think people are trying to avoid any kind of statement that could be construed as political. Why do that? Why put your head up above the parapet? And so I think it's probably prudent on their part. I think it's unfortunate because I think what we need is transparency and communication, and we want to hear during company earnings what people think about the macro environment and what they're concerned about. But I think we're getting less of that disclosure, frankly.
You mentioned that we're in the greed stage and that we could have, if you look at the parallels of AI to the telecom boom that we saw in the late 90s, very early 2000s, maybe a year or two left. In October of 99, as we've heard a few times from Paul Tudor Jones, we still had a doubling of the NASDAQ before March of 2000. Do you think that's the phase that we're in right now?
I don't think we're quite there yet. When you look at infrastructure booms in history, so take the railroad boom in the 1840s in Britain, which was real, right? It went from taking you 4 days to get from Manchester to London to taking 4 hours. And it peaked at 7% of GDP in terms of spending on railroads. We're now at about 1 to 2% of GDP, which is very substantial. And in the first half of the year, it actually was a bigger part of GDP than consumer spending. But I think there's probably still some room to run on it. I think there's some massive misspending going on. No doubt about that. We are in a bubble. The question is, where is the misspending, and when are we going to find out what it is?
I talked to an executive who said we're putting data centers on the moon, so I definitely feel some of that kind of froth coming in. Emily, it's been such a joy to have you. Please come back and join us again soon. Bowersock Capital CEO and founding partner Emily Bowersock-Hill. A check on your equity market. We are nearing 6,800, and if we close at these levels, we will be at another record high. All we had to do to get there was go up 1/4%. We are up more than 0.8%. So yeah, we got there. The CPI report comes in 0.2% for core. The expectation was for 0.3% month over month for core. And what does that do? That gives you a boost to your tech stocks. NVIDIA, the biggest mover by market cap, followed by Broadcom, Alphabet, Amazon. If you're a Mag 7 holder, it's a good day for you for everything except your Tesla in your Mag 7. Tesla, a crazy day yesterday. They had earnings that disappointed, despite the fact they had record EV sales. Tesla opens up sharply lower yesterday and ends the day higher. It is lower yet again, some real volatility. Newmont, one of the worst performers too this morning. They said that they're not going to be spending as much as the market had hoped on new gold mining operations. A disappointment there. Netflix down incredibly sharply, it would appear this. Oh, sorry, I'm looking at Deckers.
Yeah,
Deckers is down 14. They're close to each other. Deckers is down 14% because no one wants to buy Uggs and Hokas. Netflix, though, Matt, I did have bad earnings, so I'm not totally without reason flagging Netflix. Just a quick look at some of the sectors. Most of them are in the green today. Again, it's the macro story of CPI allowing the Fed to cut. Infotech, that is number one, followed by financials and communications. Materials, the only sector lower, Matt.
I'm going to push back on the Hokas because
yes.
My former co-anchor, Katie Greifeld, and now co-anchors The Close with Romaine Bostick, she buys a new pair of Hokas like every 6 weeks.
I guess that's not enough to support them because they didn't have good earnings, Matt.
I'm going to tell Katie to step it up.
More Hokas. Maybe she needs to start buying Uggs too. Maybe that's the problem.
Yeah, I wouldn't put it past her, frankly. I could see that being the case on the weekends. Coming up, Ugg and Hoka maker Deckers. We're going to talk more about this. Absolutely pummeled. You can see this chart year to date losing more than 50% of its market cap. This company, it's been a tough year for shareholders. We'll explain when we come back. This is Bloomberg Open Interest.
In case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their job.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
In case you missed it on Bloomberg Tech Asia.
I'm in a Nissan Ariya with the latest ProPilot system developed with Wave's AI technology.
Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it on the opening trade. Rates are on hold. I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing at all costs.
Don't miss the opening trade live every weekday.
After a cooler than expected CPI, we are just under 6,800, easily a new record for the S&P. If it hangs tight, the NASDAQ, that outperforms not only because of the CPI coming in cooler, but also Intel earnings. Some of your top calls this morning, the analyst action that we are focusing in on, Coinbase. That gets an upgrade at JP Morgan. They cite reduced risks, fresh monetization prospects, and the company will report earnings next Thursday. Next up, Stifel, they downgrade Snap to a sell ahead of a third quarter earnings. They cite tougher year-over-year comparisons and still macro uncertainty. Stifel says that sentiment from advertisers is also worsening with more risk to the downside. The market doesn't care, though, because everything is rallying today, except for Deckers. UGG maker Decker Outdoors gave a weak forecast for 2026. Analysts, though, do say that the outlook may be conservative given ongoing strength at Hoka and UGG. Its price target, though, was cut at Bernstein and a handful of other firms. Those shares getting crushed, Matt, down 13.25%.
Yeah, let's discuss Deckers further with Bloomberg retail reporter Lily Meyer. And I had a buddy in town, an old hippie friend from Boulder, and he was wearing Tevas. And I thought, this has to be the last guy on earth who's bought Tevas. That's the other big brand that they make. Hoka, Uggs, and Tevas. It's not going well, is it?
Yeah, I mean, I hate to share this, but I do own a pair of Tevas.
Nice.
But, I think with earnings, the stock really dropped on their guidance, and I think they are really expecting consumers to begin to feel that tariff impact.
How much of that, though, is just a one-off, Lily? Because there's Deckers and then there's P&G showing up really strong earnings that people are willing to pay up for a brand name.
Yeah, so P&G actually cut the tariff impact, and a lot of that was on Canada getting rid of their retaliatory tariffs. And they also said they're seeing consumers trade up. So, we're going to have to wait a little bit and see what other companies report, but they kind of had different outcomes.
Right. I mean, one is really a consumer staple. You have to, if you're a slave to the Gillette razor machine, continue to buy those replacements.
You could buy like a white label razor, though. You don't need to buy the Gillette branded
I'm going to say, if you've gotten into the Mach 16 or whatever it is now, you just can't get out of it. It's a tough cycle to break. And then, obviously, a toothpaste or washing detergent, you're not going to stop buying that, and you're probably not going to switch down. You're more likely to save money by not buying a new pair of Uggs, right?
Yeah, I mean, I guess it depends what your calculation on that is. But, yeah, I mean, grooming was one of the areas that they saw a lot of success in, as was beauty and personal care.
All right, so they're still doing well. We still want to look good, And
at least
here's the fun thing, right? Part of looking good is a Gillette razor and Tide detergent.
Are you getting paid by Gillette? What's happening, Matt?
Is not UGG. No, I'm just saying, as you know, I like the Japanese double-edged safety razors.
Yes.
Feather. It's a very good choice. Buy now, buy once, cry once, But I'm just saying, if you're in the cycle of Gillette,
right,
you can't get out.
You're stuck forever.
No one's buying the Wilkinson swords, right?
I have no idea what that is. Sounds great.
All right, Lily, thank you very much. Bloomberg's retail reporter, Lily Meyer there. In other news, Intel's CFO says demand is outpacing supply as the company returns to profitability and gives an upbeat forecast. The stock has been hot this year. Bloomberg Tech's co-host, Caroline Hyde, joins us now. So this company getting an absolute mega boost from President Donald Trump.
And from NVIDIA. And from SoftBank.
Well, because of President Donald Trump.
And it's about $16 billion of money that either is a stay of execution or actually can reignite real growth once again. Because, let's face it, yes, they returned to profitability, but it's been about 6 straight quarters where they didn't have profits, and we're actually still leaking out only 3% revenue growth. At a time where we're meant to be seeing CPUs a delight within the AI data center space, as well as GPUs. They did see more demand than supply. They are seeing a demand really for the next generation of chips that go into PCs in particular. Maybe the AI PC is starting to take off, when we're really starting to see people wanting to be upgrading with the new Microsoft Windows as well. So they did see some stronger overall fundamentals for this business. But the stock is up 90%. Most companies that analyze this stock, so most of the overall analysts that are on it, are saying, look, you should either hold or sell from here because the upside is still so much hinging on whether they can compete with TSMC. Are people going to eventually want their chips fabricated by Intel in the United States? What types of chips? What margin are they going to make on it? What sort of actual good chips are we going to be getting out of these ones that are manufactured when you're looking at the 18A, not to mention 14A, which is the next iteration of chip that at the moment, Lip Bhutan, the new CEO since March, has been saying, I'm not going to build it unless they definitely come, unless I know I've got the demand. So we're in this kind of catch-22 situation.
Caroline, I can only imagine how insane your week is going to be next week on Bloomberg Tech. It's all the rest of the big cap tech. Microsoft on Wednesday, then Meta, then Alphabet. You also have Amazon and Apple coming in on Thursday.
It's a party.
Yeah, I mean, is it, or is it like a hold on to your seats and pray that they keep the rally going?
And I think this is what, for most investors, is the question. Are the fundamentals there to keep on pushing up these valuations? And I think from what we've got so far, the hints are that, yeah, people are actually committing real money into real revenue-generating businesses. Whether or not we'll see the advertising momentum still carry on for Meta, whether we see Microsoft still managing to cash in on Azure and seeing with an uptick. Look, we've had a big deal for Alphabet's new chips coming from Anthropic. What does that mean for Google's ability to outperform when it comes to Gemini demand? More broadly, for the advertising to remain sticky. A lot of these businesses need the economy to keep on growing too. But I think thus far we have managed to see fundamentals bear out in a lot of the growth stories to these companies. The valuations on these companies, unlike NVIDIA, which trades at 60 times future earnings, NVIDIA is much healthier because earnings have risen at the same pace as the shares have more broadly as well.
Wow, no, NVIDIA trades at 41 times future earnings.
It's not as bad.
60 would have been a huge jump, I think.
That's Intel.
You're thinking, well, and Costco, right? I mean, some of these companies are trading at huge. Okay, Costco's 47 now, but
Microsoft, Meta, some of the other numbers seemingly in line with where the Nasdaq generally performs. People feel that they're not too expensive.
Yeah, no.
To currently stay.
It looks cheap. 33 times. Microsoft is 33 times earnings. I love to go through these estimated PEs. All right, Caroline Hyde, looking forward to your program. She co-anchors Bloomberg Tech with Ed Ludlow. Coming up, Goldman Sachs is launching a new ETF.
Yeah, and it's an ETF that's designed to mimic private equity returns. How are they going to do that? More on that coming up next. You're watching Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode,
the goal is to catalyze economic development using sports and basketball in particular. And so if we are going to catalyze economic development, then we have to look at the whole ecosystem.
Premieres October 24th.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Let's get a quick check on what's going on in stocks. Just about 23 3 minutes into trading right now at 67.92. We are at an intraday record, and if we close anywhere near here, we'll be at a closing record as well. So the market continues to march to new highs today on optimism, really that President Trump and President Xi at a meeting will finally deal somehow with this trade spat. NASDAQ gaining 0.9% as all of the Mag 7 stocks, really, other than Tesla, are rallying. Danny showed you that just moments ago. Take a look at some of them here. NVIDIA up almost 2%. Intel up 3.4%. We just talked about with Caroline Hyde. Next week is massive for tech earnings. I think 27 trillion, is that right? $27 trillion in market cap reporting next week.
Yeah,
and then
sounds about right.
Look, what are we going to need in order to make the AI bubble work? It's going to be power. So Oklo up another 8% today. Grindr, I have no idea what's going on with Grindr, but it's being taken private here, and I wish those gentlemen luck. Up 26% and change. Newmont Mining down as gold continues to retrace its spike higher, and then Cypher Mining up 10% today. Danny?
I do want to confirm you are right. 27 trillion next week. It was 9 trillion this week. Elsewhere, Matt, Goldman Sachs joining the growing list of managers looking to replicate private equity exposure with an ETF. The only other one is Apollo doing credit. I spoke to Michael Brunn, global co-head of private equity at Goldman Sachs Alternatives, on the activity he's seeing in private equity.
We certainly think that deal-making volumes are back for very fundamental reasons. First of all, private market valuations have stabilized. At the same time, you have seen volatility come down, and importantly, you've seen base rates reduce and credit spreads reduce. We certainly see it as a more constructive environment, and we certainly think that that backlog will allow for a lot of interesting deal formation on the buy side.
GSAM's Michael Brunn there. He says private equity is doing well, and apparently Goldman agrees and thinks everyone wants exposure via their ETF, but they're not buying private companies, they're buying public companies, which begs the question, if you can make an ETF with private capital returns via public companies, why would you ever invest in private equity to begin with?
It really is pretty confusing when you think about it that way. And Goldman Sachs said that they're doing this because so many investors want private equity exposure, but this isn't that.
Right.
So they should say they're doing this when so many investors want private equity returns.
Right. But again, their thing is they can create private equity returns in public markets, which I think is against the whole point of it. Anyway, another hour of Bloomberg Open Interest coming up next.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2?
Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
We are 30 minutes into the trading day. Welcome to Bloomberg Open Interest. I'm Matt Miller.
And I'm Danny Berger. We are trading at all-time highs yet again after a little bit of CPI data.
Yeah, we continue to rally after the first major data release since the shutdown. U.S. inflation rose less than expected in September, keeping the Fed on track to cut rates.
But then there's the latest tariff twist. President Trump terminates trade talks with Canada as he gears up for a meeting with China's Xi next week.
And the busiest week of earnings is imminent. Nearly $27 trillion in market cap reporting next week with the Mag 7 leading the charge. We have some breaking economic data I see rolling across my ticker right now. University of Michigan, the final reading for October consumer sentiment falls to 53.6. The estimate was for 54.5. We have Michael McKee here with us on set, Bloomberg's international policy and economics correspondent. So is this a case where above 50 is expansion and below 50 is contraction?
Yeah, although we're getting close to the line at this point with the headline number. The current conditions index falls to 58.6 from 61, and expectations drop to 50.3 from 51.2. So people getting closer to the idea that we may see some sort of slowdown ahead. It's not particularly good news, but it's not going to be outweighed by, it's not going to outweigh the CPI. Speaking of inflation, the University of Michigan's 1 year ahead inflation index unchanged at 3.6%, while the 5 to 10 year number, which Fed officials look at more closely, 3.9%, up from 3.7%. So there are some longer term inflation questions out there. You wouldn't want to say that maybe we are at this point unanchored, but we're definitely seeing some concerns. And of course, with CPI today, we got to 3% on both the headline and the core for the annual rate, which is not the 2% that the Fed is looking for.
It's only 50% above their target.
It's only 50% above their target.
What's 50% among friends?
And of course, the news that captured everybody's attention came out shortly after the CPI report, with the White House sending out a tweet that suggested we will not get an October CPI report because it's too late now to collect the data. Now, the Bureau of Labor Statistics hasn't confirmed that, but that seems to be the view, that we're now far enough into it that we won't get a report, and so the Fed is going to be flying blind when it comes to the December decision to make.
Well, here's someone that's confident. The NEC's director, Kevin Hassett, saying inflation numbers were fantastic, so he doesn't seem too concerned. Mike, thank you so much for joining.
Not only that, Presidents Trump and Xi are great friends, according to Kevin Hassett.
Ah, okay. And according to President Trump, the car makers are very happy about tariffs, so everything is sunny and fantastic.
They love them.
They love them. Let's see if our next guest also sees the world sunny and fantastic. It's Maria Waitman, State Street Global Markets Head of Equity Research. And Maria, I know for you, the only game in town is tech. If you are very long tech, today is a great day for you. Those shares are outperforming. Does it continue into the earnings next week?
I mean, we'll see next week. But I mean, so far, the kind of the read across we heard from kind of other companies is that supply is smaller than demand, and there is kind of lots of upside for kind of order books in lots of tech companies. So yeah, no, looking quite optimistic about next week.
What do you, I mean, this gets beyond next week's earnings, and you have great reason to be optimistic that the big tech companies will deliver. But if you look longer term, what do you think about the power demands that are necessary to run all of this sort of pie in the sky, AI dream? Is it going to happen?
We'll see. Technology is developing. AI is getting, we know Moore's law. We know that computers get more efficient. So, potentially, yes. But so far, we haven't seen kind of the sticking point. So far, we haven't seen kind of big issue. But I think in terms of kind of AI investing, so what investors should be looking at, and that has been a kind of a real big topic for us, is that what else other than tech? So where else can you go? Okay, there are lots of concerns about AI and bubble and like you might your issue with power, absolutely. But where else can you go? And that's a really sticking point for us. We really struggle to see other alternatives for investors to get into, and that's really kind of a big reason to stay with AI.
Maria, I asked Emily Bowersock-Hill in the last hour about this idea that was brought up by Citrini Research, that the reason you could initially be confident about the AI trade not being in a bubble is that it was being funded by cash flow of these tech giants. That's changing. Oracle is a great poster child of that, putting another $38 billion, securing that of a debt deal to finance the AI build out. Does it concern you that more debt is being used?
Absolutely. Particularly for Oracle, that's a concern. I think that's not generally true. I think there are lots and lots of companies that still have enough cash flow to be able to finance their deal. Nvidia is a good example of that. They're getting involved with lots of their kind of consumer, but equally they have kind of a lot of money to invest there. Microsoft. So I think it's something to keep an eye on, something to be concerned about, but I don't think that's kind of systemic problem yet.
We're talking about Kevin Hassett's comments. He was on Fox saying that Presidents Trump and Xi are great friends, and that there's been some thawing in recent days of the coldness of that relationship since President Trump started this trade war, or I imagine they would say the Chinese started it long before that, and they would have a fair point there. But the point that I want to get to is these rare earth minerals are so important to everything that the U.S. makes in terms of consumer products and the world makes in terms of consumer products, but especially the AI boom. How come the bulls seem so confident that we're going to have this dealt with?
Another good question in terms of kind of, say, thinking about like AI case. In general, I would probably suggest that both U.S. and China need to cooperate. I think it's in both economies' interest to have a decent trading relationship. And it's a big negotiation, and as I said, it's in both interests to find some deal and to find some compromise. China needs a lot from U.S. needs a lot from China. It's potentially, to me, that sounds like it's in both economic interest to cooperate and find the deal. And I think that's kind of what gives markets some comfort in terms of there is economic interest there.
Maria, in the first half of this year, when companies were dealing with tariffs, we saw a lot of front running, and it didn't seem like you saw the impact yet. We're starting to hear from companies. It was Tesla and Mattel earlier this week that said that they are seeing an impact. Deckers, the maker of Uggs and Hoka, said that consumers weren't buying as much because they were starting to feel higher prices because of tariffs. Is this the tariff impact finally coming home to roost, or is it just companies using it as an excuse for otherwise low demand?
I think there is truth is usually somewhere in the middle. I think what we're kind of keeping a close eye on is margins. So ability of consumers to pass margins or ability of companies to pass margins to their kind of end consumers. And what I find quite interesting is that when we look at State Street custodial database, what we see is institutional investors are heavily positioned toward sectors with higher margins, so higher ability to pass, to kind of navigate those kind of higher input costs, and they're really underweight sectors with lower margins. And I think that's kind of telling that, yes, investors are somewhat concerned about kind of trade war. I mean, you can dress it up as margins, as higher costs, maybe kind of some stagflationary pressures, but we definitely see investors kind of being cautious about it.
Maria, we have a lot of investors on who love tech, and you have for some time. So you've done well. Your clients have done well. But if someone comes to you with new money, do you buy that tech now at these valuations?
I mean, yes, I do. And I think the main point for us is that what else? What else can you go? Where can you go to? And as we said, I mean, look at where the earnings growth is. Earnings growth in kind of Q3 or full year earnings in tech is 3-4 times higher than X-Tech. Look at margins. They're like about 4 times higher than outside tech. So, and as you say, if new money coming in, they need to be allocated somewhere. And what investors really want to allocate to is some kind of earnings stability, earnings predictability, earnings resilience. And that's tech. It's not small caps. I mean, if you look at small cap margin expectations, they keep going down, down, down. If you look at value stocks, again, you see margins construction. And I think that's really important point. Is that where do you see quality and stability, and it's still large cap tech.
All right, great to get some time with you, Maria. Really appreciate you joining us. Maria Waitman there of State Street, talking to us about what stocks you buy even today. Let's get a check on the markets. We are looking at an all-new intraday record. We could hit 6,800. I wouldn't put it past this market by the end of this Friday. On the S&P 500, the NASDAQ up more than 1%.
Some of the single stocks that are also moving this hour, helping the NASDAQ this morning. Intel shares, they are rising. The chipmaker has returned to profitability and gave an upbeat revenue forecast. Then there's Deckers. It makes Uggs and Hokas. It is plunging. 2026 sales look weaker than anticipated. Analysts say it might be a conservative outlook. Shares are down 14%. Meanwhile, on the other side of consumer goods, P&G sales topped estimates, led by beauty and razor products. It maintained its outlook for the fiscal year.
Coming up, Argentina's President Javier Milei facing a pivotal moment with midterm elections on Sunday. We are live in Buenos Aires next. This is Bloomberg Open Interest.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we travel to Lesotho to see how tariffs are hitting the country, making some of President Trump's branded golf shirts. The legendary Roger Penske explains how technology is transforming his trucking business, and we ask whether we should care about all those tech unicorns staying away from the public markets.
One of the reasons is because of the availability of private capital.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
I have a 7-year-old granddaughter, and she's very smart. And I'm just wondering, is there an early decision process that Harvard has? I mean, she's very talented.
Well, David, I have to ask you, how's her pitching arm?
Key investors investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Let's get to high interest now. A look at what's making headlines around the world. President Trump abruptly scrapped plans for a peace summit with Vladimir Putin and imposed new sanctions on Russia after the Secretary of State Marco Rubio warned Moscow was stalling. Rubio, a long Russia hawk, called off his own meeting with Sergei Lavrov, arguing Putin hadn't budged on Ukraine. The move cements Rubio's growing sway inside of Trump's foreign policy circle. And Zoran Mamdani, the frontrunner for New York mayor, is pitching a plan to overhaul the city's tangled permitting system, cutting fees for small businesses and nonprofits, and scaling rules to event size. He says the goal is to make it easier for New Yorkers to host block parties and celebrations around New York's FIFA World Cup, part of a broader push to cut red tape and restore faith in city government. President Trump is campaigning hard against Mamdani. And Argentine President Javier Milei will meet J.P. Morgan CEO Jamie Dimon in Buenos Aires today ahead of Sunday's pivotal midterm vote that could decide the fate of Milei's market reforms. The talks come as the U.S. Treasury backs Argentina with a $20 billion swap line and another $20 billion in private financing. Dimon's visit, planned before the recent turmoil, includes meetings with CEOs and an expansion push in Argentina.
Let's stay with the country, and we spoke earlier in the week with Gustavo Medeiros, head of research at Ashmore Investment Management, on the state of play heading into this weekend's election.
The toughest part of the job, Javier Milei has already done. There has been 2 years that he's done the most aggressive fiscal consolidation of any G20 countries that I've ever seen in 25 years of investing. So I think that people are making, this is Argentinian elections. There has to be some drama, but people are making a bit of much bigger of a drama than it should have been.
Joining us now live from Buenos Aires is Patrick Gillespie. He is Bloomberg's Buenos Aires bureau chief. Patrick, what is at stake for the elections?
Good morning from Buenos Aires, Matt and Danny. So there's a lot going on in these midterm elections on Sunday in Argentina. This is really going to be a referendum on Javier Milei's economic policies. Beyond the relatively low-profile candidates that are on the ballot, you could really argue that, in effect, voters will also be casting ballots for Milei's pro-market economic agenda, his austerity policies that have really had a major impact on the cost of living here, and, of course, the $40 billion rescue package from the Trump administration that President Trump himself has conditioned on Milei's party winning this midterm election on Sunday. So really what was a relatively normal midterm election heading into this race has turned into something that's really going to be a make-or-break moment for Milei's policies and this rescue package from the U.S.
Well, and I mean, I was listening to Greg Makoff on Odd Lots. He wrote the book Default, the landmark court battle over Argentina's $100 billion debt restructuring. And he painted this as a make-or-break moment for the country, saying that this is, the people's chance to vote for whether or not they want to continue reforms and fix the problem that has so long dogged Argentina, or just go back to the cycle of, devaluations and defaults. Do you see it that way as well?
Well, clearly, fiscal deficits have plagued Argentina for years because it's resulted in high inflation, deficits, and eventually sovereign defaults. So Milei has tried to address the root problem of so many of Argentina's crises, but it's painful. Austerity is painful. If you think about the ordinary Argentine, utility bills have quadrupled in the last 2 years. So salaries have not kept up. Economic activity is losing momentum. Retail sales have been down for 6 straight months, so we are seeing the economic impacts of harsh austerity policies, but they have achieved much lower inflation, much lower poverty. So it really is, there's been a lot of risk and a lot of reward, but voters are losing patience, it seems, with Milei's austerity.
So how much does a $40 billion rescue package from the United States of America change the game, Patrick?
Well, I think it's really interesting, Danny, in the sense that, there's a $20 billion currency swap line that the U.S. and Argentina have signed. We haven't seen it put into action yet. There's also the U.S. is trying to line up about a similar amount, another $20 billion in Wall Street financing. And really the most interesting pillar of this rescue package so far is that the U.S. Treasury is buying Argentine pesos. They've been doing that almost every day for the past 2 weeks. This is coming after Milei, who campaigned as a president on dollarizing Argentina, has now convinced the U.S. to buy Argentine pesos. This has helped to be somewhat of a temporary, short-term support for financial support for Milei. But the U.S., Argentina has a long history of Washington bailouts, whether from the U.S. government or from the IMF. And I think there's a lot of weariness because they usually come with concessions that aren't revealed in the beginning. And we still don't know what concessions Argentina has made in exchange for this extraordinary support from the U.S.
A long history, Patrick, of corruption as well. What role does Milei's sister play in this election?
Well, certainly, I think another issue that's disappointed voters is that Milei came into office with this outsider image, and so far this year, Milei has faced 3 corruption scandals. There was a cryptocurrency scandal earlier this year. His sister is facing bribery allegations, and Milei's top candidate had to drop out of the race just a few weeks ago because he had ties to a drug trafficker that is now being extradited to the United States. So Milei's Drain the Swamp image and anti-corruption sort of campaign has really been dismantled because of these corruption scandals. And I think that's definitely going to have an impact Sunday in the polls.
Patrick, great to get the update with you. Bloomberg's Buenos Aires Bureau Chief Patrick Gillespie talking about the importance of the election this week. And, of course, we're going to bring you those results on Monday. Turning back to the U.S. now, President Trump heading to Malaysia tonight to kick off his Asia tour, where he is set to meet with Chinese President Xi Jinping on Thursday in South Korea. Let's bring in Bloomberg senior editor Michael Shepard. And, Shep, it's interesting, the main goals, as far as I can see it, are getting the Chinese to buy soybeans again, which they did in size before President Trump slapped tariffs on them, getting them to freely sell rare earth minerals, which they did before President Trump slapped these tariffs on them, and getting them to cut off the flow of fentanyl. It seems like that would be really the only win here. Am I missing something?
No, I think you've really sized up Trump's demands heading into the meeting, and he really hasn't brought up much at all the question of shipping and all of the other thorny issues on trade that really remain between the world's 2 largest economies and that would need to be resolved in a far greater bargain or deal than what we would expect to come from any talks that we have between the 2 leaders, Trump and Xi. We are expecting Treasury Secretary Scott Bessent and his Chinese counterpart, He Lifeng, to be meeting coming in the next day or so in Malaysia ahead of this leaders summit to try to hash out some of the issues you just brought up, Matt. The biggest one, though, is the rare earths. That really hit a nerve here in Washington with officials. They had thought that this had been resolved in previous rounds of talks, and they were a bit surprised to see China reopen it by imposing these curbs. And remember, these curbs are going to have a wide-ranging impact on a whole host of industries, from autos to consumer electronics to defense, and it is something that the U.S. would really want to see resolved. And more broadly, Matt, the U.S. wants to see a reduction in some of these trade tensions. It is weighing on the economy and on decisions by companies and businesses. And that in itself, for both sides, really, as your guest from State Street pointed to, both sides would really like to see some cooling of the temperatures in the room.
Hey, Mike, just about 45 seconds here, but the Wall Street Journal had reporting that Xi noticed the market chaos and thinks that D.C. can't stomach economic pain. Who holds the cards?
Well, it's a great question because, many people have pointed to China, in this case, now holding leverage in the talks because of its hold on the rare earth supply. It has more than half of the world's proven reserves. It dominates the production and refining of rare earths, and that is a key bit of leverage going into these talks. And it also is one of the world's top shipbuilders. Again, another advantage to China. But we also have to look to see what the U.S. brings, and that is a market that China would very much like to sell into.
All right, Bloomberg's Michael Shepard there in Washington. Really looking forward to our political coverage. Balance of Power kicks off at noon today on Bloomberg Radio at 1 o'clock on Bloomberg Television. Still ahead, Ford delivers better than expected earnings. We'll bring you my exclusive interview with the CEO, Jim Farley. This is Open Interest.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we travel to Lesotho to see how tariffs are hitting the country, making some of President Trump's branded golf shirts. The legendary Roger Penske explains how technology is transforming his trucking business, and we ask whether we should care about all those tech unicorns staying away from the public markets.
One of the reasons is because of the availability of private capital.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Hey, should we check on the markets?
Sounds like a great idea.
Let's do that. Right now, we're looking at 67.93 on the S&P 500. We could hit 6,800 today. I almost said 8,000.
That would be wild. We did hit 6,800 for like a second, and then we pulled back off of it. Still, we are easily at a new record.
So big rally today, but I'm excited about something else.
Please do tell.
We have the CEO of Scout Motors coming on. Scott Keogh is going to join us to talk about the relaunch of an iconic vehicle. Scott Keogh, Scout Motors president and CEO. I've actually reserved one of these, full disclosure, and we'll get to it next on Open Interest.
NYK's sustainability efforts have produced a breakthrough. The tugboat Sakigake is the world's first ammonia-powered vessel in commercial use.
LNG can decrease emission of the carbon dioxide compared with the heavy fuel oil, the 25% more or less. But ammonia, 95% decrease can be achieved.
According to Bloomberg NEF, ships powered by LNG and other alternative fuels make up nearly 40% of the global shipping order book.
This is funded by the NEDO, so-called Japanese agency. And also the NEDO has the kind of the GI funds and the Green Innovation Funds. And also the Japanese government is supporting usage of the ammonia as the power-generating fuel.
It's more expensive than normal standard fuels.
Yes, it is. And at this moment, the supply of the ammonia volume is very much limited compared with the LNG and also the heavy fuel oil. But in order to promote ammonia as a marine fuel, together with the other industry players, and we can have the kind of the mass production, then the cost will be decreased. Then the next 10 years, we try to increase the number of the vessels powered by the ammonia.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Exactly 1 year ago, Scout Motors announced its return, with parent company Volkswagen naming Scott Keogh as CEO. Since then, the company has pivoted from plans to produce only battery electric vehicles, adding a gas motor hybrid to the lineup, which now dominates pre-orders. Today, Scott comes back to open interest to give us an update after announcing an additional $300 million investment in his $2 billion South Carolina plant. Scott, great to have you on the program. I have to say, we told our automotive team on the BN side that we were having you on, and we were flooded with questions. Everybody wants to know about Scout, from Keith Naughton to Craig Trudell to Monica Raymond. The list goes on and on. I especially am interested, as you know, I put in a reservation, and I actually reserved the full BEV version, which is, I know, unusual since I'm normally a V8 guy, but are you still going to be making that one at first, or will you go just with the hybrids at first because you've had so many more orders for those?
Look, Matt, that's a fair question, and we're developing both of them, as you know, and we're developing them parallel. Look, the market has spoken. Over 80% of the reservations are the range extender. In general, in life, you like to meet the market. So certainly we would probably lean with the EREV, but nothing we've announced yet, Matt. Both of them are being developed. Both of them can be handled at the manufacturing line, as you know, down in Blythewood. We'll announce that as soon as possible. I know I have to tell you first, since you're a reservation holder.
I'm waiting. I mean, there are a lot of reservation holders. How many of us are there so far?
There's over 130,000 the last time I checked, and growing each and every day. So it's really exciting. The demand for the car is phenomenal. It's one of the best responded to products I've seen in my 30 years in the automotive business here in America. So we're obviously excited.
I wonder about the production facility. I'm really psyched to go down there and check it out when I get the invite in Blythewood. I guess you can make up to 200,000 a year. Are you going to be running it at full tilt, or what's the idea in terms of capacity utilization?
Look, you know the dream, Matt. The dream is full utilization, and full utilization is, 3 shifts, 24 hours a day, 7 days a week. That's the dream. And but look, we want to get there, and we want to make sure we can ramp up with maturity. So we think it'll take at least 3-ish years to get to that full output, because we want to make sure the product is right, the quality is right, everything is dialed in, the employees are properly trained. But that's the dream. Full utilization is exactly how you get maximum profitability, and that's what we want to work towards, and we feel confident we can get there.
It's a lot of building you're having to do, Scott, because it's not just the factories. It's the fact that you're going direct to consumer, which takes a lot of support. It takes a lot of service and some real investment in that. Why choose that path? What do you see as the success as going direct to consumer?
Look, Danny, you asked the big question. I think you're exactly right. We took the harder path on a lot of things. We took the harder path on the factory. We want to build and do it ourselves. We took the harder path in putting the supplier park right there in the plant, just yet. This is also where we'll do all of the accessories. And finally, on the direct-to-consumer, look, I don't disagree with the dealer model, but there is a better path, and that's exactly why we want to do it. And what you get is what consumers want. Consumers want pricing transparency. Consumers want simplicity. And look, things like the internet and things like Amazon have taught us very clearly customer data is important, customer service is important, and we're the company that engineered the car, we're the company that manufactured the car, and we're the company that's going to look after the customer throughout the value chain. So yes, it is harder, but it's the right thing. And the final point, if you look at 21st century companies, there's no universe where you would carry all of the manufacturing and the expense, but not also carry the cash register, if you will. And all 21st centuries have that relationship with the customer. They have the data control of the customer. And if you look at artificial intelligence, it's going to demand that you have the full value chain and not hand it off. So it's a critical strategic decision and one we're implementing as we speak, as you know, Danny. But it's definitely the harder route, but it's the right thing for our customers. It's the right thing for America.
Scott, you talking about simplicity. It reminds me when Matt and I went down last month to check out one of your cars, and you've really designed it to make sure that it is tactile, that it's not all screens. Do you think a lot of this industry, of this auto industry, has gone too far, that they've made cars, in the words of the President of the United States, where everything's computer?
I won't say computered, but 100%. We feel it, we know it, we see it in all the research, and you see it in every day, and we see the response to Scout. Look, simplistically, we've been trying to build something we call a connection machine, and we think vehicles have become sort of dystopian disconnection machines. Everything's 8 layers down, everything's on a computer screen, everyone in the car needs their own computer screen. And we think the exact opposite. We think mechanical switches give you a connection. We think less screens is better. We think bench seats are cool. We think tailgates are cool. We want to build this real, authentic connection. And look, I think some things don't need to be reinvented. There's no American that said, I don't know how to open a door handle. There's no American that said, I don't know how to turn the fan speed switch. And let's bring those things back and let's get down to basics. It also plays back to our heritage. That's what Scout was all about. Things were linear, straight, direct. And so, yes, I think that will be the trend. I think there's going to be a walking away from computering or computered everything, full stop.
Hey, first of all, I'm a huge fan of the tailgate. That was one of the coolest pieces that I didn't expect. I ordered the full, or I reserved the full BEV just because it's faster and it's lighter, and I feel like the battery tech is there to the point where I'm happy to experience that for the first time for me. A lot of other people, though, are going to only want a gas motor. Is there any possibility that you put out not just a hybrid, but a full ICE Scout in the future?
You know, I don't see it. And I look, there's a lot of drama now that says the world was all EV. Now the world's going to become 100% internal combustion engine. Is that? Look, we know there's a lot of whipsaws in the industry, which is why I always look for what is cool technology? What is an American looking for? And in my point of view, the best consumer proposition is exactly what we're putting forward. If you look at the 4 big pictures of what this drivetrain can deliver, to me, it's all American. So first of all, is there enough power? Over 600 horsepower, 1,000 pound-feet of torque, lots of power, 0 to 60 in 4.5 seconds. Does it have range? 500 miles of range. Does it have generator? So can you use a gas generator or an electric generator? And by the way, is it efficient? And you're going to be talking about EMPG of 70 plus miles per gallon. So this to me is a super machine. And I think Americans are going to say, this is awesome tech. I can have my EV coolness, but I can have my ICE range. So we think it's the right way. And by the way, Matt, the other reason we love it is from an engineering point of view, it keeps the platform structure the same. It keeps the engineering at the plant the same. It keeps the manufacturing lines the same. So it allows us to be super efficient. And look, bigger picture, where is the world heading? The world is still heading electric. The technology is there. The innovation is there. We are in the early stages. Tech is only going to better. Costs are only going to go down. And we want to make sure Scout is prepared for the next 100 years. We're not building a 2-year brand and not be braced for now times only.
Hey, Scott, it's no secret Volkswagen is behind this. You have run Volkswagen. You've run Audi, the U.S. businesses. Keith, Monica, and Craig all said, hey, ask them if they're going to make Audis there. Ask them if they could make Porsches there, because those brands need a footprint in the U.S., right? And you're developing an all-new plant. Is that a possibility?
It's an absolute possibility. And as you know, there's been a number of press articles, so nothing I'm going to confirm or deny here. But certainly there's a possibility that other cool group products could definitely be built there. And of course, that helps with utilization, scale, and gives a natural footprint. But nothing to state here. But I think you're exactly right. If you look at this platform, body on frame, electric, body on frame, range extender, the capabilities, if you look at these segments, and whether Toyota Land Cruisers or Defenders, or of course Broncos and F-150s, these are popular segments. They're growing more popular by the day. So certainly there's an opportunity there, but nothing to announce yet, Matt.
Dude, a live rear axle for an EV is a pretty cool achievement. Scott Keogh,
cool.
There from Scout Motors. Really appreciate your time. Hope you can come back soon. We want to stick, by the way, with autos on this program. Ford shares rising after the automaker posted an earnings beat and signaled it will largely bounce back from a fire that disrupted its key aluminum supplier. The CEO, Jim Farley, spoke with me and Bloomberg's Romaine Bostick about the impact of that fire.
This is really a retiming of wholesale. What we lose this year, we'll gain most of it back next year. Maybe $1.5 billion to $2.5 billion of EBIT this year, a little bit heavier on the cash because of how auto works. But we'll be gaining at least $1 billion, if not more, of that back next year. So it's kind of a retiming, very serious situation, but really proud of how the team dealt with it so far.
We also heard, as Gabriella Coppola just mentioned, that the headwinds from tariffs are really going to be cut in half. You had previously said you expected about $2 billion in headwinds from tariffs. Now you're looking at just $1 billion in those costs for this year. How did that happen? Is this just because of the proclamations that we got last Friday in terms of parts costs?
Yes, there was. And I have to thank Donald Trump, our president, and the administration. This is a huge benefit for America's largest auto producer. It did cut our tariffs to about $1 billion. It'll be about the same next year. This is basically a reduction of our imported parts that we make, that we have to import for our U.S. produced vehicles, finished vehicles. But they also announced a 25% tariff on imported heavy and medium-duty trucks, which is a big benefit for Ford because we make 100% of our Super Duties, our most profitable vehicle, in the U.S. We do not import it, but our competitors do. So a lot of things going on in the policy area, including the EPA, upcoming EPA decision on tailpipe emissions.
I am curious what type of conversations, Jim, that you've had with the administration on the potential for some sort of relief, if not equity, with regards to how much of your production is based here in the U.S. relative to some of your competitors, and whether they understand the potential disadvantage that would put you in if there isn't some, I guess, some sort of agreements to smooth that out.
Really good question. So Ford produces 80% of what we sell in the U.S. here in the U.S. We actually export more, so it's more like 85%. We are way ahead of our competitors, even our domestic competitors. Some of them are only importing or making about 50% in this country. So the administration, Donald Trump himself, really listened carefully to Ford as we made our way through adjusting these new tariffs. And that was a proclamation we saw last week where we would moderate our tariff. We still have a tariff net, but this is a much more reasonable level, and certainly it rewards us as the most American car company, and you can see our tariff has been cut in half, basically. Now, we still have more work to do, but we're very thankful to the administration for the adjustments they made as we made our way through all this after the bilateral trade agreements with Japan, for example.
What conversations are you having with dealers right now, Jim, particularly when it comes to consumer capacity to spend, particularly given how high that we've seen, at least just general prices across the board, not just on Fords, but overall with regards to car prices?
The number one thing on dealers' mind and consumers' minds, of course, is affordability. We make America's best-selling vehicle, the F-150, for 47 years now, and that's what's on the mind of everyone now in the U.S. We're starting to see payments go out another full year to 7 or 8 year financing. It's not in Ford's captive, but some of the third-party finance companies are starting to see more stress on repossessions. That's not the case at Ford. We tend to have the highest-end customers because of our prices, but that's on everyone's mind right now and a key focus for us.
That was part of my conversation with Ford CEO Jim Farley. Be sure to tune in to my podcast, Hot Pursuit, your weekly listen for car lovers. You can find it on Bloomberg Radio, Apple Podcasts, and Spotify, or wherever you get your podcasts. You've got to search Bloomberg Hot Pursuit, because I found if you just search Hot Pursuit, there's other stuff out there, and it's not the same.
Inferior, I'm sure.
Yeah, you know it's a Dukes of Hazzard reference.
Yeah, I
Roscoe P. Coltrane.
Right, got it.
Okay.
Okay, coming up on the show, from costly compliance to constant scrutiny, Wall Street Week dives into why some of today's biggest companies are avoiding Wall Street, at least for now. That's coming up next.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
In case you missed it, on Bloomberg Tech Europe.
Well, I would argue that our odds are pretty good at winning a big market share. But of course, some incumbents will manage to reinvent themselves, right? I think Jamie is on to something really exciting. He's trying to do it now. Solomon was trying with Goldman Sachs, but then kind of Marcus, was thrown out when the fintech valuations dropped down. A lot of banks stopped their aspirations in fintech, and now they're waking up to that fintech never died.
Don't miss Bloomberg Tech Europe every month.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Time for our Wall Street Week conversation. And today, there are over 1,400 private companies reaching valuations of $1 billion or more. David Weston explores the reluctance to rush into public markets and what it means for investors.
I have several friends who are CEOs of public companies. You know, the worst part of their life is the week before earnings day or the week after earnings day. You know, it's incredibly painful, expensive to have a public company.
Jonathan Foster is president and CEO of Angelus Wealth Management, advising high net worth individuals on their investments.
There's not a public company alive that doesn't pay at least $5 million and up for being public, and that would be for a microcap, right? So you imagine what the large companies are paying, and the scrutiny that you have from the public market.
It's not just the cost and hassle that can discourage growth companies from going public. Gordon Phillips is a professor at Dartmouth's Tuck School of Business who has studied the reasons behind the decision to stay private.
When you go public, you release a lot of information, so there's sometimes proprietary information that you don't want to convey.
Does that drive the impetus to stay private longer, in part because you can't necessarily patent the relationship between what you know and what the capital provides?
Right, I think it does. I think then you're waiting, David, to go public until you've established a brand name that's well recognized. You can think of Uber and Lyft. They wanted to wait to go public until there was enough consumers signed up.
And then there's perhaps the biggest reason that large, successful tech companies stay private for longer, simply because they can.
One of the reasons is because of the availability of private capital and the venture capital money and growth equity money that's available. So there's tons of money, so you can get a lot of money from private capital. You don't need to go to the public market as quickly.
But not all private companies are created equal, and most of them are certainly not unicorns.
They're not your typical private company. I think when most people, and regulators and others historically, have thought of private companies, they've historically thought of a family company or a small business or something along those lines. The companies that you're talking about are nothing like that. Those are real companies that are operating on a global scale.
Sarah Cohan Williamson is the CEO of FCLT Global and author of the new book, The CEO's Guide to the Investment Galaxy.
What's interesting about private markets is that the ultimate owner sets the price. So if you think about in private markets, who actually, if a company goes private, for example, whoever pays for that sort of sets the price, and then that's what the price is. In public markets, the marginal trader sets the price. So the price changes every day, every minute, perhaps. And so I think that one of the really important differences is how good are the valuations on different sides. And so you mentioned some of the companies that are valued very highly. And those may be very accurate valuations, but a lot of times the difference is between a mark and an actual trade.
That was David Weston with the Wall Street Week on private versus public companies. You can catch Wall Street Week every Friday at 6 p.m. New York time. Coming up, we'll set you up for the trading week ahead as stocks hit record highs again. Michael Ball joins us from the MLive team. This is Bloomberg Open Interest.
up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Conan in Paris, and this is Bloomberg.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. In case you missed it on Bloomberg Tech Asia. I'm in a Nissan Ariya with the latest ProPilot system developed with Wave's AI technology. Bloomberg NEF says we'll see a robotaxi fleet about 6 million strong on the roads by the next decade. And with many of these projects scheduled to deploy across the world in the coming year, the era of robotaxis may be arriving soon to a city near you. Don't miss Bloomberg Tech Asia every month.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Let's get you set up for your trading week next week. Monday is going to kick off with another busy stretch of earnings. We'll hear from Keurig Dr. Pepper, among others. Wednesday, that is the Fed decision, plus tech earnings pick up. We get Microsoft, Alphabet, and Meta. Then on Thursday, President Trump and China's President Xi will be meeting in South Korea, and then even more tech earnings from Apple and Amazon.
All right, joining us at the desk to talk about what you need to be paying attention to, really today, but also through the weekend and into next week, Michael Ball. He is Bloomberg's macro strategist. He writes for the MLive team, which is an indispensable tool. I absolutely love to type MLIV Go and see what you guys are up to. You just published on the CPI number, which is behind, at least partially, this rally, right? And S&P PMIs. What do we know?
Yes, CPI was the Goldilocks. Came right in. It wasn't too weak, which would have probably brought growth worries out. You know, we don't want to see companies unable to pass through the cost increases we know they're getting. We also want to see the consumer showing up. So again, not being too low is actually a positive. But also, we didn't want it too hot because then we bring into question what the Fed's going to be doing in December and in 2026. PMIs, headline was good. Service side was certainly hot. But when you looked under the hood, you had some kind of stalling and hiring again. You had some margin pressures, and there was confidence problems. And that echoes some of the other PMI data we've already seen. So nothing surprising, but overall, wasn't really too buoyant. So that's probably why we saw the SPX get up to around the 6,800 level, bounce off, and then now it's kind of trending order.
Where is the event risk for this market? We were just talking about in the break how the market didn't see a lot for this today, the data coming in. But next week you have all those tech earnings, and then you also have the meeting between President Xi and Trump.
Yeah, again, next week is the real earnings show, as we all know. We have to see if this AI CapEx story continues, and I think a lot of people are already on top of that. With what we've already seen from TSMC, ASML, Samsung, everyone basically except for Texas Instrument, pretty good stories. Intel clearly today having a good one. I think the big thing, as we all know, is the U.S.-China Xi-Trump meeting has to be smooth. It doesn't necessarily have to be great. It just has to pass without any sort of real catalyst that would bring trade war problems again.
But it's funny that this market will rally if Trump gets Xi to buy soybeans and Trump gets Xi to sell us rare earths. Because before Trump, they did buy soybeans and they did sell us rare earths. So is there any forward motion there?
Yeah, Trump's sort of losing the farmers, which has been interesting with the Argentina story and obviously with the beef stuff. Now he needs to sort of make up for that by allowing, exports to continue back to China, and China's been very tactical with that. I think it's not tit for tat. We certainly need the rare earths more than China needs soybeans, so it's going to be interesting to see how this plays out.
It has a feeling of doing a lot of work, literally just to stand still. Michael, thank you so much for joining us this morning. That is Bloomberg's Michael Ball. All right, that's it for your Friday show, but a stack show coming up on Monday.
Yeah, we do. RBC strategist Lori Calvasina joins us. We love her. Genco CEO John Wobensmith joins us. We'll get a great read from him on shipping and talk a little bit about that aspect of U.S. trade, China trade as well. This is Open Interest.
bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Intel returns to profitability and gives an upbeat revenue forecast. Are the chip makers' comeback efforts working?
Plus, banks are preparing to launch a $38 billion debt offering to help fund data centers tied to Oracle. It's a record for AI infrastructure.
And Mistral's CEO Arthur Mensch joins us on the company's release of a new platform to help enterprise clients make customizable AI tools.
An important private market conversation. We get back to the public markets to end this week. We are at a new record high. When you're looking at the S&P, when you're looking at the Nasdaq, we're up 2% over the course of the last 5 days, but a real tick higher on the day, Ed. The macro picture, the inflation, cooler than many had worried about, and indeed that gives the Fed room to run when it comes to maybe some more cuts that the market had already been pricing in. We've got China, US, we've got plenty to be digesting, and you're looking at earnings.
Yeah, in the earnings context, Intel's post-earnings rally has basically completely faded. A gain of more than 7% is now less than 1%, but profitable for the first time in a long time on a net income basis. The PC market was better than they expected. They're making some progress in server, even a little bit in foundry. The issue is that the quarter was all about getting money from anyone they could, clearing some of the debt, and there's still a lot of unknowns about how far there's left to go on this turnaround plan. Karen?
Yeah, let's get about where some of the holes are still left on Intel. Kunjan Sabani is with us, Bloomberg Intelligence Senior Analyst covering semiconductors. And we are still left with a lot to chew on, because clearly PC doing a bit better, maybe even CPUs getting into those data centers. But what about the next iteration of fabrication of chips?
Yeah, and this result shows the first sign in the right direction, sort of a turnaround, a beginning of a turnaround. The gross margin headwinds, like you said, the challenges are not gone away, but what they showed yesterday, where they are running, their demand is running ahead of the supply, which it will be for the first half 26. There were structural gross margin improvements, though we will not see a gross margin expansion next year, primarily due to the new 18A coming on, the exit from the Altera business, which was their highest gross margin business. But structurally, when you peel the onion, we like what they're doing. Most of the 18A will be moving from Oregon to Arizona, which is a better cost structure fab to begin with. A lot more volume will be coming back to Intel's foundries, which is better for them. As they go through the initial transition cost and the revenue scale, which it is showing from the higher demand in PC and data center, improves, slowly, structurally, the overall gross margins should start to creep up.
I don't know what happened, Kunjan, but in the time you've been speaking, Intel's now flat and eliminated all of its gain of the day. And I'm not saying that's your fault. I'm just making the observation. Look, when I spoke to the CFO, Dave Zinsner, on the phone, he was a bit surprised by some of the end markets that they're reliant on the product side. Servers in particular. The basic argument they're making is the hyperscalers have suddenly realized that you have to, at some point, update your CPUs. You have to invest in them. And so now they're saying that actually on a year-on-year basis, they'll see unit growth. What did you make of that?
That is a very credible story to believe in. We have seen signs of this in other markets. For example, the storage server market has been seeing a big demand when it comes to HDD. So when you think about every time when we are pinging something like a Copilot, it's going and clearing or analyzing data which was sitting dormant for the past 6 months. So the storage servers were not really using them. Suddenly now we are pinging them 4 to 5 times. So that does, it is a credible story to believe that the need for CPU, even outside AI servers, is going to increase now as we involve more and more AI in our workday.
Kunjan Sabani of Bloomberg Intelligence. Later in the show, we'll get more on Intel from the sell side. Meanwhile, banks are reportedly preparing a $38 billion debt offering for data centers tied to Oracle. Sources say the deal could launch as soon as Monday, with JP Morgan and MUFG among the lead banks. Here to discuss, Bloomberg Intelligence senior tech analyst Anurag Rana. There's a key point of clarification here that Caroline made to the team earlier in the chat, and it's not Oracle taking on this debt. It's Vantage, the developer, who will do the project. Even so, when you see a news piece like that about that level of debt supporting the build-out in infrastructure, what is your reaction to it?
No, that's a very good point. And in fact, I had a very good conversation with our credit analyst, Rob Schiffman, and we discussed this quite a bit. We have seen something like this coming from other places as well, which is when you have a contract from a particular vendor, you can create an asset-backed securitization product where the contract itself says there is revenue that's going to come in the future. So the question is whether they're going to be appetite for such large debt deals going forward as well, because I think that's critical for recognizing a lot of that RPO that's coming into revenue. Otherwise, it's going to be very difficult to convert that into sales.
This is about yield, and for the facilities related to Vantage, they're expected to come due in about 4 years. There's about 2 one-year extension options. You're getting 2.5 percentage points over benchmark, though. So people who are clamoring to get exposure to the AI narrative now don't just have to do it through equity. They can do it through debt, and they can do it at a nice yield. More broadly, are we going to see these sorts of packages come in this sort of sheer scale because of the need that we've got out there at the moment?
So you have to, because I think about it. If OpenAI has signed a deal worth $300 billion with Oracle, how are you going to finance that? How are you going to convert that contract into sales? And you need data centers to come there. You need equipment. And finally, that needs to be realized. So we are expecting a lot more in the market. The question is whether the private debt market has the ability to, basically absorb this level of debt or not.
Anurag Rana of Bloomberg Intelligence. We'll see how this does get absorbed. It's coming to the market as soon as Monday. But let's just talk more broadly about what's happening in the debt markets when it comes to tech, when it's happening in the equity markets, which are actually tech outperforming in that particular area today. You've got earnings, you've got hopes on the China-US trade talks. We've got stocks hitting a record after that CPI number came in with, well, a relief that the Fed will potentially keep on cutting at the rate the market thinks. Martin Norton's with us, Chief Investment Strategist at Empower. I want to go back to what we were just talking about and the debt that's coming to the market and the absorption that's going to be happening. I'm looking at a story right now saying that the Bank of England is actually probing data center lending because they're worried about AI bubbles brewing. Is this something you're starting to hear about in the market, Marta?
Well, it's so interesting because a lot of the rationale for the, complacency around the AI trade has been that this is largely being funded by very well capitalized, very strong hyperscalers, and the companies are not taking on debt. They are, using what they have to extend into this space. But now, in the most, recent month, we are beginning to see more debt issuance. And I think when you think about the scale of investment and the ratio of CapEx to revenue that we're seeing even at the hyperscalers, it does argue that we're going to have to use a broader range of financing to meet some of the targets that we have. And of course, that's the signal that folks are looking for, that there is an AI bubble. Now, I think there's a real difference between extreme valuations, which is where I think we are, and an AI bubble. I think the sentiment has to get more aggressive. I think we would have to see far more debt issuance. I think or kind of wildness around it.
We're getting a few hits to the line, Marta. We need more compute going. I'm interested in, look, $5 trillion is what the spending's likely to be up to 2030 if we're going to get the data center and compute necessary to fuel the AI viewpoint. To that end, when you're thinking about clients coming to you saying, I want exposure, I want it to be cross-asset, right, are you saying how are you talking about the diversification between equity exposure and debt exposure, corporate bonds and the like?
Well, at this point, the primary exposure to AI is still within the equity market. I think this is something that, especially for the active credit managers, it is an opportunity to vet. You can get that added yield as suggested, but I do think people want to be really cautious in terms of adding that debt. One thing that we're talking about a lot in the credit market is just how tight spreads are. And so that is we want to watch to make sure that isn't, a valuation risk within the credit market.
Marta, earnings was a factor in this market this morning. When I came to my desk, we showed Intel actually is now basically flat. Even so, in the course of a conversation we had with Intel CFO Dave Zinsner, he made for an interesting case study, which is that he said they had been very cautious about tariffs, but the impact wasn't there in the end. And actually, in the PC segment on which they depend, shipments were very strong, stronger than they had anticipated. Just as a case study, you know, that's really interesting data to me. What do you make of it?
I mean, it's totally interesting, and it really echoes what we've seen over the course of 2025, which is this sea change in trade policy, and yet really no discernible effect from either an earnings perspective or from an inflation perspective. Our emphasis over this period has been expecting to see some hit to earnings, less concern on the inflation front. And I think one thing that we're really learning over this process is that you can see a sea change in policy and yet not necessarily see the impact immediately. I think the concern I would raise to investors is just because you don't see an immediate impact doesn't mean there isn't an impact. When we look at the long-term implications of globalization on earnings, it has been a real positive for the U.S. and globally. And so as we roll that back, it stands to reason that it is a headwind, maybe a headwind that we can overcome, but a headwind nevertheless.
Marta, please respond to what is one of the top news stories of the day. President Trump says he's halted trade talks with Canada because of an advertisement that they ran citing a Reagan-era comment. You're aware of it. In response, Mark Carney says that trade talks were making progress before the president's post on Truth Social. Again, as a case study of trade and policy in this market, your reaction to it?
Well, I guess I would say that trade talks are the toddler that just won't go to bed. I don't think this story is really over yet. I mean, we have a lot of certainty, I guess, in terms of the overall effective tariff rate, but the fine details of what those trade talks look like, yes, with Canada, but also, of course, there's still a lot of negotiation with China. So I think this is something that will be this kind of lingering volatility within the market.
Marta, you have a sea of parents of young children who are just feeling that pain, that analogy really beautifully. Thank you very much. Just, I want to go back to the very start of our conversation and to say that valuations you think are extended. Where exactly and what will earnings have to vindicate? Which types of companies?
Well, when we're looking at the U.S. market broadly, really every sector from our vantage point, with one exception, is quite expensive. And when we talk about expensiveness, we're looking at sectors in deciles of valuation relative to their own history. And what we're seeing is valuations that are really in those 9th and 10th deciles. And that's when that starts to matter to prospective 3-year returns. When we look under the hood in technology, we really see it across industries. Now, that doesn't mean that these stocks can't grind higher. And if we do see upside surprise within earnings, potentially that could push the stock market even further. I think the idea here is that there's just low immunity. So if we were to get an earnings season that people expect, I think that's a lot harder to move the stock market. I will do a shout out to healthcare. This is something we've been surfacing since the summer. This is one of those areas that is more attractively priced. It has a lot of problems that it faces, but it also has, you know, the potential to benefit from something like AI. So that's one of those areas that we're looking to in this environment.
Marta Norton, Chief Investment Strategist at Empower. Thank you very much. Aclara Resources, an exploration and mining services provider, plans to build a $277 million rare earths plant in Louisiana, the first of its type in the U.S. This comes as Western nations attempt to reduce reliance on China, currently the dominant supplier. The facility will process material from Aclara's clay deposits in Brazil and Chile for magnets used in EVs and wind turbines, and construction is expected to be completed by the end of 2027. Karen.
Now coming up, so much for pet rocks, hey? JP Morgan takes another big step into the crypto world. More on that next. This is Bloomberg Tech.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
Didn't really think I had a problem.
I would isolate, self-medicate. Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
JP Morgan is set to allow clients to use Bitcoin and Ether as collateral for loans. That's according to sources. The move marks a deeper step into crypto for Wall Street. Bloomberg's digital finance reporter Emily Nicole broke the story, joins us now. I think it's really important to go through the mechanics of what we think this will work as, right? Institutional clients, what they can do as collateral, and then what the bank will do in return. Take it away.
Yes, so what we've been hearing is that JP Morgan will be allowing this by the end of this year. What the process would look like is where institutional clients come to JP Morgan with holdings of Bitcoin and Ether that they already own. That would then be transferred to a third-party custodian that JP Morgan will appoint, who will look after the crypto so the bank doesn't have to touch it themselves, and that can be used as collateral for financing that the bank can lend against.
What's really interesting is the context of JP Morgan and, shall I say, Jamie Dimon's relationship with crypto, because it was a few years ago he was calling them pet rocks, hyped up fraud, and now most recently in your story, which is a beautiful quote, talking about, I don't think we should smoke, but I defend your right to smoke. Is that why they're not going to be custodian while they're letting others like State Street, Bank of New York, Mellon, Fidelity still play that game rather than JP Morgan itself?
There's definitely a bit of a divide in terms of how banks want to touch crypto. Some, like JP Morgan, are happy for clients to touch it, but they don't necessarily want to be involved in touching it themselves. So earlier this summer, for example, this started out with JP Morgan allowing clients to use crypto ETFs as collateral. So traditional finance wrappers that they're used to touching, but it tracks the price of a cryptocurrency. This is a step further than that, but they're still not getting to the point of where they'd want to touch the crypto directly. It should be noted, though, it is pretty difficult for banks to touch crypto directly sometimes because there are rules like the Basel rules on banking that prevent them from touching crypto without having to hold an equivalent amount of capital in reserve at the same time. It can get pretty expensive unless you've got the right structures in place.
There's a lot of institutions and a lot of private individuals have a lot of crypto gains they want to be able to use as collateral. Emily Nicole, it's a great story. Thank you. Coming up, Google says it's reached another new milestone in quantum technology. It's a step that could bring the long-promised power of quantum computing closer to reality. More on that next. This is Bloomberg Tech.
Eternal life
a concept that has captivated the imagination of humans since the dawn of time. I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they're at risk of dying from the next pandemic.
What we really need in our lives is to build community. Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Google says it achieved a major milestone in quantum computing, bringing the technology's immense processing power a step closer to real-world use. The company says it ran an algorithm on its Willow quantum chip that is verifiable and 13,000 times faster than today's best supercomputers. Let's discuss with Karina Chow, Chief Operating Officer at Google Quantum AI. I think actually the best place to start is the basics of quantum computing versus accelerated or supercomputing. Because if you explain why that 13,000x performance is notable in simple terms, it gives some measure of why it's a piece of news this week.
Absolutely. Today's computers, classical computers, they use bits, right? Zeros and ones. They use that to calculate. It's useful for a number of different problems across the world. However, quantum computing is different, uses a combination of zeros and ones at the same time. That enables access to different types of problems, like the quantum echoes algorithm we announced this week.
You have brought Willow with you. You've put it in an impenetrable, safe housing and casing. There it is on the desk in front of me. I read a lot of academic papers this week, and many point out that you didn't use a scalable or fault-tolerant chip for this demo. And so the argument follows that it would be a big challenge for you to commercialize or scale out that technology. Is that a fair concern from the academic community?
That is the goal of quantum computing, to get to fault-tolerant quantum computing. Nobody is there yet. It is a long journey, but it is very exciting. We've been excited last December to announce for the first time that error correction can work. We demonstrated that with our Willow chip, and we continue on this journey, pushing the number of qubits and also bringing the errors way down.
And it's the timing now, Karina. What is it, 5 years till we get something that actually will show quantum computing being really applicable and useful in the areas of science, in the area of medicine? Why that timeline in particular?
Yeah, we are optimistic that we'll see real-world applications that are only possible on quantum computers in the next 5 years. You know, this breakthrough that we announced this week is a great milestone towards that path. We showed that quantum echoes, this algorithm, is not only 13,000 times faster on a quantum chip, but that it can be used to simulate and calculate the exact structure of a molecule. So we think this is an important step on the path.
Someone on your team won the 2025 Nobel Prize in Physics, was among the winners. You have Hartman leading the charge. We have real stellar, well, talent, but also a lot of investment. What did you make of the news, the flow that maybe the US government is there to support other smaller quantum players here in the United States? Is that important?
Yeah, we are really excited and pleased to see all of the investment, the support, the excitement about quantum computing across the board. The U.S. government has been a strong supporter and partner in this for the last many years, and we're very excited about those investments and continued partnership across the ecosystem.
Karina, you are the COO of the Quantum Group, right? And we reflected earlier in the week on the show when the headline hit the Bloomberg about this breakthrough. Actually, markets reacted. Alphabet shares moved markedly. Would you reflect a little bit on what the days that followed that were like. Did the phone ring off the hook from various parties that are interested now to know more about how they might be able to use the tech?
Yeah, for us at Google, we are really excited about all the interest that we're seeing across the board. Our mission at Google Quantum AI is to build quantum computing for otherwise unsolvable problems. I think that's why there's increasing interest with every breakthrough. People in other fields are getting excited about what can be possible, and we look forward to continuing.
So the bar has been set now for you. What is the next milestone that we should judge you by in progress?
Yeah, there's going to be continued work across the board. One really important marker of progress is continuing to push the hardware. So you can see on this Willow chip here, it says 105Q. That's 105 qubits on our Willow.
Too fast. Give the cameraman a chance to catch up. He will get it. Yeah.
All right.
Keep going.
Yes, 105 qubits. So that is great. This has been honestly cutting-edge chip. But to get to where we want to go to solve these important problems in chemistry, in physics, in material science, batteries, energy, and more, we want to get to 1 million qubits. So we're going to keep pushing the performance of our system. We're also going to keep pushing the algorithm and software development so that we can solve these problems.
What does that take, Karina? What does that take in terms of supply chain? What does that take in terms of talent? What does that take in terms of focus?
Yeah, these are all really important questions. I'll start with talent. You mentioned a Nobel Prize winner on our team. We are super proud of Michel Devereux and the entire group of teammates and body of work that's happened over the last many decades. We're super proud of our team. We've got a super talented team of engineers, technicians, research scientists, program managers, and others who are pushing the boundaries of this technology. We've got to keep bringing the best and the brightest to our team to push the performance of what is possible.
Karina Chow, it's been great speaking with you, Chief Operating Officer over at Google Quantum AI, on the back of what has been quite a week for your team. Congratulations. Now coming up, we get back to Intel's earnings and the chip makers' efforts at a comeback. From New York, from San Francisco, this is Bloomberg Tech.
In case you missed it on Balance of Power. I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their job.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short-circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
In case you missed it on the opening trade.
Rates are on hold.
I think rates being on hold is appropriate for the current period. If they tighten more, then we have to loosen later. More than a year ago, I talked about that being a policy boogie.
Yep.
And I thought that's not a good thing for monetary policymakers to do. The hold is appropriate at this point.
Avoid dancing.
Avoid dancing.
Don't miss the opening trade live every weekday.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to Bloomberg Tech. If you're just joining us, Intel and its earnings were our top story. And the stock actually has eliminated most of the gain that it had. It opened up almost 8%, is now up just half a percentage point, but trading at its highest level since April of 2024. It has returned to profitability. It saw surprising demand across PC and server, and it had some fighting talk about its place in the AI infrastructure industry, which largely was around wafer and packaging, not as exciting as GPU. But it's worth digging into the numbers, Kara.
It is, and we can do that with the perfect person. Pierre Ferragu is with us, New Street Research, Head of Global Tech Infrastructure, joining us. And look, we have seen the gains fade. What did you make of the numbers? Was there enough there to keep the share price rallying as it has been?
Yeah, so the numbers for Intel on a day like yesterday are about relatively short to near-term trend. And so the PC market has been very weak for some time, meeting actually expectations that were very high because everybody was very excited about the AI PC and things like that, which didn't really move the needle for the market. And so now what we see is a more traditional driver, like the Windows refresh cycle, helping enterprise demand. And that's great, of course. And then servers, we've seen the server market being weak for quarters and quarters, if not years, because you had so much focus on deploying like AI servers that a lot of very large players were kind of, deprioritizing the deployment of traditional servers. And now we are entering a phase of catch-up. So the near term for Intel looks good. And it reminds you that it's a good business, that there is operating leverage, that even if they've lost a lot of market share to AMD, they are still like a market leader. So that's great. But these are very surprisingly positive, but relatively short term. And that's the way I interpret the stock movement,
Yeah.
Big risk on the news flow. And then you look back and you're like, well, but at the end of the day, what does really matter for Intel? Is that really like PC demand over the next couple of years, or is that more like...
So what matters, Pierre? What matters is 14A. What matters is, are they going to be the cutting edge of the next iteration of chips? Are they going to really rival TSMC and get others than Intel's own fabrication going? What did you hear from Lip-Bu Tan and the team about that?
So I heard two things. The first one is mixed signal, which is that 18A, the manufacturing is ramping, is going to get into volumes imminently, like for the beginning of next year. But comments about the yield, so the quality of the process, are still very, very mixed. Let's face it, the yields are not good today. So early yields not being good is almost business as usual. But I think 18A's performance in terms of manufacturing performance is disappointing. And then the second piece of news that really matters the most for the long term of Intel is like more positive comments about 14A. Remember, 3 months ago, the CEO had very cautious comments, even mentioned in writing in the 10K as a possibility of not developing 14A if Intel didn't find enough customer support to do it. And now they're talking positively about 14A on the technical front, like the roadmap is progressing well. And also, I don't even want to call that like the commercial front, but more like the coalition front. This idea that if you really want Intel to be successful in manufacturing, you need more than clients. You need industrial policy. You need a coalition. You need partners that deeply engage with Intel, invest in Intel, commit to Intel to work with Intel. That's the only way the foundry is really going to do well. And honestly, on that front, it's very, very early signals, but I think they are positive.
I tried to get a sense from Intel's CFO, Dave Zinsner, when I spoke to him on the phone about that long term you were talking about? And in an AI world, his answer was quite simple. They do see opportunity in accelerators, but the foundry bit is what I was like most surprised at. He's saying that the foundry opportunity for them in AI is in wafers and packaging. That doesn't sound hugely exciting, Pierre.
Well, maybe it doesn't sound hugely exciting, but it sounds very realistic and really playing to Intel's strengths. The way I see Intel today is they have two major product franchises. One is in the PC business, x86 CPUs for PCs, and one is in server. So I'm pretty sure the management wants to maximize the value of these two franchises and concentrate on them, and it's good. You can't invent yourself, like an AI accelerator designer like 15 years down the line or 10 years down the line, and that's very reasonable. And then, yes, Intel has an edge in packaging. Intel is a strategic asset for this industry, and this is probably what management wants to build on. And I see that as maybe not as exciting as we're going to compete against NVIDIA, but very realistic and the right industrial approach, probably.
And for our audience, Pierre, I appreciate that answer because you also cover NVIDIA, right? You're able to make the comparison. On x86, I think the argument Intel were making to us was the hyperscalers have woken up a bit to the value of having the latest CPU in infrastructure. They're willing to invest and refresh on CPU. So again, for them, Intel, they would argue that it's a great opportunity for them. Do you see that opportunity?
Yes, absolutely, no doubt. And it's very, very strong. You have clients asking for it, the specifics of the x86 architecture, and the way Intel implements it is very differentiated. I've always been a great believer in the quality of the products of Intel on that front, like the ability of an Intel x86 chip to deal with very unforeseen situation in very complex workloads is excellent. And you've had so much demand for it that it actually triggers NVIDIA's move first to open up NVLink, like the high bandwidth connectivity with their GPUs, so that x86 chip can be integrated into NVIDIA systems, and a $5 billion investment in Intel, and a partnership with Intel to co-develop chips that will be optimized to get integrated into NVIDIA systems. And my read, having followed that for a few years, is that it's not just like a nice gesture from NVIDIA under political pressure or anything like that. It is a genuine, thorough, and deep interest for Intel products in the industry for that role. Now, keep things to the scale they are. Out an NVL72 server powered by x86 chips, the x86 chip is going to be single-digit percentage of the cost of the overall server, and the other 90+% will be NVIDIA.
So, Pierre, with NVIDIA's support, and we know the money's yet to come through and that'll settle in the next quarter, will that be enough to see Ohio break ground? Will we see an actual commitment, not just to co-develop, but actually to eventually fabricate on-site in the United States, not just relying on TSMC?
It's a great question. You need more than that to have like a final commitment or to claim victory, basically. In order for Intel to successfully manufacture chips in the US, packaged chips in the US for US clients, you need the money, and major progress made on that front with money from the government, from NVIDIA, from SoftBank, and I'm sure more will follow. You need also like the multi-year commitment of a coalition. So you're not going to get like the right chip in the first go with Intel. It's a dialogue that needs to last multiple years before you get to success. And last but not least, you need execution. You need Intel to come up with a 14A node that is going to show up, like progressively be unveiled and better convince and make potential adopters more confident it's going to be the right node to do something with it.
Pierre Ferragut of New Street Research, great to have you back on Bloomberg Tech. Thank you very much. Now coming up, Mistral CEO Arthur Mensch joins us to discuss the startup's new platform designed to help companies get the most out of AI. It's a big interview. We've been looking forward to this one for some time. Stay with us. This is Bloomberg Tech.
between 2010 and 2025, we have a new form of capital. Because what lives in here, ladies and gentlemen, is a machine. It's not just what's in here, but all the networked machines that are connected to this, satellites, the carbon fiber cables, the algorithms, the server farms, all that. I call this cloud capital because it lives supposedly on the cloud. It's not on the cloud, it's on Earth, and it's inside our oceans. What does this do? What does Amazon, or the Google, or the Meta algorithm do? It doesn't produce anything. What you buy on Amazon has been produced elsewhere. It hasn't been produced by Amazon. What it produces is a remarkable power to input and infuse desires and thoughts into your mind. So it's the first time we have machines that do that which once upon a time advertisers, human marketeers, orators, preachers, politicians, poets did, which is to change our mind, to modify our behavior. This is now automated. So anyone who owns concentrated quantities of cloud capital has an immense power.
Bringing you up to the minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode,
the goal is to catalyze economic development using sports and basketball in particular. And so if we are going to catalyze economic development, then we have to look at the whole ecosystem.
Premieres October 24th,
only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Today, European AI startup Mistral announced the release of a new platform to help its enterprise clients make customizable AI tools that are easy to operate throughout their businesses. Delighted to welcome Mistral's CEO, Arthur Mensch, to the program. This is a path to production, right? And the enterprise category between you, Anthropic, OpenAI, it's a fierce battle. I think let's just start by you explaining why you feel this is such a significant milestone for Mistral.
So, hello, and happy to be here. For us, we're a global company really focused on creating value for the enterprises. And we have had 3 years now of experience in doing that. And so AI Studio is basically the one-stop shop platform where you can build your AI application as a business. And so it brings everything that we need to create value in the enterprise, to create applications that belongs to the enterprises, that contains their IP, that is connected to their data, and that improves over time by leveraging the knowledge that is contained within enterprises, that is contained within employees' mind.
You are a global company. You're producing foundational models, Arthur. I wonder, though, how you compete against those that are already serving the enterprise. How is your solution different from that of Anthropic's, that of OpenAI's, that of X's and many others?
Well, I think our solution is much more integrated in that we have thought about all of the bricks that needed to be there to go from a model, which is how we started, to an application with the right front end, with the right back end, and with the right learning mechanisms. So that integration is really the reason why we've been succeeding in delivering value with enterprises. So that's one very strong area of differentiation. The other thing is that in contrast with some of our competitors, we really believe that enterprises should build their own AI, that they should own the systems, that the IP should remain their own, that the data should remain where it is and should not necessarily flow back to us. And so that approach of building a portable platform that can be deployed on-prem, that can be deployed on private cloud, combined with the vertically integrated approach of having just one platform allowing you to go from prototype to production, I think is very, very different from the approach of our competitors. And that has allowed us to make a lot of progress, in particular in the US.
Arthur, can you talk about how quickly you're able to onboard scaled enterprise customers to this? And in turn, therefore, what the capacity and compute constraints are for you in launching a new product and then trying to run workloads with clients?
Well, a good example that I can give you is what we've been doing with one of our big customers, which is a logistic company called CMA-CGM and one of the biggest shipping company in the world. And so as many other companies, they were a bit struggling with the adoption of AI. If you look at the MIT reports, they state that 95% of use cases just don't go into production. And the way we have done the work with them is we used AI Studio and we deployed our AI applied engineers, our AI applied scientists. We made them work with the business unit owners, and they realized what kind of processes could be automated end to end. And from ideating what we could automate to going into production, so from March to July, in 4 months, we were able to understand a full function to be automated, so cargo release and dispatching of release of containers to multiple customers. We're able to go from that to production that is now going at a global scale. So the way we think about it is that it takes a quarter to go from a prototype to a production. And for it to happen, you need to have the right tools. You need to have the right tools. You need to have the right experts. You need to deeply understand what AI agents can do and cannot do. You need to connect the agents to the data sources. You need to connect them to software, which is sometimes legacy. So you need to have the right interfaces, the right plumbing. That's what AI Studio can bring. You also need to have the experts. So that's why we deploy people in the companies that we work with.
Arthur, there is intense interest in Mistral as the European champion among AI labs, frontier labs. The thing we're most interested to learn about is the progress of the follow-on fundraising round that's reported you're undertaking. How much money are you seeking to raise? But beyond the money, why do you need to do a quick follow-on? What is the most pressing need for capital at the moment?
So I'm not sure we'll talk to you about the follow-on, but we are not raising money at the moment. We've just actually announced a fundraise with ASML, which is the biggest European company, and with whom we work, with whom we have a commercial agreement, where we help them make better products, automate their processes. We help connect their vertical expertise to our horizontal expertise. We make them create their own AI and deploy this AI into their systems. So that was a 1.7 billion euro raise, which makes us, we've raised around 3 billion euro in total. Yeah. And that in turn has enabled us to grow very fast and to create unique technology and to release it in particular on the open source world.
That was really interesting, this strategic investment coming from ASML. You just referenced CMA-CGM, another French-based giant. It's a global company, but it's French-based. You got work with Stellantis, you got work with BNP Paribas. What about US companies? How are you managing to penetrate here?
So we are working with multiple US companies. We're working with Cisco, for instance, which has chosen us because we allow them to deploy on private cloud, and we deploy people to work with them, in particular on the customer experience side. So that's one important customer of ours. We also work with Snowflake, deploy our technology, in particular on document processing and all of our technology to structure unstructured knowledge into to take unstructured knowledge and turn it into things that can then be crawled by AI systems. We also work, as you know, with Microsoft, which is a very important partner of ours and exposes our model on Foundry. Our models being very competitive, in particular on their cost to performance ratio. We work with AWS and GCP, and we work with multiple digital natives companies as well.
Arthur, your peers, Dario Amodei from Anthropic, Sam Altman, OpenAI, are looking increasingly to the Middle East, both for capital but compute capacity, right? This week, we broke the news of Anthropic securing 1 million TPUs with Google and GCP. That's the scale that people are talking about. Are you making those future plans for scale? Are you looking at debt markets to ensure the future of Mistral and what you want to do?
The future of artificial intelligence is very linked to infrastructure, as you know, and as a consequence of that, we have created a new business unit called Mistral Compute, which is creating digital infrastructure, GPUs in particular, in Europe, which is lacking infrastructure today. And so we've been growing that very fast, and we are acquiring multiple hundreds of megawatt capacity in the coming year to actually be able to serve our customers, to serve AI startups, to serve all of our existing customers and customers that come to us because they are looking for sovereign capacity. We also use that capacity to train our own models and to maintain our leadership on the open source front.
But with that comes the need to continue to invest. You've raised money, and is that what's being used to finance the exploration and data center build out? Because I'm looking at a headline at the moment that the Bank of England itself is really worried about a so-called AI bubble and some of the debt and the financing that's going on of data centers at the moment. Is that something that gives you pause, Arthur?
Well, we've raised equity, and we are deploying that equity to actually train models. So R&D is financed by our equity. We also have long-term contracts for our compute facilities, and with those long-term contracts, we are able to actually finance them through debt. But that's not. This is bank debt, and gives us confidence that we are not overly exposed to debt. There is a lot of investment happening on the infrastructure side today. We're really focused on creating the long-term value that will justify those investments. Because we operate with enterprises, because we go all the way to delivering value for them, to identifying their use cases, to making things that transforming what looks like magic to something that looks like money. We are not exposed to whatever may happen on overly investing on the infrastructure side. We invest on the infrastructure side in a wise way.
To help build Mistral AI Studio, Arthur Mensch, great to have you on that news today. Thank you so much, the CEO of Mistral and co-founder. Now coming up, we'll come back on the AWS shortage and outage, but it's one of the biggest in history, remember. And what could that mean for the cloud giant's future in the age of AI? This is Bloomberg Tech.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we travel to Lesotho to see how tariffs are hitting the country, making some of President Trump's branded golf shirts. The legendary Roger Penske explains how technology is transforming his trucking business, and we ask whether we should care about all those tech unicorns staying away from the public markets.
One of the reasons is because of the availability of private capital.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Amazon basically invented the cloud business, but now it's struggling. As Monday's outage shows, one of the worst outages in the cloud unit's history. Bloomberg's Amazon reporter Matt Day joins us to discuss his latest deep dive and why AWS is now perceived as trailing its rivals in AI. This week's been rough. Outage, losing some ground to GPUs, TPUs with Google. Just give me the headline of your story.
So the headline of the story is that Amazon is essentially no longer the only game in town in cloud computing. They've got real credible rivals, down to Oracle and Google. 5 years or so ago, it was only Microsoft that was knocking on the door. And then now you add on all this AI workloads, and that's not a business that Amazon rather seem to be leading in.
Just for context, though, how successful does it remain? How much market share does it still own? And what are we starting to see in terms of inroads?
So on traditional cloud, it's something like 38%, reckons Gartner. That's down from about half of the market, 5 or 6 years ago. Folks who have made inroads, there's Microsoft, there's GCP, there's Oracle, and a lot of the threat there is just some of the services that Amazon pioneered. Like those are leaning toward commodities. Other companies can offer you a similar package of goods.
Right. Matt, when we broke the story about Anthropic using TPUs, Google stock up, Amazon stock down. How have you reflected on that in the story?
Also, you really can't overstate the importance of Anthropic to AWS. They're their marquee artificial intelligence customer. They're helping kind of co-develop Amazon's artificial intelligence chip called Trainium with them. So the fact that they now have, what really looks like a hedge or an option to go more toward Google, should they choose, should they like the tech results better, that is a real risk, or potential risk rather, for Amazon's AI business.
I have a feeling it's a story you're going to continue to dig into. It's so well read today. Thank you so much, Bloomberg's Matt Day, reflecting on the week that was for Amazon. And we reflect on the show that was, because it does it for this edition of Bloomberg Tech Ed. It was another huge, busy one, and boy, next week, full on it.
Yeah, we didn't even get to mention really in the course of today, but next week is the tech Super Bowl, right? In an earnings context, it's the biggest one. It's going to matter.
Well, is NVIDIA there? I guess not. We've got everyone else. Meta, Microsoft, Amazon, you name it. The vindication,
right.
The fundamentals. They've got a lot to check out on the podcast.
I am heading to DC for GTC with NVIDIA, so there might be some news there. Check out the pod. You know where to find it. This is Bloomberg Tech.
belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
I have a 7-year-old granddaughter And she's very smart. And I'm just wondering, is there an early decision process that Harvard has? I mean, she's very talented.
Well, David, I have to ask you, how's her pitching arm?
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Used to be, one would say, what's that got to do with the price of tea in China, when they wanted to poke holes in the relevance of something? Now, though, if you're in tune with how events around the world affect each other, it becomes clear that the current going rate of tea in China has a lot to do with a lot of things, not just tea things either, but tariffs, franchises, and IPOs. How much?
From New York City for our viewers worldwide, I'm Scarlett Fu. Bloomberg Real Yield starts right now. Coming up, the long-awaited and long-delayed September CPI report was benign, showing inflation at the slowest pace in 3 months, offering a path for the Federal Reserve to cut interest rates beyond next week's meeting. And some of the biggest voices on the street, they're weighing in on possible cracks in the credit market. We begin with the big issue, a softer-than-expected CPI print.
It's generally a better than expected report.
Inflationary pressures outside of, some tariff-related pass-through are pretty benign.
We're looking at this extra stale, backward-looking data.
We see downside risks to the economy. The ingredients are there for a reflation or inflation trade in 2026.
And it's not just inflation. It's inflation plus growth.
A year from now, inflation will be convincingly down into the mid to low twos.
The bias is that it's going to be kind of a run-it-hot Fed.
We should be very careful about cutting into higher inflation.
We know the Fed's going to cut interest rates.
I'm not sure that Fed rate cuts really mean a huge amount for the economy.
There's going to be some shifting in how the Fed approaches things.
We're waiting for that next shoe to drop.
So let's dig into that latest inflation number. Cooler than expected, basically across the board. The headline number rose 3% versus the expected 3.1%. And that's the case for the core number, too, which backs out food and energy costs. When you compare it to the prior month, we saw consumer prices rising 0.3%, while when you back out food and energy, again, core, they gained 0.2%. Better than expected. This inflation print have given traders the green light to cement their expectations for 2 more quarter-point cuts this year. Traders have also slightly shifted their timing for additional reductions in 2026. They're now expecting nearly 4 by June. Former Fed Governor Betsy Duke warns that the central bank should stay cautious.
The Fed would be well served to be very cautious in this environment. You might see dissents on both sides at this meeting. The reason I say that is because this meeting sets a pattern. So if your pattern is quarter point every meeting, that's hardly a cautious pattern in my mind. If you start setting up an expectation for more and more cuts, at some point, the majority of the Fed voters are going to feel uncomfortable with that pace, and then it's going to appear to be a hawkish turn.
All right, let's get into all of this now with Kathy Jones. She is Chief Fixed Income Strategist for Schwab Center for Financial Research. Kathy, good to speak with you. So this inflation report, as we've been saying, cements a rate cut for next week. But you marry that with the University of Michigan report, which paints a pretty different picture of an anxious, maybe even stressed consumer. Sentiment falling to a 5-month low. Inflation, from the consumer's perspective, seen rising 4.6% over the next year. How does the bond market reconcile this contrast?
I think it's a dilemma for the bond market, maybe more than is reflected in today's price action. But I think it's good to remember that inflation, although this print came in a little below expectations, is still pretty elevated. well above the 2% target that the Fed is looking for, and nominal growth is still pretty sturdy. So if you put those two together, I'm not sure the case for cutting makes a lot of sense. Yet on the other hand, consumers still have expectations that inflation's not going to 2% anytime soon. You could debate, which side of the fence you're on politically in terms of your expectations, but very little indication that the consensus is in aggregate that it's going back to 2% soon. So you really have kind of a situation, I think, where the doves can get their rate cut this next meeting, but after that, I think the battle between the hawks and the doves is going to be interesting to watch, because there's a number of people at the Fed now who've already expressed concern that they're cutting into higher inflation and elevated inflation expectations.
And furthering that idea, the White House has now warned that there won't be an October CPI report either. So we're missing that part of the picture, in addition to the fact that we haven't had any official jobs data either. So is a December cut less of a certainty now? You sound like you're not convinced.
Yeah, I'm not convinced. Of course, I don't have a vote, so it's not me. My opinion is I don't think the case is compelling for another rate cut after this next one. They've sort of already signaled that the next one will be a cut. But, as we go forward, you think about, well, what is the Fed trying to do with lower interest rates, right, to stimulate economic activity, to help the job market? And yet, what we're seeing is, it's not financing costs, it's not interest rates that are really holding back the economy. Maybe you could argue it's holding back the housing market, but there's also a supply-demand dynamic there that is at work. But you say, well, what's the purpose of lowering interest rates here, other than signaling that the Fed is concerned about the weakness in the job market? Financial conditions very easy. No one's having trouble accessing finance. So it's not a strong and compelling case when inflation is still elevated and nominal growth is still reasonably sturdy.
You had mentioned that the economy is doing fairly well. I wonder if AI spending, investment is making the economy look better than it actually is. I mean, we know that AI is where the major growth is now, but does it mask the economy's trouble spots, whether it's manufacturing, whether it's payrolls, whether it's worsening sentiment?
Yeah, all that CapEx, that's taking place right now, I think is a big driver for the higher GDP prints. And you do have this economy that's split between the haves and the have-nots. And that is, I think, we'll see slower consumer spending going forward than we might otherwise see, partly because the inflation effect is such that, from tariffs, it's just some consumer goods are getting priced out for lower income folks. Similar story, I think the shutdown of the federal government and the cessation of some of those benefits that people rely on could certainly curtail consumer spending going forward. Depends on how long that lasts and what the ultimate outcome is. So we do have this economy that is K-shaped, with certain portion of the population doing really well and CapEx driving economic growth. On the other hand, you've got basically stagnant labor market and softness at the lower end of the income spectrum. So it's a mixed bag, but generally speaking, does a Fed rate cut change that dynamic? And that's the question I think they have to ask themselves. The risk reward, does it risk just sending inflation higher and not really solving the problems that lower interest rates may not solve?
Right. I mean, the key to all of this is what happens in the labor market, and consumer spending depends on people's jobs and their sense of whether their jobs are secure. We've heard from companies, GM, for instance, saying that's going to be cutting hundreds of salaried workers as part of its profit push. What are you hearing from companies this earnings season that has you getting a little bit more of a handle on what the labor market looks like?
Yeah, what we're hearing is selective cutbacks, but not widespread cutbacks. So that it seems as if it's a continuation of the no hiring, no firing environment that we've been in. Small and medium-sized businesses are suffering more than the large companies. You know, large companies are kind of moving people around to accommodate the changing economic environment. They've been able to parse their way through the tariff business to a large degree and manage through that. But small and medium-sized companies that have, you know, much lower margins are much more affected by tariffs, by cutbacks in consumer spending that might be happening because of the federal government cutbacks. They're struggling a lot more. And, you know, when you look at the regional Fed banks and when they do their surveys of businesses, you really see that dichotomy between the smaller businesses and the larger businesses. And that's where we end up with this standoff, I think, in the economy between those that are driving economic growth and those that are just kind of managing or trying to manage through economic growth.
Yeah, very well put. Kathy, thank you so much for joining us. Kathy Jones of the Schwab Center for Financial Research. Bloomberg this week hosted a future fixed income conference where I sat down with Greg Peters, the co-CIO at PGIM Fixed Income. We discussed a lot of issues, but primarily in this part of the conversation, risk in the sovereign debt market. Take a listen.
I do think what you're seeing globally is just the sovereign debt markets ultimately crowding out corporate debt. So it hasn't happened. There's so much capital in the system right now. But, you know, you look at just spending plans across the globe, including the U.S., and there's no retrenchment, right? So, you know, take Europe as an example. So Europe has been, well, let's say Germany, for example, has been the bastion of fiscal restraint, arguably too much. But they can't afford to do that anymore, right? They have to spend on near-term, you know, energy, you know, securitization, future green initiatives to fund. You have military. Right, you have all these other things where there's a forced spending. And so I think that forced spending globally, particularly on the developed market side, will crowd out capital and credit. And that's where I think you're going to see the most dislocations and the volatility, more so than the credit markets.
So in the sovereign debt market, where do you want to be on the curve? How do you want to go about spreading your risk?
Yeah, so I'm still, you know, notwithstanding my previous comments, I'm still, you know, worried about the back end, right? So I don't want to really play the back end. I think the closer you are to central bank policy, the cleaner it is, right? The, you know, the better the correlation, the more measurable beta. You know, when you go out the curve, you're influenced by, you know, term premium, all these other things that are often outside your own control. So away from kind of the relative value stuff that we do, I like being closer to the front end as I can and kind of go out to maybe 10 years. But away from that, I think you're beholden to factors that are well outside of your control, and that just worries me intrinsically.
And that was Greg Peters of PGIM Fixed Income speaking yesterday at the Bloomberg Future of Fixed Income Conference. Coming up next on Real Yield, the auction block, where some of the biggest voices on the street weigh in on the potential cracks in the credit market. This is Real Yield on Bloomberg.
Eternal life, a concept that has captivated the imagination of humans since the dawn of time.
I'm David Rubenstein. The advances that have been made in science recently has made it possible for people to live much longer than they would have otherwise lived decades ago. With innovation exploding, it's harder than ever to know what's real and what's just hype. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life.
It is at front and center of what we're trying to resolve and understand.
Americans need to know they are at risk of dying from the next pandemic.
What we really need in our lives is to build community.
Knowledge is power. The generation before us, cancer was considered a sign of weakness, and many never talked about it.
Longevity without health is not valuable, but if you can maintain health, people are productive when they're older.
Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we travel to Lesotho to see how tariffs are hitting the country, making some of President Trump's branded golf shirts. The legendary Roger Penske explains how technology is transforming his trucking business, and we ask whether we should care about all those tech unicorns staying away from the public markets.
One of the reasons is because of the availability of private capital.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It is time now for the auction block, where we highlight the moves in debt issuance this week. Let's start with sovereign auctions. The U.S. had sales of 20-year and 5-year tips. The 20-year saw the lowest yield since September of 2024. Meanwhile, the 5-year tips yield tailed, coming in about a basis point higher than the when-issued yield. In U.S. investment grade, weekly volume of $10 billion was short of the dealer's $15 billion forecast. This will be the fourth straight weekly miss. The names that did come to market included Truist, American Express, and General Motors. And over in high yield, borrowers are staying mostly on the sidelines after that supply boom in September. Just 3 deals pricing this week. Albertsons was one of the highlights, with a boosted sale of $1.5 billion that drew orders of more than $4.5 billion. There's that consistent story of not enough supply and plenty of demand. Credit concerns remain top of mind, though, with some of Wall Street's biggest voices now weighing in. Take a listen.
Private credit's going to go bad. I do worry about one thing. I worry about those firms that don't have a driver's license, that have decided they want to get into private credit, have no way to drive, haven't passed a test or anything. And yeah, will they have problems? They could. I don't find it systemic.
These things are being sold aggressively. It's a wonderful product for people that have targeted rates of return needs, endowments, pension funds. But again, it's just something that worries me when equity rates of return are promised on credit instruments. Usually there's something you're not seeing.
It doesn't matter whether it's so-called private or credit and who the lender is. It is a full-time specialized job, day in and day out. The thing about fraud is you wonder whether it is one bad actor or it is some effect of circumstances that are stretching the company's finances and making them take risks that they otherwise should or would not do.
Let's dig into all of this with our credit roundtable. Michael Best is a high-yield portfolio manager at Barings, and Megan Robson is head of U.S. credit strategy at BNP Paribas. Clearly, a lot of prominent voices expressing some reservations now about private credit. Let's start with the public credit market. The high-yield credit spread is finally starting to widen, Megan, after some high-profile corporate collapses, fraudulent loans at regional banks. Is a slowing economy, though, especially the parts that serve lower-income consumers, kind of the bigger threat?
So, well, first of all, thank you for having me. So we're still are confident on the economy, actually. And in terms of some of this spread widening in high yield, we see it as an opportunity to add. So we have seen, following some of these headlines, investors have de-risked. It means they've reduced some of their exposure to riskier parts of the market. Spreads have widened. And the reason behind some of that de-risking, we think, is more related to the 2 bankruptcies that recently happened, some of the headlines around regional banks. The exposure in public markets to those areas we think is relatively low. So think about subprime consumer lending and auto lending, less than 2.5% of the high yield index. And so it's not an area we think can drive weakness in public markets. And actually, U.S. high yield to us looks attractive here.
Michael, what about you?
Yeah, absolutely. I think Megan brings up some great points there. It's a smaller part of our market when we're talking about some of these things that are happening. But obviously, I think it's incumbent upon investors to work with managers who are sort of picking through, the index, picking through the individual credits. I think some of the earlier guests that just came on were talking about, this is a labor-intensive business in terms of picking through these companies and sectors. But to some of Megan's points there, I think that, particularly in the auto sector, in the subprime credit space, as well as some of the AI risks that are out there, I think those are things that investors really need to roll up their sleeves and do work on and pick managers that are doing that level of work.
I wonder, though, whether in this kind of risk-on environment, you do expect to get paid more for taking risks. So even though high-yield spreads have widened a little bit, they're still pretty much near historically tight levels. Michael, what's the case for adding to high yield when investors can sit back and park their money investment grade and do well?
Yeah, well, I think in terms of the case for high yield right now, I think I agree with Megan that this spread widening event sort of creates an opportunity to add some selective exposure in some of these sectors and some of these companies that are going to be really isolated from some of this noise. So, I think that's a key aspect. I think the other key aspect to think about here is that is a much shorter duration asset class than it has been, certainly in cycles past. And when we look at the high yield bond market, for example, we're at near record lows on duration. So you're buying a lot of bonds that frankly are likely to be called in the next 2 to 3 years. And you just don't have the ability to really lose on a credit basis or certainly on any sort of duration basis with those individual securities.
In 2020, 2021, where rates were really low, rock bottom, Megan, companies went on a borrowing spree. There's now a wall of leveraged loans maturing. As lenders become more concerned about underlying assets and the state of borrowers, what's your sense of whether companies will struggle to extend or refinance this debt?
So far, they've had a very easy time refining debt. And if you think about the maturities that are due through 2026, the high yield market has already addressed the majority of those. So there is a bit of runway there. And think about issuance back in September. If issuers want to come and refi, they're able to do that and at attractive spread levels. So far, we have not seen any of the recent headlines feed into capital markets activity. And it seems to be still opportunities to refi for those that want to.
But a lot of that borrowing, Michael, moved to the private markets, which limits supply in public credit while demand remains pretty strong. So is the big picture of high yield spreads remaining, again, near those historically tight levels kind of distorted as a result?
Well, it's a little bit debatable whether or not it's distorted, but I will say that the markets have become higher quality. So a lot of the private credit market taking some share, if you will, from I'll pick on the leveraged loan asset class for a little bit in terms of where it's been taking some share. It has been on those smaller companies, those B3, B- rated credits. And again, to some of the reasons that justify tighter spreads overall is, generally speaking, the market has gone up in both quality in terms of absolute rating category, as well as gone up in quality in terms of larger, bigger scale businesses being involved. So I think that has had some impact. But I think one of the things we just frankly haven't seen to really drive supply has been large-scale leverage buyout activity. Obviously, there's one out in the market right now that's going to set some records here, but it's a much larger business, much bigger company. And, when you look at the capital structure of that business, they're also bringing correspondingly a much larger equity check than maybe we saw in 2021 during some of those sort of boom LBO years.
Yeah. Referring, of course, to Oracle here. We are in earnings season, Megan, as we wrap up this conversation, and we've already seen some regional banks deliver some surprises to the downside, especially with those fraudulent loans. Are you worried about potential triggers being revealed in any way, a reaction that might not be easy to position for?
So far, not. We've actually, we have seen some concerns, which you mentioned, but also other regionals, the higher quality regional banks, actually came out with positive results this week. We saw a few deals in the market that were received well. They were oversubscribed and with a relatively low new issue concession. So I think for the regionals, we're really watching a bearish case would be actually rate hikes, and that could cause some of the problems that we were concerned about earlier on CRE. But for now, our base case is actually for continued rate cuts, and so we think there will be continued relief to that that area.
Yeah, CRE feels like so long ago at this point. Thank you so much, Megan Robson of BNP Paribas and Michael Best of Barings. Really appreciate it. And if you can't get enough talk on credit, check out the Bloomberg Credit Edge weekly podcast on the Bloomberg Terminal and wherever you get your podcasts. Still ahead on Real Yield, the final spread the week ahead. With a Fed rate decision on deck, we go through some of the data points and events on the calendar. This is Bloomberg.
In case you missed it on Balance of Power.
I'm sure you're having a ball and you don't want this to end anytime soon, but I'm just wondering how long you think this is going to go on.
This is a very frustrating exercise for us. It's political games being played by Democrats in the Senate. They're talking about the Obamacare subsidies, for example. That's a December 31 policy issue. We were always going to negotiate that and debate it and deliberate over it in October, November. They're trying to pretend that's the issue of the day. It's not. It's a red herring. It's a distraction. They're not doing their jobs.
Would you consider a promise to bring that negotiated legislation to a floor vote, up or down? We'll make sure that happens before the end of the year.
There's a lot of conservatives who have real problems with the Obamacare subsidy. Premiums have skyrocketed since it was created in 2010. They're up like 60%. So something's not working. There's real reforms that are needed. But it's a complex issue that takes a lot of time for members on both sides of the aisle and in both chambers to negotiate. They're trying to short-circuit all that right now. That's not how this process works.
Don't miss Balance of Power live every weekday.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
I'm Scarlett Fu, and this is Bloomberg Real Yield. It is time now for the final spread. The week ahead, coming up on Sunday, we get a crucial midterm vote in Argentina that the U.S. has a financial interest in. On Monday, the ASEAN leaders hold their summit, and the Future Investment Initiative Forum takes place. Tuesday, NVIDIA holds its GTC event, and we have the APEC CEO Summit plus earnings from BNP Paribas, HSBC, as well as Visa. On Wednesday, the Fed's rate decision takes place at 2 p.m. and Chair Jay Powell speaks at 2:30 p.m. And we get earnings, a big earnings day, in fact, for Mag 7 members Meta, Alphabet, and Microsoft. Let's move ahead to Thursday, where President Trump and Chinese leader Xi Jinping are scheduled to meet in South Korea at the APEC summit. We'll look for any kind of signs of progress on trade discussions there, any kinds of announcements, all of that on the table, plus more tech earnings from the rest of the Mag 7, Apple and Amazon. And on Friday, big oil names including Exxon, Chevron, and Dominion report. This is Real Yield on Bloomberg.
When I visited Fernandez at IMAX's headquarters outside Toronto,
We went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view. As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Caroline Connon in Paris, and this is Bloomberg.
Welcome to Bloomberg Markets. I'm Scarlett Fu. Let's show you what's happening in equities right now. We have a record high in the S&P 500. It's like 2025 all over again, or at least the first part of 2025. You can see we're at 6,800, just above it. 0.9% gain here for the S&P. The Nasdaq and the Russell 2000 are doing even better. You are seeing traders pricing in 2 cuts this year from the Federal Reserve following that CPI print that was largely benign. Treasury yields fell immediately, especially at the short end of the curve, but they've given back some of that move here. You can see the 10-year almost little change at 3.99%, but below that 4%. So we're fond of round numbers. 6,800 for the S&P, just below 4% for the 10-year yield. The dollar, not doing a whole lot right now. Bloomberg Dollar Index marginally higher. Let's go back to equities, which, as I mentioned, flying high, and check in on a couple of individual equity movers with our Nora Melinda. Hi, Nora.
Hi, Scarlett. Well, it's a great day to be a shareholder at Ford. We're seeing shares of Ford surging for their best day in 3 years. This, of course, seeing shares jumping about 11% as we speak. The company boosted production of its pickup trucks and reported profit that beat expectations. This all despite the fact that there was a fire at one of the key suppliers of aluminum for its F-150 trucks. And it's not Monday, but we are seeing some M&A action right now. Looking at shares of Eli Lilly, they're in focus right now. As we look at the healthcare company, we did see some M&A action here with the company buying Adverum Biotechnologies here. We're seeing shares of Eli Lilly up about 1.1% right now when trading. This, of course, a $261 billion deal here. But also looking at what's going on within airlines. We've got our eyes on Alaska Air, of course. This stock down about 5.6% right now. And this after the company reported worse than expected third quarter results, but also it suffered from an IT outage that caused the cancellation of hundreds of flights here. We are seeing shares still down about 32% year to date, Scarlett.
All right, good stuff. Thank you so much. Bloomberg's Nora Melinda with our individual movers. Let's shift gears now and talk about Argentina, because Argentina President Javier Milei faces his biggest test yet as voters head to the polls this Sunday. Almost half the seats in Congress are up for grabs, and Milei is losing favor. That is the topic of today's Big Take. One political consultant told Bloomberg, quote, "The working class voted for him based on economic expectations that haven't been met. Milei isn't the same man he was 2 years ago." For more on this, let's bring in one of the reporters who wrote the story, Manuela Tobias with Bloomberg News in Buenos Aires. Manuela, thanks for joining us. Milei himself is not up for re-election, so tell us what's at stake here in this election.
Hey, Scarlett, it's great to be here. Yeah, so there's nearly half of Congress up for grabs this Sunday, 1/3 of the Senate and half of the House. Milei's party was founded in 2021, so there's no chance that he could get a chance at a simple majority. But investors are hoping that he gets at least 1/3 of the House of Representatives in order to defend his legislation, his decrees from being overturned, and more than that, so that he can send a message to more moderate lawmakers so that they can get on board with him and pass the reforms that Argentina needs to have longer-term growth and really deliver the promises that he made to voters 2 years ago.
What chances does Javier Milei have to secure 1/3 of the seats in the lower house?
So that securing 1/3 of the lower house with his current coalition, which is his Libertarian Party plus the pro-business party of former President Mauricio Macri, pollsters say that should be a done deal, getting 1/3 of seats in the lower house with this coalition. The question is, by how much can he surpass that mark? If he barely scrapes by, that's going to raise questions about how long that coalition stays together and whether it's able to really pass longer-term reforms. Whereas if he's able to surpass that mark by a wide margin,